Here, I would imagine that the CEOs who were in the room like tax cuts of any form, but what's the sentiment check when it comes to tariff hikes?
Well, and this is something that has been discussed, right? For a lot of these business leaders, it isn't necessarily, some of them it does matter a whole lot, but for a lot of them, it's important to know what the path ahead is, whether there are tariffs or no tariffs, or what the levels would be at. What they can't get comfortable with is the unpredictability. And that's the reason why Jeff Zients of the White House actually went out there and touted the fact that what you will get with another Biden administration is predictability, trying to remind that audience that back in the 2016 to 2020 timeframe, even if Trump was making a lot of business-friendly noises, you did live through a period of great chaos and confusion. And that is not the environment in which businesses feel comfortable making bold decisions or even comfortable with the path ahead. What they want to know is a certainty of what lies ahead of them for 4 years. And that is why the Biden administration right now is playing up that angle in their pitch.
All right, guys, great stuff. Really enjoyed this conversation. Our thanks to Bloomberg's Sridhar Natarajan and Laura Davison. Now, coming up, the morning calls, and later, Cameron Dawson of New Edge Wealth joins us for the opening bell. And Megan Swiber discusses Bank of America's latest FX and rates sentiment survey.
Yeah, I got to go on a break here for a minute. I got to meet up with some guys outside that are here to do some landscaping in the yard. And I'll join the chat in just a little bit.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions.
Good morning to all of you out there, too.
PAPI, the symbol of alternative income.
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
Recipes. Recipes that are more than their ingredients. Recipes written by hand and lost to time can now be analyzed and restored using the power of Dell AI, preserving memories and helping to write new ones.
Building a home for the people
5
who
minutes
are
time
worth
at the
it.
bottom of the hour, expecting possible
Stepping
comments from ECB Schnabel.
throwing
In
in
10
a
minutes
line,
time at 9:35 a.m.
dropping the
Eastern time,
tailgate for a
possible
picnic,
comments from ECB's
and
Kazakhs
finding
as well.
far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories, and bring your truck to life. Real truck.
All right, it's time now for morning calls. A look at some of the analysts' recommendations on Wall Street this morning. And first up, JP Morgan raising Adobe to overweight. The firm sees, quote, smoother sailing ahead on new product and pricing tailwinds, as well as generative AI monetization. Next up, Evercore upgrading Shopify to outperform, saying that the recent pullback in the stock has created an attractive entry point to own a, quote, best-in-class e-commerce platform business. And finally, we have Morgan Stanley cutting Twilio to equal weight. The firm sees limited growth catalysts in the near to medium term for the communication software company. Now, coming up, we're going to be speaking to Cameron Dawson of New Edge Wealth at the opening bell. That conversation coming up next.
Heading for the disinflation path, but it will be bumpy.
Boom, internet. That's why I'm chief technology officer.
But all you did was plug it in. You didn't do anything.
Neither did you.
And get our special offer of financial for a year's worth of our service for the price of 1 month and save 92%.
So keep in mind, ECB is the guard currently speaking to reporters in Croatia.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
ECB's guard says unless we have a major shock or downside risk materializes, the target is for inflation to hit 2% in the second half of next year.
Does that ARC investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARC. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
This is the countdown to the open. I'm Katie Greifeld. We are moments away from the start of trading and that opening bell. You can see right now in the futures that the S&P 500 down on the day. Of course, the NASDAQ 100, your big tech stocks, the outperformer down about 0.1%, though. Small caps, the biggest loser today. The Russell 2000 off by about 1.3%. Let's take a look at the cross-market action right now. We have dollar strength on the menu. You can see that the Euro-USD pair weakening right now. The euro trading at 106 versus the dollar. Of course, that dollar strength has been hard to stop. You take a look at the bond market. We still have a rally on our hands, only down about 2-3 basis points or so. Of course, we've had a very fierce drop in yield, so cooling off a little bit on this Friday, and crude up marginally as well. Now, one stock to watch at the open, Adobe. Shares set for their biggest gain in about 4 years after getting caught in the AI wave. Joining us now is Bloomberg's Abigail Doolittle.
It's all about that AI mentioned for sure, Katie. And as you mentioned, the best day since March of 2020. That's the degree of buying power that we're seeing, that after that big sell-off in March and then that big move higher, that's what's happening here for Adobe. Now into today, out of the December lows, down more than 30%. So investors trying to chip away at that a little bit, and it has to do with that AI, a little more certainty here. They did beat estimates for both top and bottom line estimates for the quarter that had been reported. Their new bookings, their comments around their digital media units, that is what is suggesting that the generative AI tools are seeing some meaningful adoption. Not surprisingly, the street is positive, and one acts on pretty much any stock that he covers. Mark Murphy over at JP Morgan, he has raised his rating to an overweight from a neutral, new price target of $580 per share, suggesting that there is some meaningful upside. And the upgrade has to do with, quote unquote, smoother sailing ahead on new product and pricing tailwinds, generative AI monetization, and that the monetization could start to gradually build in the second half and into next year. So basically, more certainty, more stability, and a better ability to see what the numbers are are like ahead. These shares up sharply in the pre-market, Katie.
Yeah, it's amazing. They're still down about 11% year to date, even with this pop, but maybe that'll change soon. Abigail Doolittle, thank you so much. Let's turn now to Tesla, because Elon Musk's $56 billion pay deal and a proposal to move Tesla's legal home to Texas won investor approval. Bloomberg's global autos editor Craig Trudell joins us now, and it seems like shareholders, at least traders, are taking this as good news.
Yeah, I think it lifts a big sort of cloud that was hanging over the stock. There weren't serious doubts that Musk was going to run into trouble with getting this signed off on, particularly with all the efforts that he was putting in, that his board was putting in. They really pulled out all the stops, but we did see a slight slip in approval for this relative to when shareholders first voted on it in 2018. The concern here, of course, was that Musk early this year referred to the idea that maybe he would want to take AI and robotics work elsewhere unless he had enough of a stake in Tesla that he feels comfortable with. This won't necessarily guarantee that he gets the stock options that were laid out for him 6 years ago, but it does bolster potentially Tesla's appeal and efforts to sort of undo the Delaware judge voiding his pay package months ago.
And maybe this will bring some of his focus back to Tesla. And Craig, not to put you on the stock here, is a refocused Elon Musk good news for Tesla?
I mean, I do think that it at least came across last night that he was very interested in speaking of robots, building that business within Tesla. That was one of the things that he talked about quite a bit. The car business, on the other hand, he wasn't really talking a whole lot about it. If anything, he was kind of putting some emphasis on, in his words, it being tough sledding out there. And so, robots up, cars down within Tesla.
All right, robots up, cars down. Craig Trudell, thank you so much. And finally, let's turn to luxury retailer RH, tumbling after reporting a heavier than expected first quarter loss. Joining us now with more is Bloomberg's Simone Foxman.
Yeah, Katie, shares are down the most on an intraday basis since December. And the CEO, Gary Friedman, really blaming a bad housing market. Most challenging housing market, he said, in 3 decades. And he said that sales really softened for them as we saw mortgage rates tick back above 7% in the first quarter. The numbers clearly reflect that. Adjusted loss per share, 40 cents. The estimate had been 9 cents. Margins shy of estimate, though revenue roughly in line. And they kept their targets, interestingly, for the fiscal year, targeting growth in the range of 12 to 14% and revenue growth 8 to 10%. A lot of analysts, including Bloomberg Intelligence, think that may actually be pretty challenging to do. Yet, the CEO did highlight signs of positivity. They said they saw a bit of a demand inflection point in the first quarter. They also note that online retailers of luxury furniture have actually ceased operations, and that may improve their on the competitive front. Citi, which has a buy rating on this stock, said it's disappointing but not game-changing. The market, however, not enthused by what they saw from RH.
Yeah, there's a lot of disappointment in those shares this morning, currently down about 14%. Bloomberg Simone Foxman, thank you so much. Meanwhile, Cameron Dawson, New Edge Wealth CIO, weighing in on markets, writing, quote, "We think the right mantra is respect the trend," but noting that the trend could change quickly if growth forecasts begin to deteriorate for 2025 EPS or 2024 GDP. I'm pleased to say that Cameron joins me now on set. It's good to see you in person.
Good to see you.
So let's talk about what respecting the trend looks like in this market, because to me, that just sounds like being bullish on big tech.
It is being bullish on big tech just because that's where the momentum is. That's where the trend is so powerfully upward. To your point is that other sectors have really deteriorated. Look at industrials, materials, financials, energy, all areas that people had hoped would have that broadening out trade. They've given up all of their relative outperformance over the last month and a half, and you've seen a lot of absolute trend deterioration, which just means that where the momentum is it is extraordinarily narrow, but it's hard to fight.
And so when you think about those other areas of the market, the concept that I've been turning over is whether, when we think about the performance coming back together, whether it will be a catch up for some of those other areas or a catch down for tech.
The bullish outlook would be that it would be a catch-up, and we think that really relies on earnings, where we need to see earnings revisions turn better for those sectors. They've been relatively flat, and one of the reasons why tech has done better is because it's been one of the few areas in the market that have had earnings revised higher. So it all comes down to earnings. When we think about it from an aggregate basis, we look at 2025 earnings, they do look pretty high. They're sitting at $278 a share. That's 13% earnings growth next year. So that's what we're really watching for as we go into the back half of the year, whether or not that earnings number starts to get revised lower.
So that's the thing to watch when it comes to the earnings picture. Let's talk about the economic picture, though, because you mentioned, of course, GDP and maybe some of those projections coming down. And you think about some of the data that we saw this week, and you could get to a little bit concerned that maybe we're starting to see the beginnings of a growth rollover. Where do you fall?
Well, we have seen those economic surprises turn down pretty significantly over the last month and a half as well. They're actually at their lowest level since 2022, when you were aggressively cutting GDP forecasts, and yet GDP forecasts have been, through this last month or so, been relatively stable. So what we're watching for is to see if there's mounting evidence that growth is going to come in less than expected. As of yet, analysts haven't revised their forecasts. Next week, we're watching retail sales really closely. We think that's the one to even judge the jobs market. If retail sales stay strong, it means that people are likely employed, meaning we probably can trust that employment survey versus the weak household survey.
So retail sales, of course, very important, especially after that strangely blockbuster jobs print that we got last week. I mean, how did you take that?
There was so much statistical mess in it. You could look at the employment survey and say, we can't believe the number because it was all the birth and death model. But then you could look at the household survey and say, maybe we shouldn't believe that number because all of the job losses came from the 16 to 24 age range, which suggests that it's about summer jobs, college timing. So we think it's somewhere in between. Your Bloomberg economist, Anna Wong, has an estimate that it's closer to 100,000. She's been spot on, and I think that that's likely where we land, which is that somewhere in between those numbers, close to 100,000. Importantly, that's the Fed's estimate of a neutral employment market as well, which means that there's really no pressure for them to move one way or another if we do get that 100,000 in reality.
And does it matter? I mean, I was just having this conversation with Jay Pulaski, and he made the point, like you did, that it's all about earnings here. But you think about the trajectory of monetary policy. Could that upset the apple cart?
Well, it certainly has upset the apple cart for smaller cap companies and higher leverage companies. You see those earnings revisions continue to move lower. They're down in the high teens over the last year, simply because higher rates are weighing on their earnings generation capacity. For large cap companies, and mostly those big mega cap tech names, higher for longer is great for them. They earn a lot more in their cash. They don't have a big increase in interest payments. So it really is a world of haves and have-nots when it comes to how Fed policy impacts earnings.
And so good news for those big cap tech stocks. It feels like in any environment that they're going to do pretty well. But who needs rate cuts? A lot of people have told me it's the small cap companies that really need some relief here. How are you feeling about that tier of the market?
Well, small cap companies have 40% of their debt that's floating rate, and they have about, in aggregate, 50% more debt than what we see in overall large cap companies. So small caps really need rate cuts. You can see that by looking at last year's performance. Look back to November and December. Small caps rallied by 30% because the 10-year Treasury fell by 100 basis points. So it is absolutely necessary for small caps to outperform for there to be relief in rates. The big question is, why would you be getting relief in rates? Because if you're seeing falling rates because the economy is weakening, remember that small cap companies are also very cyclical. They have a high degree of unprofitability. Nearly 30% of small cap companies are unprofitable today, which means that if the economy weakens, maybe you get not just balance sheet pressure, but also income statement pressure.
And when I think about small caps, I often think about them and compare them to, for example, high yield debt and some of those riskier credit components. How are you thinking about the credit market right now, of course, with this backup over the past few years that we've seen in yields?
Well, it is priced for perfection when it comes to spreads. If we look at credit spreads, they're not quite at the level of 2021 tights, but they're getting close to it. Now, overall, all-in yields are still very high because base rates are high. This is what has led demand for high yield and investment grade debt, even though spreads have been tight. So the question is, if you start questioning that growth outlook, do you see spreads widen out pretty materially? And I think that would be the risk for credit investors, mostly as we move into 2025.
All right, Cameron, it's always great to speak with you, especially on a Friday. Have a great weekend when you get there. Our thanks, of course, to Cameron Dawson, New Edge Wealth CIO. Now, coming up, we'll take a look at Bank of America's latest FX and rates sentiment survey with Megan Swiber, Bank of America Director of U.S. Rate Strategy. This is Bloomberg.
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Trains. Trains that use the power of Dell AI and Intel, clearing the way so you arrive exactly where you belong.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Deal.
The deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The top names at the Fed are on Bloomberg.
The way I look at it is, we have a restrictive monetary policy in place. It has shown up in terms of moderating the labor markets. They're becoming better balanced.
I do think that our new steady state is likely to be higher than what people have known over the last decade. I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there.
Nobody covers the Fed like Bloomberg. Context changes everything.
Well, Bank of America out with its latest FX and rates sentiment survey, writing, quote, last month flagged dip buying we did not see in practice. Duration was sold on the back of NFP, inflation fears, and politics. Joining us now is Megan Swiber, Bank of America Director of U.S. Rate Strategy. And that is so interesting because you take a look at what long end yields have done, and they've come straight down. Yes. Why are people just not enthused about duration?
So what we see from this story from our survey, and this is, again, long-only investors. So when we're thinking about who's buying in the rates market, you can still see very notable inflows into fixed income funds. That's a key here in terms of who's buying in the rates market. But what we see from this survey is that investors are just taking on a much more neutral stance on duration. Just not a lot of confidence here, which makes sense, especially when we look at this context of the huge rate move that we've observed in this past week. Maybe a bit of a feeling of the market having this motion sickness given the huge trading range that we've seen in the 10-year yield. environment.
And so what are you telling your clients, for example, though, when it comes to how they should be thinking about duration? They're neutral right now, but we're at, 4.2% on the 10-year. I remember when we were not too long ago, close to 5%.
Exactly. So it's just been this huge rate move, Katie. And our story on duration, how we've been advising clients on this really hasn't changed much since the start of the year. Looking to trade this range between 4 and 450 in 10s, looking to add duration when we're closer to that 5% level, above 450, and lighten up when we're at the bottom of that range. We are exactly at our forecasts for Q2 on 10-year yield, so not a strong amount of conviction and direction. But what we've seen from rates markets over the past week is really this sentiment of inflation coming back down, disinflation, which is so important for the bond market. When the bond market's not worried about upside inflation risk anymore, this does encourage a lot of buying of rates. And we usually see that rates protect you in these risk-off environments that we're seeing play out in global rates this morning.
Well, you think about what we're all competing with, and that's cash. And that's cash yields at 5%. Exactly. And I hear what you're saying about that buffer from duration, but cash also looks pretty good.
That's exactly right, Katie. And so what we've been observing is a lot of that investor demand coming into the U.S. rates market, but more of that concentrated likely in the front end and belly of the curve. Back end, we've seen that demand picture a little bit more challenged. We see a lot of the pension and insurance companies that want to be taking advantage of these high rate levels, but it's a different story. But again, when we come back to the crux of how we think about rates over longer term cycles, we have the rates market trading a much higher long-run neutral rate than what the Fed is telling us in their dot plot. So there is value there if you're worried about some of these downside states of the world and downside states of the U.S. economy.
So no one necessarily wants to take it right now, but there is an opportunity when it comes to the longer end of the yield curve. But this is the rates and FX sentiment survey. So let's talk a little bit about currencies here, because the dollar just feels like it's been unstoppable. How is that filtering through?
So what we're seeing, Katie, is just also similarly a moderation in some of the conviction we have in FX markets as well. You know, consistent with the very notable swings that we've seen in U.S. rates, there's been more of this paring back of the dollar longs that we had investors sitting in. Right now, I think there's actually more of this growing narrative speaking to clients of looking at more of this dollar depreciation pressure, especially in light of a Fed that's looking to cut and investors looking at rate levels and saying there may be more room for us to rally from here.
Well, I have to imagine you have to pick your spots when it comes to potential dollar depreciation. And I obviously want to talk about the yen here because it feels like nothing can really seem to stop the yen when it comes to that weakening trend.
Yeah, you know, Katie, I would say that when we look at duration positioning globally, while a lot of investors are close to home and close to benchmark, yen and yen rates is really one area that we see investors taking on much more notable positioning. So still, we see year-to-date multi-year lows actually in terms of how underweight investors are JGBs versus their benchmark. So when we think about the BOJ this morning kind of reigning in this narrative of reducing the bond buying purchases at the back end, I think this is one of the factors that may be contributing to this rates rally that we see is just that very stretched short positioning that we have in JGBs.
Yeah, and you take a look at where the yen is trading right now, 157 versus the dollar, just really nosebleed
at 10
levels
a.m.
here.
Eastern
Let's
time,
talk about some fun stuff. Let's talk about election risk. Obviously, we got a big reminder of what that looks like when you think about India, Mexico, South Africa, and of course, France. Is there anything that investors can extrapolate from those episodes into the U.S. election?
So with a range of
interestingly, when we look at the survey, we asked this question to investors: are you trading U.S. election right now? And it seems like the resounding answer is no. We're not up to that yet. We still have to pay a lot of attention to what we're seeing in terms of global elections, and really markets looking to trade and focus on the very near-term data prints. So what we're seeing, you know, on back of the French election, a lot of the risk-off move that we're seeing this morning is concerns about what the fiscal picture looks like. Certainly that's been a concern for investors in the U.S. when we think about the extension of Trump tax cuts, what that may mean for the deficit. But largely, it's very interesting to see here, too, that this is driving more of this risk-off mentality for markets, and it's serving as more of this duration rally in U.S. rates markets particularly. So I think it's a very conflicting signal. I think people don't have a lot of conviction in directionally what this means for U.S. rates in terms of trading U.S. election, which is just another reason why people are very hesitant to trade this theme in the U.S. just yet.
Yeah, maybe it'll become more clear, of course, as we get closer to November. I only have about 30 seconds left with you, but you think about the totality of this survey. What did respondents see as the biggest risk?
The biggest risk here is still a Fed that's going to be slower to cut rates on the back of inflation that remains more persistent. I think that really has been the dynamic that's been driving rates markets since the start of the year. The market got caught off guard by how sticky inflation had proven to be in Q1, but now we finally are seeing some of the data reflect this moderation in services, really the last shoe to drop for the Fed. So it's a very quickly changing narrative, even since we last ran the survey.
Well, Megan, it's always great to see you. Have a great weekend. Hope to speak again soon. That, of course, is Megan Swiber, Bank of America, Director of U.S. Rate Strategy. Now, let's get some of the sector price action this morning. We're going to do that with Bloomberg's Abigail Doolittle.
We're still looking at a small decline for the S&P 500 right now, Katie, down about 0.3%. Most of the sectors are lower, so it's a broad-based decline. Industrials leading the move to the downside, down 1.3%, followed by materials, financials, energy. To the upside, communication services up a modest 0.4%, and then tech up about 0.2%. On the week, though, it's a much different story. Tech is up more than 6%. Its best week of the year. This is the S&P 500 climbs about 1.4%. Its second up week in a row. Not a lot of sectors are up on the week, but again, that big gain for tech, and a lot of it having to do with AI. Take a look at this Bloomberg AI index, up 4.2%. We also have home building with rates having dropped, up about 2.2%. On the downside, though, Katie, we're looking at energy sliding, and then luxury goods, speaking of that RH miss and the disappointing results there, down 3.3%. But overall, the bulls are out for a second week, Katie.
Yeah, nice even split on that screen. Abigail, thank you so much. Now, coming up, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
We need sustainable solutions, and the world's most innovative companies are taking up the challenge.
我认为这个趋势是不可逆的，未来新能源的发展只会越来越快。
This can only be possible if we work as an ecosystem.
What's inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton Vance High Yield ETF, you know what's inside. Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
Introducing the all-new 2024.
At 10 a.m. Eastern Time, we get our University of Michigan data. Sentiment prelim forecast 72 on the prior 69 spot 1, with a range of 75 to 65. One-year inflation prelim forecast 3.2% on the prior 3.3%.
Under surveillance with crucial data and expert analysis at terminal speed. Nobody covers
Five-year
jobs day
inflation
like
prelim
Bloomberg.
forecast 3% and prior 3%. Conditions prelim forecast 72.2 and prior 69.6.
All right, let's take a quick look at this market. The S&P 500 still in the doldrums here, down about 0.2%. I do have some good news, and that is from big tech. You can see the NASDAQ 100 made it into positive territory, up 0.2%. Can't say the same, of course, when it comes to the Russell 2000, down over 1%. It's time now, though, for the trading diary. What you need to be watching today and next week. We got U.S. UMich consumer consumer sentiment data at the top of the hour. Meanwhile, the G7 continues in Italy. On Tuesday next week, we get U.S. retail sales. On Wednesday, the markets will be closed for the Juneteenth holiday. And then on Thursday, we get that BOE rate decision, of course, following the Fed. It's going to be interesting to see what they do over in England. But this was the countdown to the open, and this is Bloomberg.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
By then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education.
1 minute remaining.
Moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Seconds.
All right, we are 30 minutes into the U.S. trading day on this Friday, June 14th. Here are the top stories we're following. A win for Elon Musk. Tesla investors vote for their CEO's $56 billion pay package, and the company's move to Texas.
5-year inflation freedom 3.1%, 3.1% higher than forecast, 3%. 1-year inflation freedom 3.3%, 3.3% higher than forecast, 3.2%. Expectations freedom 67.6, 67.6 lower than forecast, 72. Condition freedom 62.5, 62.5 lower than forecast, 72.2.
I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets on this Friday morning, and at least on the S&P 500, you're taking a little bit of a breather. Of course, we closed at another all-time high yesterday. You take a look right now, currently off by about 0.3%. Of course, we'll see how that changes as the day moves on. But let's take a look at big tech, because you're seeing a little bit of green light there. You can see the NASDAQ 100 currently higher by about 0.1%. Of course, it had been higher by a little bit more a few minutes ago, so we'll keep an eye on that. Meanwhile, the bond market rally continues to accelerate. 10-year yields currently lower by about 4 basis points. We could crack 4.2% in short order. But let's talk about some breaking consumer sentiment data crossing the terminal right now. Bloomberg's Mike McKee has the details.
Katie, Wall Street thinks things are going pretty well, but not the American people. The University of Michigan's headline sentiment index falls to its lowest since last November, 7 months, 65.6 from 69.1, way below the 72 expected. Current conditions fall to 62.5 from 69.6, and expectations fall to 67.6 from 68.8. And Americans did not get the CPI PPI message this week. One-year inflation expectations unchanged, 3.3%. 5 to 10-year inflation, 3.1%, up from 3.0%. Now, of course, we have Joanne Shu coming on Bloomberg Terminal. If you have Bloomberg, I'll be talking to her in just a few minutes about this. We'll ask what happened. Why is it that Americans suddenly turned so pessimistic in the month of June?
Well, you think about psychology, you know, those feelings could start to inform their behavior. And we had this conversation yesterday. When does bad news become bad news? When should we start worrying about a growth rollover? Does this slightly get us closer?
It might slightly get us closer. What will be interesting to watch is next week's retail sales report. Did Americans pull back their spending in reaction, you know, in line with their sentiment? Do they feel much more pessimistic about things? The other thing is this is, of course, the preliminary index, and we'll get an update on the University of Michigan Sentiment Index later in the month. Did the American people not sense the change in inflation that the CPI and PPI reports brought about, and will they by the end of the month? Those are going to be key questions for the Fed.
Yeah, good reminder, of course, about retail sales, the health of the consumer, obviously front and center right now. Mike McKee, thank you so much. And of course, don't miss Mike's interview with Cleveland Fed President Loretta Mester. That's at 1:15 p.m. Eastern today. But let's turn our attention back to these markets, because joining us now, I'm pleased to say, we have Emily Rowland. She is John Hancock Investment Management Co-Chief Investment Strategist. And Emily, it has been a huge week between the Fed and data and everything else. Has anything changed for you when it comes to your thesis and your approach to these markets right now?
It really hasn't, Katie. We continue to believe that we are in this sort of never-ending late cycle environment where the lagged impact of Fed tightening just simply hasn't tipped us into contraction yet. It was a really interesting week. I'm glad you brought up the bad news is bad news narrative. You know, on Wednesday, we got that CPI report, and yeah, inflation's coming down, but by the way, it only missed by 0.1%. It wasn't that big of a miss, but markets are so sensitive to it. You saw this massive rally across areas like small cap equities, which have been incredibly sensitive to inflation dynamics. And then the next day, the PPI report, you know, contributed to that disinflation traction, but you got initial claims jumping. And I would say that actually ended up probably being the most important data point of the week. There may have been some one-off anomalies due to the Memorial Day holiday, California claims jumping, but pretty notable here that we are seeing more signs of the labor market softening. And I think that was confirmed just a couple minutes ago with that University of Michigan sentiment report as well. People are concerned about their jobs.
Well, that's really interesting. It's not often that claims actually overshadows CPI, but maybe we saw that this week. And I mean, I'll turn to you the same question that I've been asking Mike McKee, and that's, when do you start to get worried that when you think about that long lag of monetary policy, that maybe the Fed went too far and growth will actually start to turn here?
Yeah, well, what we're watching is this environment where, you know, corporate revenue growth was really great during the height of the pandemic, and now it's coming back down to earth. And we're seeing companies having a harder time passing prices along. If you look into the guts of the CPI report, the stuff that people want to buy, things like airfares, you know, discretionary items, you know, those prices are actually coming down, while the things that we need, things like medical care and shelter, those prices are going up. So companies are now having a harder time passing along higher prices. In our view, that's going to result in margin compression. So you're going to need to see companies dealing with the fact that their cost of capital is much higher than it was a year or two ago, and their revenue growth is slowing. So if you're going to defend those margins, you've got to cut costs. And of course, we know the biggest cost that most companies have is labor. So the last shoe to drop in every economic cycle is that the unemployment rate shoots up. And that's what we would be watching for as a further sign that we are going to be contending with an economic contraction. It's tough to see it right now. Markets hitting new all-time highs every day. Things seem fine, but we want to repair the roof when the sun is shining. So we're leaning into higher quality assets. We're looking at the income that's available in bonds right now is a great way to get paid income and get paid to wait as that contraction ultimately unfolds.
Repair the roof when the sun is shining. I'm going to write that down. I love that. But before we talk about
JFK.
That's JFK. Yeah, he had some good lines there. But in any case, we're going to get to bonds. But I want to talk a little bit about earnings, because I was just having this conversation with Jay Pulaski, with Cameron Dawson, that really all that matters right now is earnings, those earnings estimates. This basically, you think about the Fed, and the Fed isn't going to stand in the way of this rally. I mean, when you take a look at that fundamental earnings picture, what do you see?
Yeah, I mean, one thing I would add to that conversation is just how concentrated the earnings growth has been. If you look broadly at the S&P 500 and you take out the tech and communication services sector, earnings growth actually be negative on a year-over-year basis. So we want to look to those areas of the market that do have pricing power, stocks that have great balance sheets, lots of cash, a limited need to tap the capital markets in order to grow. That's really where you want to look to, as that earnings growth becomes more and more concentrated. The tech sector is sort of the poster child for quality. We continue to embrace that area. But of course, it's got a lot of love from many investors, so it's trading expensive. We also want to look on the value side to where we can find quality at a reasonable price. So I think this is a really important time, certainly for active managers who can take advantage of those companies that are going to continue to perform, even in this environment where margins are contracting.
Well, Emily, just really quickly here, you mentioned that when you take out tech, things maybe don't look too hot. And with that in mind, I mean, can investors afford to be anything but neutral weight or overweight tech right now?
Now, we continue to have an overweight there. Again, the challenge is going to be the valuations. You look at something like the S&P 500 Growth Index, and it's now trading at a 45% premium to its 20-year average. So it's pretty tough to say that tech is not overbought. We want to diversify from that. We're looking at areas like U.S. mid-cap equities, which are trading at the cheapest levels to their large-cap counterparts since the late 1990s. They're also benefiting from onshoring with an overweight to the industrial sector. So we continue to see supply chains coming back to the United States, resulting in this manufacturing renaissance we're seeing, particularly in the U.S. Midwest. So we're playing that through industrials in mid-cap equities, and you're not overpaying for that theme. So it's really about that balance of finding quality, but finding it at a reasonable price.
All right, Emily, so enjoyed this conversation. Sit tight for just a couple minutes. We're going to come back to you after the break, but it's time now for ETF Friday, truly the best day of the week. And this week, Bloomberg's Emily Grafeo has been looking at new research by Bloomberg Intelligence about the truly confusing dichotomy of trends in the ETF market right now. Emily, what is going on?
So we'll start with performance and the juxtaposition there. This is new research from Bloomberg Intelligence. The ratio of ETFs with positive versus negative returns is at an all-time high when you look at the last 12 months. So over the last 12 months, 94% of ETFs have posted a positive return, so something above zero. But because the S&P 500 is up nearly 25% over that time period, a record low number of funds is actually beating the index. So funds are up, but they're not outperforming. And why is that? I think it's less an ETF story and more just about, like you were talking about with your prior guest, the equity market concentration in big tech. If you don't have NVIDIA, it's hard to beat the S&P 500 right now.
Yeah, it's just a brutal period for those active managers who want to be long something other than NVIDIA. It's tough. But let's talk about something that you and I actually talk about all the time, and that's the fact that you have all of these new ETFs coming to market, but at the same time, you also have record fund closures as well.
It seems like right now it's easier than ever to launch an ETF but it's harder than ever to succeed. I know, Katie, we talk about this a lot, but after 2019, there were regulations known in the industry as the ETF rule that essentially made it a lot easier for asset managers to launch new ETFs. And since then, you can see on that chart, we have seen nearly a record new listing. So in the last 12 months, 600 new ETFs, but 260 ETFs have closed as the market is getting more competitive. People are essentially launching, 12 different ETFs that all track, one single stock, levered NVIDIA, and then it doesn't get enough assets and they have to close it. But because it's so easy to just launch another one, they can just try again. And so that's why we're seeing all of these launches.
There you go. And what do they say, that ETFs are sold, not bought?
Yes, exactly. You have to get your ETF in front of essentially a distribution channel, a wirehouse. If you don't have, a certain number of assets, often you are not going to be accepted onto these trading platforms, and therefore it's very difficult to gain assets and a track record. And you can see a lot of these funds closing because they just can't compete with the big three issuers, essentially, Katie.
Yeah, great context there. Of course, a fiercely competitive ETF industry. Really appreciate your reporting, as always. Our thanks to Bloomberg's Emily Grafeo. Now, we do want to bring you some breaking news, and that is that the U.S. Supreme Court dealt a fresh blow to the firearm regulation efforts by throwing out the federal ban on bump stocks. Those, of course, are the attachments that let a semi-automatic rifle fire at speeds rivaling a machine gun. Of course, plenty of Supreme Court decisions coming down this week. We're going to continue to keep track of them. But coming up on this program, Tesla shareholders back Elon Musk's pay package and a proposal to move the company's legal home to Texas. That conversation coming up next. This is Bloomberg.
Want Ethereum exposure right in your brokerage account? Get it with symbol ETHE. Grayscale Ethereum Trust, the world's largest Ethereum fund. ETHE. Crypto investing begins here.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
Like no one else, Bloomberg ETF IQ, Monday on Bloomberg. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
Elon Musk has won both of the votes he was facing this week. Tesla shareholders voted to approve his $56 billion pay package and the company's move to Texas. Joining us now with more is David Welch, Bloomberg's Detroit bureau chief. And we've covered the ins and outs of the vote. So tell me about the fundamentals here of Tesla in the context of an industry when it comes to EV demand that isn't quite as robust as many had predicted.
Well, it's not. And one of the big questions now with EV demand, particularly in the United States, is do we have an EV problem or do we have a Tesla problem? If you look at first quarter registrations, retail sales of EVs were up 9%. Now, Tesla sales have been in decline or growing very slowly, depending on what period you're looking at. Other companies are doing pretty well. And so part of this isn't the meteoric growth we had a couple years ago in EVs, generally speaking, but it's still growing. 9% at retail in the first quarter, that's pretty nice growth. Where we saw a big decline was actually in fleet, which is related to the mess over at Hertz. But Tesla's had trouble because they've got stale vehicles, same design they've had for a long time. They've got a Cybertruck that really hasn't taken off. It's really a niche product. And then you have pretty aggressive competition here from Mercedes, BMW, Ford, and General Motors. They've all got new product. They're all pushing it pretty hard. And some of it's at pretty attractive prices. So, you know, when you go from a nearly monopolistic position that Tesla had over the past couple of years to lots more competition, they're going to lose market share, and they have. And when their product hasn't been fresh in a while, then that's an issue for them as well. And I think that's one of the reasons you see Elon Musk leaning on this idea that his company is an AI company. It's not a car company anymore. And whether or not he can deliver on that is crucial for Tesla because he doesn't want to be a car company. They have low stock multiples and high capital costs. He wants to continue to be seen as a tech giant, and he sees AI as the key. Now he's got to deliver on that.
Yeah, and of course, it's a long, rocky road ahead there. David Welch in Detroit, really appreciate that context. Let's bring Emily Rowland of John Hancock Investment Management back into the conversation. And you think about big tech, we sort of talk about it as a monolith, but you think about the year-to-date performance, we've actually seen a ton of dispersion in those big tech names. Wondering how you're thinking about that, of course, as you think about quality names that you want to own right now.
Yeah, we've definitely seen the Magnificent Seven sort of break apart here this over the course of 2024. And really, Katie, we're looking at this again through the lens of quality. We want to find companies that have great return on equity. They have great balance sheets, lots of cash, very low debt burdens. And so that actually brings us into the classic S&P 500 technology sector, as well as communication services. We're finding more quality companies generally across those sectors. It also leads us to an overweight to U.S. equities. You know, you're looking at Europe, and they have a very, very small tech sector. It's about 6%. Of the
Taking a look at the Fear and Greed Index, 40 out of 100 equaling fear. And the Crypto Fear and Greed Index, 74 out of 100 equaling greed.
And how does that translate into the fixed income areas of the market, specifically corporate credit, for example?
12.76.
Well, Katie, it certainly hasn't kept up with technology stocks this year. But the good news is that unlike tech, there's been a ton of value unlocked in the fixed income side. We, of course, saw this massive backup in yields over the last several years that have created this incredible entry point for fixed income investors. The fact that the aggregate bond index is yielding close to 5%, investment grade corporate bonds over 5% right now. You can get paid income in high quality bonds, and you can get paid to wait, even if we see yields chop around here as the economic data continues to give us mixed messages. You're looking at the income component of bonds as being a really attractive and really important component of returns. Of course, everybody loves cash. I get it. There's something else to do with short-term money right now, but you're going to be subject to reinvestment risk. As rates come down, which is our forecast, those rates are not going to be as attractive on the short end. You really want to lean into high-quality bonds here with intermediate term duration and get paid to wait.
Yeah, I will say, though, 5% looks pretty good. Definitely hear what you're saying, though. And, I mean, with that in mind, is it worth bothering with treasuries, or is it really the corporate market that you're seeing those opportunities?
Yeah, so we are neutral treasuries, but we're overweight investment-grade corporate bonds, particularly up in the cap spectrum. You know, the fact that you can get these bonds with very low default risk and get paid, again, close to 5-6% income there. Investment-grade corporate bonds are trading at about 90 cents on the dollar right now. They typically trade above par, 105 to 115. So we're actually trading at one of the steepest discounts right now since the global financial crisis. So we think this is a great time to unlock the value that's been created over the last couple of years in investment-grade corporate bonds.
All right, Emily, I think that's a good place to leave it. Appreciate your time on this Friday morning. Our thanks, of course, to Emily Rowland of John Hancock Investment Management. Now, we do want to go back to that breaking news crossing just a few minutes ago, and that's that the U.S. Supreme Court throwing out the federal ban on bump stocks. Those are the attachments that let a semi-automatic rifle fire at speeds rivaling a machine gun. Joining us now with more is Bloomberg Balance of Power co-host Joe Matthew. And Joe, it looks like we're talking about a vote here that was largely along ideological lines.
Yeah, very much so. 6-3, not a big shock in this particular case, voiding a criminal prohibition that was actually put in place by the Trump administration. Katie, this goes back to the Las Vegas shooting in 2017. Remember that country music concert festival that was shot down upon by a shooter in the Mandalay Bay? That prompted a whole debate nationwide about new gun controls, and what came from that was this ban on bump stocks. So we're going back in time a bit on this one. It's considered a big win for the gun industry, a big win for the NRA.
All right, Bloomberg Balance of Power co-host Joe Matthew. Of course, more coverage coming up in those hours. Still ahead, though, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, Wells Fargo fired over a dozen employees last month after investigating claims that they were faking work. A review found that they were simulating keyboard activity, creating an impression of active work. Now, Wells Fargo has started requiring employees to return to the office 2 years ago under a flexible hybrid model. Next up, a judge looks set to reject a $30 billion settlement between Visa Visa, MasterCard, and retailers, which would have capped credit card swipe fees. The federal judge suggested that she would not sign off on the deal. Now, of course, retailers have long fought against fees for processing card payments, most of which go to banks that issue those cards. And finally, of all the hot IPOs over the past year, AI firms, biotech startups, you name it, none have popped on Wall Street quite like Kava. The restaurant chain has soared more than 300% since its IPO, giving it a market valuation of over $10 billion. That equates to $33 million for each of its 323 restaurants. And of course, you can follow all the latest company buzz on TRE and Go on your Bloomberg terminal. Meanwhile, you take a look at markets on this Friday morning. It has been a long and it has been a busy week when it comes to, of course, monetary policy and the economic data front. And as you can see, at least for the S&P 500, we look set to be in the red here. Of course, this comes after a string of 4 consecutive record high closes. So maybe we're taking a little bit of a breather when it comes to your big benchmark. And we're not down by much, 0.3%, but, you know, it's still something. Meanwhile, you take a look at big tech, actually in the green right now, fighting to stay positive, currently up about 0.2% right now. Really feels like tech has been your haven in almost any market environment. Of course, that is holding true right now with the NASDAQ 100 also higher by about 0.2%, also at a record high right now. And meanwhile, you take a look at that bond market, that fierce bond rally just continuing. The 10-year yield down another 4 basis points, looking set to go below 420. We're going to continue to keep an eye on that. But coming up, Kia continues their push into electrifying their lineup. Steven Center, he is Kia America Chief Operating Officer. He joins us next. This is Bloomberg.
ECB officials see no cause for alarm over French market
What's
turmoil.
inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton
So
Vance
ECB
High
officials
Yield
said to see
ETF,
France's
you know what's
situation as
inside.
contained.
Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
So turmoil that put the spread between French and German 10-year bond yields on track for its biggest weekly jump on record and wiped $200 billion off the value of the country's stock, remained contained in the eyes of policymakers, and no talks on crisis tools have ever been considered as of Friday, said the people who asked not to be identified because any deliberations are private.
On the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates?
Check 1, 2.
From Chairman Powell. I mean, do you go fixed structure or floating structure? Much more like what they do in Europe.
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some
mic check 1
and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day.
Cash is oxygen.
Willing to invest right now. What
is this guy saying?
Pockets of investment.
Pockets of investment. Not so well. I need more material. I'm going to have to place an order here in just a minute. I'm going to be on the show here in just a minute, but I'm in the office at least with you. Just a second here. 30-minute chart. Couple seconds there, guys. Are you guys losing the stream out there or no? Yeah, mute that right there. Main camera. Oh, there we go. No, don't do that. I thought that was locked anyways. Chat box. Move that over. Push that over there. All right. So no up this morning, right? A little bit actually down this morning. What else we got here? I figured this morning that we'd either come back down here and bounce, or we would be up already this morning. Not happening, as you can see. Support being held, at least for the moment. One quick second here. Switch this to a 1 minute. Ow. Fucked up my hand. So I've got some guys out here working outside this morning. I might get pulled back and forth from this show. I'm short a couple tons of sand as well. So, anyways, I have to order some sand. So I got a couple phone calls I got to make here in the next couple minutes. But for right now, this morning the gamma picture has changed slightly. Well, not slightly. It's freed up a little bit. Here. The gamma flip is at 5,400. It's moved up. So be aware of that. 5,400 is where the gamma flip is at this point. There's volatility where we are right now. There is some volatility for where we are from here to 5,400. So that's roughly where this yellow line is right here. But if we break below this green box right here, there's a little bit of like volatility in this area. Things get nasty below this yellow line here. So we're kind of close to where we can have a downside move. It's possible. We're a little bit freer to do that. This morning, I don't know if that's going to happen or not, but just be aware that if we begin to break roughly 53.7.55, that things can get spicy. Just be aware of that this morning. So be conscious of it. Prices below the hourly trigger at this point. This is basically where support is. Right. Tick. This is the, let me see here, 7 a.m. pre-market low. Got 537 down here. So we'll just watch this closely. Yeah, I saw Jedi Marcus this morning, and I spoke to Vol Wiz last night. And we were talking about, can the market free up at all? You know, can there's a huge like suppressed volatility, rolling out short call, like there's like short call or basically hedging in the market being rolled over or rolled out on the highs, stopping the market from being free to do whatever it wants to do. Suppressed vol, you see it in the trading action and all of that. You saw it yesterday. Buying calls, it's like 20 cents, then it's 24 cents, then it's 15 cents. I'm on a bottom buying this shit too. So just grind it out. Selling options is great right now. Trading futures is great right now. Spreads are working well. But, like buying options is kind of like the worst thing that can be done right now. Unless there's like tons of time on them. Some people are claiming that single tickers are better than indexes right now. I don't know if that's exactly the case. There can be a case made for it. What's up with my chat this morning? Chat is gone? There we go. Sweet. There we go. Something's up with my, I don't know what's going on this morning with the stream, but at any rate, we are below the hourly trigger at this point. I got to make a quick phone call. I'll be back with you guys. You'll see me here in the office on screen and all that kind of stuff. But you'll see me talking on the phone and stuff like that. What else? I think that's all I got for Friday. Let me see if I can find anything for you here to read to you. Dude, I got some, I'm having issues here in the background. I got, screens crashing. Let me read some quick morning brief to you. Euro banks are down 3%, or what were down 3%. French-German 10-year yield spreads keep skyrocketing higher. Per GS this morning, a positive session in the U.S. was somewhat of a facade yesterday as price action under the hood showed some serious cracks. Import prices, May month over month, minus 0.4% versus 0.0% expected and 0.9% prior. Messer saying we are in a good position with monetary policy. It's important not to wait too long to cut rates. I want to see a few more months of ebbing inflation data. It's inappropriate to keep rates at the current levels until 2%. Defense Secretary Austin rejects Putin's ceasefire proposal. It looks like Moscow is offering to stop the fighting in Ukraine, but they want to keep the land that they already have. We know that'll never work, right? You guys all know that. It's all or nothing at this point with Ukraine. Goldman's Pascario is saying, we're seeing serious ongoing demand from the long-only community. Hedge fund flow, by contrast, has been more defensive and lacking velocity. Finally, note the almighty buyback technical will begin to taper as June becomes July. As also goes on to say, part and parcel of the prior 2 points, households continue to put money into the stock market at what I'd characterize as a healthy but not feverish pace. Here's one way to illustrate it. In 2024, the average weekly inflow to U.S. equity ETFs and mutual funds has been $8 billion. In 2021, that was $18 billion. It goes on to say, I've spent a lot of time at a bespoke event last week that focused on geopolitical risk in the year ahead. As one can imagine, the sensation was dark, particularly related to U.S.-China tension. How you square that against the Taiwan stock index up 24% year to date and made an all-time high this week reveals the difficulty of prosecuting geopolitics through stock markets today. Someone mentioned that yesterday. Someone mentioned in the chat, it could have been Sam, mentioned in the chat yesterday that, or mentioned inside the chat yesterday that it's a different market. It would be tough to say that we would have a 10-year down market with the involvement that is in the stock markets today. Retailers, you name it. I don't know if I believe that. We went down pretty well 2 years ago. No problems with the market selling off. The banks choose to pull the plug. Markets, in my view, will go down. But I like the idea of it. Someone's saying that right now. Goldman's Pascario saying that right now about Taiwan. There is some truth to that. As long as the banks are still in, party time is still on at least. Michigan consumer sentiment, 65.6 versus 72.1. The expected was 9.1. 1 year inflation expectation, 3.3% versus 3.2% expected and 3.3% prior. 5 year inflation expectations, 3.1% versus 3.0%. The expected was 3.0%. What else we got here? French Finance Minister Bruno Le Maire, warns that the victory from the left-wing alliance could result in France's exit from the European Union, according to Bloomberg. Let's see here. SPX dealer gamma is at 464 million. The flips at 5,400. Major supports at 5,400. So that's the truth right down here. This is support right here. So if this is lost, things could get really spicy. Let me see here. Here's a note from Gamma Labs. While we acknowledge that we are moving into possibly very rough waters, geopolitics, trade, elections, we think the short term, the U.S. market is insulated by a supportive dealer stance, a strong gamma support level at 5,400, and fundamentally by lower yields. Due to the bullish repositioning, however, the gamma flip level has moved higher to 5,400. So this level needs to hold or else. On the positive side, gamma does not suggest a heavily overbought market any longer, which opens upside potential. That's all they've got this morning, so we'll see what that means. And that's basically what we're saying to you here this morning. This area here just has to hold. If we begin to lose this area, more importantly, 537 would be, I don't know. I mean, real support's like 532. I would love for a swing down to like 532, 530, I'll be honest. But we know how this has worked out in the past, right? All of these consolidation levels, they've all held. Well, the last two at least have held for upside moves. So as long as this holds, I'd expect the same. If it begins to drop, I'll be looking for quite a major buy. So a large buy down here if that's possible. I doubt we get down here, but if we do, I think everyone would love it. I spoke to 3 traders last night that all expressed the same frustration. These guys are really good traders too, and they express that same frustration. I just want a fucking pullback. Can I get 1%, 2%, 1%? I don't care. Anything like that, I'll take it. They don't like chasing this at all. And I am of the same feeling. I want nothing to do with chasing this. I don't want to drop fucking $30,000 right fucking here and blast down to 532. I'm just not going to do it. I'll lose 500, a grand, something like that, but I'm not willing to give up fucking a salary for somebody because I didn't want to be fucking patient for a dip buy. And I think that's the general gist here is I'd rather not even make any money at that point. I'd rather just stay out of market if I have to than go balls deep on a consolidation that doesn't move. Like I just can't justify it. I know that one time I'll lose. I think that's too the voice in the back of the head is like if I go along that deep on something and then we do that rollback, that 30 grand will hurt. I'll be pissed. I'm not gonna lie. I'll be more than upset. I'll probably chop a tree down or something. So I guess this is what we do, right? 10 contracts here, 10 contracts there. Have some exposure, and if there's a major pullback, we'll take it. If not, it's just small trading, small size, chasing, all that kind of stuff. Chase breakouts. That's the plan here too, even for myself. Until we break out, until we break above this here, I'm not even willing to really do much. I mean, I'll take a small 10 contracts or something, or some spreads, but I'm not willing to go balls deep on a consolidation with no real downside, nor the grinding that takes place as well. Even spreads now pretty much have to have 10 sessions on them for sideways consolidation. I mean, none of this shocks me. If we just stayed here for like 3-4 days or 5 sessions or something, then big major move to the upside. That's what's been happening. So you got to put time on a spread, and you got to wait and be patient. All right, that's all I got. I got to make this call. I got to get this delivery done today before these guys fucking leave. What else do I got for you guys? I think that's it. I don't see anything else here. Anything of note here. Here's the gamma. As long as we stay, I'll leave this SPX gamma up for you. We are below support. We were above it this morning, blasted down. This is we're testing the prior low. We tested the prior low earlier. As long as this gamma flip right here holds, we're good. If we break below it, get your bear suits on. It could get nasty. Tight here. But I don't see it going down. I'll be honest with you guys. The market's supportive. So you think like, hey, are we gonna get that flush like that? I don't think so. I mean, I'd love it. I just don't think it's gonna happen. What else I got for you? I think that's it. Well, I guess we could cycle through these. We got Tesla here. They're trying to reject Tesla. I was on Reddit reading what the Tesla, or not Tesla, but everybody hates Tesla, right? Or I don't know if everybody actually hates Tesla. I don't know if that's actually true. I'm going to assume some of it is, some of it comes from professionals, truly professionals, that want a narrative. They're so fucking short Tesla, it's not even funny. I think it's the second most shorted stock in the world as of right now. If you look around the world, it could be the number one shorted in the world. I think I read a week or two ago it's the number 2 in the U.S. But the world short on Tesla is insano. And the other sad part about Tesla is it makes up so many ETFs that are not tracked for how many shorts are actually against Tesla. So it's pretty big. So I have a hard time believing some of the talk that's out there. There's a lot of anger out there about Tesla and Elon. Some of the stuff I read about the decision to pay him made sense, but some of it didn't either. One of the things that part of the conversation that I read was about how our stocks should be taxed like property every year, right? That's an argument that's out there right now, and I think that's I think with a Main Street hat that makes sense. But you're talking about a fundamental shift in everything. I don't think that will ever happen. I don't think that'll ever happen. So it's an argument that's pointless to be had. It's basically, I don't like that you're wealthy. And you know, I don't know what to say to that. If you don't like wealth, go fucking live in China or something. I'm being serious. Like, this is the United States of America. We're a capitalist system. And I think it's fucking bizarre that you would even suggest to do that. Now, I do think that you can tax people if they use stock as leverage for loans. There's some of that I would give on. If you were to monetize stocks as a loan tool, sure, I could possibly say yes to that. But how about just banning doing that? How about liquidate that stuff? Maybe. I don't know. I guess it could be open to that, but some of the bizarre shit that I read on this Tesla thing, I was just like, no fucking way. It's not like it's anybody. It's not their money either. I mean, there's a bunch of fucked up shit about it. Anyways, Tesla shorts are stinky again. The retail voters, I voted. We voted to pay them, so it's what it is. Okay, so Tesla rolling down right now, still sitting on its daily trigger. As long as it stays above its daily trigger and its hourly trigger, it's bullish. That has to be said and has to be known, or at least it's bullish at least in terms of intraday, intra-week stuff. Now we are below the monthly trigger. That is bearish. So technically, on a higher frame, Tesla's still in bear town. Still, as Binky would say, it's still in the hurt locker. And once if it does break above 214 at any point, which won't be easy, it'll be a time-based thing. Until that happens, you can't really justify saying the stock is that bullish. The next thing I want to look at here is ENVX. Had a a pro trader contact me in Discord asking about this stock down here. And I do just want to show you guys this ticker. It's a great trade. It looks like he's been buying bottoms all the way down here and making bank. He bought, I think, $9 or something like that, and it pierced the veil of the monthly trigger at $14. It also has a cross of the daily trigger and the weekly trigger. The daily trigger just crossed at $10.49. The weekly trigger's at $9.92. The monthly has been a place to sell ENVX, but I think it's worth watching if it begins to turn up. So as long as 1049 holds and that gets a successful back test of that daily trigger, I'm watching it closely. It could start to trade quite high, $25, $20, somewhere in there, possibly even higher and squeeze higher. Just keep an eye on this one, ENVX. I like this stock as long as it stays above $10.50. ENVX. HYG blasted down this morning to close the gap. Down below, it looked quite bullish yesterday, and they said nope. But it did close the gap down here, so this is bullish, or at least I'm pretty bulled up down here with HYG trading 77.08. It's free to now go back up and start making new highs. I don't want to see HYG lose 77.06. So right down here, I want to see that hold. Things will get nasty if it gets any lower. You can already tell that as well by Gamma. So it could be a nice little up move in here coming for SPOOs this morning. Dixie running on highs right now, but it is almost into a sell zone. There is supply up here at 106.40. 106.52. They sold it again at 106.486. So I would expect those same sellers to step in up there. Let me see. Snap a line up here. As a matter of fact, right here is one sell zone right where we are. And then the next sell zone is somewhere up in here. So this is all an area to sell the dicks. So I would expect sellers to be stepping in at some point up here. US 10-year got blasted down to the depths of hell. I told you already, too, that the 10-year yield is trading with the S&P 500. I said that to you yesterday. Buyers stepped in this morning in the buy zone for the VIX on the 9-day VIX. What else we got here? Estow cranking right along nicely. Trading 17.77. Looking for Estow to have a breakout at some point. Don't want to see it get rejected, though. If it gets rejected, it's going to go back down to the hurt locker again. CL still cranking away up here. Well, not cranking, but topping. Pay close attention to oil. Does it get sent down to the depths of hell, or does it have a breakout moment? I've got it going down here. I'm pretty bearish on CL right now. AMD, we don't know where that's going. There have been banks calling for a short on AMD down to $150. It's on the precipice right now. I'm not interested in a long trade on this one unless it breaks above 162.30, or how about 160 by Monday, 160. FWRG. We're watching it right now. We had a discussion about it. I think it goes lower. I think it goes down to, I've got an alert set for $11.80. It's pretty bearish in my view, but people are watching it right now to take a long on it. So we'll keep it up for a little bit. GME, another failure to get a high today. Don't want to see that. Don't like seeing that. Don't like seeing the failure here at $30. Don't like seeing the failure here at 58. Don't like any of this. Don't like it. Want to see better action, better price action on GME. I saw the news about DFV exercising his calls. I think the trade might be quiet for today, maybe Monday as well. Don't forget, we've got a holiday next Wednesday as well. Matter of fact, dude, Detroit is like blowing up right now. Juneteenth in Detroit is not a one-day holiday. It starts today and it doesn't end until next Sunday. It's up like Juneteenth in Detroit is a blast. If you, I don't know what Juneteenth is like where you live, but it's awesome in Detroit. Everybody gets together. It's one long party. You go to like barbecues and pool parties and events in the park, all kinds of cool stuff. So this week is like 4th of July. 4th of July for African Americans in Detroit, and it's a fucking blast. I don't know where you guys live, but they do it right. They know how to party. What else do we got here? GME, I went through GME. Tesla, I'm bullish on Tesla. I don't know what else to say to you on that topic. I'm pretty bullish on Tesla here. So I'm not really even concerned with lows. If I see any lows, I'm going to keep adding. I expect all-time highs this year in this ticker. I don't know how long it takes or if it's like they're going to hold it for as long as they possibly can. They can do whatever they want. In my view, we're going moon. We're going all-time highs by end of year. Maybe March at best or at worst case scenario. Yeah, I'm seeing a little bit of weakness here in the daily, but like this is all this here is should result in a massive upside move on Tesla. So it's just a matter of a waiting game. All right, so that's all I got for you guys. I got to make this phone call. I got to get this fucking material delivered. So if you don't know, I've got a sewer line that runs behind my house to a main sewer line, and I had it cambered, and now it's starting to collapse. So I dug it out to replace the line, and now that that's dug out, the yard looks like shit. And I'm like, well, we'll start doing some other stuff. I'll tear all this shit out and tear all that shit out and replace all that shit. So it's kind of like the Money Pit movie. I hate doing that shit. When you do it, it's always a can of worms. The moment you're like rip a wall down or like, ah, shit, look at all this. I got to take all that out. I got to replace all this. We're already down here. Might as well do it. Anyways. Fuck me. Seriously. There is something to be said for being a renter. Or even just being in a condo or something. You know? They take care of shit for you. Even if you have to pay for it. You have to, the nightmares that come with home ownership can really suck. They put a damper, that suck, but they put a damper on everything. And you got to do some of this shit yourself because the cost is so high today. It's just obscene. It's totally obscene, the cost of shit today. Yeah, my wife said that. You know what my wife was saying? My wife was saying that my wife was asking about what are those things called? Nothing permanent, because I don't want a permanent pool. I feel like an in-ground pool is a nightmare too. And she mentioned an above-ground pool. They make these. I think Intex makes it, maybe. Intex. I was like, maybe we could do an above-ground pool. Above-ground pool would be something where it's not permanent, which I like, because like the kids will be gone at some point, and I can remove it and get rid of it. Do you guys have pools? Do you guys have above ground pools? Do you like it? Is it a ton of work? I don't like who has to do the work on the above ground pool? Do you guys have pool guys, or I feel like it's a ton of work. We had one growing up. My wife had one at her house growing up, and I had one at my house, an in-ground pool. And my father fucking hated it. Like, he hated it. Because he had to do all the work while the kids and my mom and all our friends and shit had a blast. My dad was constantly working on it. Yeah, pool boy. So get the above ground pool in, get Juan, right? Get sexy Juan. Get sexy, Pedro. Darth Molly, what are you saying? You're the pool person, Addy? I like the pond idea. Above ground pool is very Michigan. I'll look at one today. I'll take a look right now. It's expensive, yeah. Can you do a saltwater pool on an above ground pool or no? Yeah, exactly, right? See, Taz is making a good point. Unless you live in Florida, you can rock it year round. I agree with that. I would say Michigan's pool weather's got to be what? 2 months, maybe? Maybe part of June, June, July, August. I guess 3 months. Yeah, unless it's heat of the season is too short in Michigan. It's way short. Your neighbor has a pool and lets me use it. That's the way to do it, Chase. That is the way to do it. Yeah, what you own. Yeah, I agree with all this. Your above ground pool as a kid was bad enough for the work it needed. Yeah. My pool is the bane of my existence. So, dude, my buddy, the guy that I tell you about that I know, right? The guy who's like the fuck you money guy. He's got a pool. He's got this giant mansion. He's got it's stupid. His backyard is absolutely stupid. He's got like a hill with massive gardens on it, and then he's got this giant Olympic-sized in-ground pool. It's fucking beautiful. He's got this big wraparound staircase to a hot tub that's surrounded by a high wall, like 3 stories up on the side of a hill and shit. And but it's the bane of their existence, and they got help. Like they hire people. And his wife's always in the garden. She loves it, but she's always in the garden. And he's always fucking around with that pool. Saltwater is low maintenance. Cold plunger type. Yeah, I'm a cold plunge type. I go to a Japanese spa that we do the cold plunges and the hot tub. It's amazing. Mike Patty. Yeah, the saltwater, it's a saltwater generator, right? That's what I thought. It's like almost like electrolysis, right? Kind of like reacting off of metal or something like that. Yeah, I showed you the VIX. I looked at the VIX earlier. They came in and bought it this morning. Sand filter is the way to go. I'll look that up right now. I'll look for one. I'd be down to put a pool in. Put a pool in for the kids for the summer. The only thing that, I guess, here's my last question. If I look up at a pool, right, can I hire somebody to do the maintenance, or is it something where you have to fuck with it every day? Is it like a once-a-week thing where someone comes out and works on it, or is it something where I would have to do something every single day to it? Do you guys use, I remember we had a vacuum that you would stick into the filter. Do they have vacuums that are like robotic? Like AI controlled, or like have wheels and... Subscribe to a maintenance company. No leaves. I took all the trees down at this house. Michigan's a weird place. They love their trees here, but they don't maintenance them properly. I have a real bone to pick with Michigan. Specifically Detroit too. Detroit is like a weird place. It's Ann Arbor and Michigan call themselves the city of trees. Detroit, of course, went through a really hellacious bankruptcy. So they had a lot of neglect of trees here. They don't maintenance them. They don't trim them. They just let them get giant. They destroy foundations and sidewalks and all kinds of nonsense. So I cut every tree down that I actually have property I have. I cut every tree down. I did replant some trees. I've got some apple trees and some peach trees, but I top them, so I don't let them grow up large. Yeah, you just got to take care of it. There are robot pool cleaners. They love their. That's what I would think, right? I would think that I would want a robot pool cleaner. You just got to stay on top of it. I'll look at one right now. Maybe I'll buy one. The kids would love it. That's the truth. The kids. As a matter of fact, if I put a pool in, I bet our whole neighborhood. We've got our whole street, right, is kids. Every house has kids in it, and there's not a single pool in this neighborhood. I got a decent sized backyard. I could put a pool in there. Kids would go crazy for it. Yeah, salt water. Okay, so sand filter, salt water, robot. That's the three things I picked up. Oh, and a pool guy. Some of the ladies here have said hot pool guy, right? So that my wife won't have a problem with him being there. Okay. Hot pool guy it is. Yeah, I've been told that like the alkalinity is the most important thing, right? The alkalinity is what people miss. I had a pool once in South Carolina, and that was what our problem was, alkalinity. Massive liability to other people's kids. So what do you do? Do you think there's a liability if you're there with the kids, or even with you being present, or don't let the kids in the pool unless you're in the pool with them, or the number of kids maybe only allow 2 kids over at a time with their parents? I don't know. I guess I have to figure that out too, right? Wouldn't want kids coming over without their parents. I got a fence. My whole dude. So I believe in security. I've got fence. I've got security fence. I've got a security gate. I've got all that shit. Matter of fact, I shouldn't do this, but I did it. My fencing. I shouldn't. I can't even say what I did. I don't want to say it on air. But my house is fucking secure. No one's getting in. No one's getting in my yard. I get between the dogs and the security cameras and the motion alarms, and I got fucking floodlights. My house lights up like a fucking. It's like. Yeah, no gate guard. But I do have I got a fence. I even have a gate. I have a gate with fucking anti-climbing shit on it. You try to jump my fences or my gates, you're gonna get fucked up. Like fucked up. Which is illegal. I'm not supposed to have. I made it so it was legal. It's like plausibly deniable. But oh no shit! I almost drowned in the neighbor's pool when I was like 6. Next thing we knew, every kid in the neighborhood was in swim lessons. Clint Eastwood sitting on the porch. Well, it's not like so. The reason why I have everything in fence too. This is the real reason for it. I had police when I first moved here. I had police chasing someone through our neighborhood, not this house, a different house. And the police actually came through our yard with our kids in the backyard. And it was way disturbing, way, way, way disturbing. And sketchy, but just police running, looking for somebody like that to me was high danger, super danger. That's what I was like too growing up. We had so our fence, Nino, good point. When I was a kid, our in-ground pool had a cattle fence. So it was like posts with like 2 cross rails in it, and that was it. And that's what we did. All the family and friends would come over, and the parents and all the parents would get shit-faced, like completely obliterated. I grew up in the time when there's like seatbelts were like, parents just started cracking the window and smoking rather than keeping it rolled up. And parents got shit-faced. Like, dude, the drunk driving that went on when I was a kid, and it was acceptable, was fucking, it was like everybody. Yeah, I know. The police are weird to me. I wish the police, I wish it was a better environment for, like, I don't necessarily think we shouldn't have police, but what the police are today is definitely needs reform. Won't go into a school, but will chase somebody down and shoot him 30 times that's unarmed. I mean, come on. And then the whole like, I'm going to war thing. It's fucking crazy. And it's like both sides. The criminals are combative. The police are combative. You get caught in the middle of it. And you're not combative. Wine coolers, baby. Bartles and James. Wasn't that one of the big ones? That's the one that I remember them all drinking. Yeah, there needs to be we have like a fundamental cultural issue, don't we? We pretty much have a fundamental like cultural issue across all of it. It's such a fucking mess. Zima, dude. Oh my God, Zima. I fucking forgot all about Zimas. That was fist pumping, bro. That was the fist pump, bro shit. That was like bro fist pumper shit. Zimas. I forgot all about Zimas. Gross. Gross. That's all I remember of a Zima was that it was disgusting. All right. Let me make this phone call. I'll be back with you guys in just a few minutes. Something different.
is this shift towards women. Women's health, I think, has been really a hot topic. I think there's a lot of history where women haven't been paid as much attention to by technology or the medical industry. And right now, we're sort of hitting this sweet spot. In the last 12 months, we've seen our demographics shift dramatically towards women. 12 months ago, we were 55-45, male to female. Now we are almost 60-40, female to male. And I think part of it's a ring, but part of it is that women, I think, really have a real desire to take control of their health, and we help them do that.
And Tom, actually, the ring's working better for women now than when I originally purchased it. Like, I was originally bought a ring by my husband because I wanted to be more aware of my own cycles, and initially it wasn't that great, but now it's actually really being incredibly predictive. And I'm interested from your perspective as to what you've done on the back end here. What data are you using? How are you able to interpret women's health that much better at the moment?
Well, so much of what's important to women is, one, where they are in their life. Are they at the beginning where they're worried about contraception or conception? Are they getting pregnant? Are they in post-birth? Are they in perimenopause or menopause? That whole cycle, actually, we've been investing in each one of those areas. Most recently, the dynamic around temperature, which is one of the metrics that the Oura Ring tracks, is really powerful for being predictive about a lot of things in a woman's life. It can predict when your cycle is going to come, what phase of your cycle in, when you're maybe most fertile or maybe not fertile. It's a really powerful tool, and I think women really have welcomed the idea that they can have a lot of information, knowledge, and education founded in the data of their own body.
Hey, Tom, I think one thing that members have noticed is that you're able to add different measurements to the ring even after you buy it without buying a new piece of hardware. For example, cardiovascular age was something I saw recently when I opened up the app as a new feature there. What can you tell us about the product roadmap right now in terms of what new sensors will be turned on and what we can expect in the coming months and perhaps even year?
Hey, Bork, if you're on stream, if you're watching the stream right now, Bork, Rowett is here. His screen name is Rejects Generator.
And looking for deviations in those data. So here's one example that's really interesting. We have a new feature. It's in beta. It's called Symptom Radar. And what Symptom Radar does is 2 or 3 days before you actually get sick, it gives you signals that you might be getting sick and you might want to change your behavior. Maybe, drink more fluids or take some rest or try and avoid stress. And these kinds of features that are really more strictly speaking health features as opposed to fitness features are the kinds of things that people really find a ton of value in. Cardiovascular age, honestly, it's motivated people dramatically. If you learn that your cardiovascular system is older than it should be, older than you are with your chronological age, it really makes you get out of bed and work a little bit harder because you can see that metric move over time. So broadening the software solutions that we provide to people using the ring, we think is going to take us down the path of women's health, cardiovascular health, and I think ultimately we want to look at all the things that are shortening people's lives, whether it's cardiometabolic disease or other disease states that people are worried about or might cause them illness or death.
Well, you're a software company and you're a hardware company, and you charge for both of them. What is the revenue breakdown right now between the software side and the hardware side? What portion of your overall yearly revenue comes from software now?
So we're pushing up on north of 20% is software revenue, and this is a pretty significant milestone for us. We introduced a subscription business model in 2021, and we have more than tripled our active subscription base since then. The reason for this is that people are so engaged. I mean, of course, it's your own data, it's your own body, it's your own health. People are really invested in this, but the reality is it's an incredibly sticky application. People consult it 3 times a day on average. Out of any 7-day period, 80% of our customers are looking at it 5 of those 7 days. The ratio of daily active users over monthly active users is on par with social media. It's just a lot healthier than social media. So this engagement has really driven the software side of our business, and it's increasing.
I just want to talk about engagement with your patents and IP, and actually engagement with the courts a little bit, Tom, because we are seeing that actually you're pretty active when it comes to fighting for your own IP, and some companies feel that maybe they need to make a preemptive strike. We've seen Samsung talking about launching a ring, and ahead of it coming really to the market, they've preemptively sued you because they're worried that you'd say that they've run afoul of some of your patents in some way. Tom, can you respond to the Samsung claims and indeed what you feel about trying to protect your IP?
Well, I can't really comment broadly on active litigation, but here's what I can say. The law does not support Samsung's position here. And quite frankly, we've already filed our motion to dismiss, and I believe we're going to prevail.
Our CEO, Tom Hale. Tom, thanks for joining us. Really good to see you.
Can I just say, I really love the way it also, when I have a glass of wine on a Friday or a Saturday, the next day it says, don't worry about it. Everyone feels like this the next day on a Saturday. Meanwhile, look, we got you some breaking news, and I just want to bring what's happening in Apple and the EU. Set for its, well, the first big tech company, really, to feel the ire of Europe under the new EU digital law. We understand Brussels is set to charge Apple over allegedly stifling competition in its mobile app store. And it's the first time that EU regulators are really using these new digital rules, the Digital Markets Act in particular, to target a big tech company. Look, not being factored in much to the share price right now, but we're still off by some 0.3%.
And we'll, of course, continue to bring you any developments or updates throughout the day on Bloomberg regarding this breaking news. Coming up, we are going to be joined by Carolyn Childers, the co-founder and CEO of Chief, to talk about the state of women in leadership. This is Bloomberg.
What's inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton Vance High Yield ETF, you know what's inside. Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
To bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Morning from our world headquarters in New York. I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and...
God, watching this right now reminds me of yesterday.
Bloomberg. Context.
I should be putting these down in the 5-minute the whole way up, just grinding it out. God, so terrible. Just low vol, bam, 5-minute check back, bam, 5-minute check back, bam, 5-minute check back. It's been everything. 5-minute check back, 5-minute check back.
Representation in the C-suite is actually full.
Absolutely brutal.
In 2 decades. It's the latest from a report of a non-for-profit 50-50 women on boards. Let's dive into why, and actually a tech-enabled solution as to how things might change a little. Carolyn Childers is with us, co-founder and CEO of Chief. It's a network of senior women executives, in fact, the biggest network there is out there. And what's interesting is you're trying to shine a light on, even if there is this DEI pushback, audibly so, coming from companies and boards. Maybe we're still seeing the work being done, but why are we seeing fewer women on boards, for example?
Yeah, we just recently published a study that talked about companies are still making the investment into diversity. 80% of companies are still having the same, if not more, investment into ensuring that they have great representation at all levels of leadership. But as you said, the numbers are not moving. So for the first time in over a decade, the number of women in the C-suite has actually declined. And it's a number of factors, which makes it so hard to find one silver bullet to actually change some of these representation numbers. It's everything from the glass cliff, where women are so often put into positions where they're needing to do a turnaround of a business. It's everything from the real push to bring everybody back into the office, which we know has greater impact on women. And it's why something like Chief, which is really focused on how do we give support and network and community to senior executive women it's still going to be hard to be a senior executive, but at least it will be less lonely and be able to come together to really give each other support.
And let's talk about that support. You're offering sort of more customized membership packages here to ease some of the anxieties that each woman might have, whether it's about executive coaching, maybe it's a little bit more about advisory, maybe it's about education. Once you're there in leadership, how do you attune your elements to be the best leader you can be? How much are you going to be charging for this? How willing are women to spend on this?
Yes, so we are largely sponsored by the companies. So the women go back into their organizations and get them to sponsor their membership into Chief. And if you think about what it costs to get a 6-month engagement with an executive coach, that can often be $30,000 for a senior executive. So our price points are anywhere from $5,900 to up to $11,900 for executive coaching. We started 5 years ago here in New York with just 100 members. We've now grown to thousands of members across the US. And throughout that entire journey, we've been adapting as an organization to really understand what leaders need in this moment. And that changes every year. From when we started to the pandemic, to all of the financial crises that we have seen, to the socioeconomic issues that people are navigating. And so we recently just pivoted as a company to really give a number of different membership packages to our members that can really meet you where you are. So whether that is executive advisory, where you meet with a peer group, your true peers that are going through everything that you're going through to meet on a monthly basis, whether that be one-on-one coaching, because there are times where you just need a little very focused time on you, or whether that be executive education, because there's specific things that you're looking to dive into.
I'm wondering about the company sponsorship element here. We're Bloomberg, we love numbers, we love the data. What happens if an individual who wants to join comes to you and says, you know, my company will not sponsor this. I need to go back to them with proof that this is a worthwhile investment, that it works. What data do you give them?
Yeah, there's a number of things that we look at. I think success metrics in something like this is hard because success is very different for every individual. And so we really look at how much does this really help change your leadership impact? How much do you believe you are a stronger, better leader because of your participation in Chief? How much do you feel like you have built the connections that help you really navigate new areas that you need to look into? And those are the numbers that we give back to the organizations on top of the broader numbers of how important it is to drive diversity into your companies and what that does for you as an organization.
Okay, so talk numbers here in terms of companies that have not yet signed on. How will you get to 100% participation within the Fortune 100, within the Fortune 500?
We actually have members in 10,000 different companies. So we actually have amazing sponsorship across all of these different organizations. And we continue to build those relationships again and again, but have already made a pretty significant impact into all of the different companies to be able to sponsor their members.
Have any companies pulled away as the pendulum on DEI has shifted?
I think what we're seeing is that people are talking about the investment in DEI a lot less than they're actually pulling back on the investment.
that's something that we noted. We did a whole show on it yesterday. I want to ask about your own capital. You raised a ton of money back in the heady days of 2022, and I wonder whether you need more. You have some big commitments from some very well-known venture capitalists, but this is expensive. Opening clubhouses, you have a lot of them, New York, Washington, and the like, and indeed satisfying the needs of your membership.
Yeah, I think we are always wanting to continue to invest in our members and make sure that they are having the best experience and continuing to grow as leaders. But we're also a really strong business that doesn't need to go and raise capital.
So you're
right
profitable?
Now. We are profitable, yeah.
Yeah, to hear that, VCs.
Very, very cool. Maybe breaking a little news here on Bloomberg Tech. Carolyn Childers, co-founder and CEO of Chief, thanks so much for joining us today. Well, coming up, we're going to look at the timeline for the launch of Ether ETFs this summer. This is Bloomberg.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
Debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Well, the highly anticipated launch of Ether ETFs could be coming as early as this summer, according to SEC Chair Gary Gensler. Bloomberg's James Seyfert joins us now with more. James, how do you take Gensler's recent comments in terms of your own thinking when it comes to an actual launch date for these? When will investors, do you think, have access to this, at least according to Bloomberg Intelligence?
Yeah, I mean, when these things were approved towards the end of May, we basically said they'll be out probably by the end of the summer, possibly earlier. So our overall take has been for a long time, these things are likely to begin trading sometime this summer. We put the over-under around the July 4th number. We thought it could happen by early July. There's a lot of overlap you can take from the launching of spot Bitcoin ETFs and the launching of Ethereum futures ETFs. They had to go through like similar processes with these divisions at the SEC. So there is some some new stuff here, specifically with spot Ethereum, but we didn't think it would take as long as it took for spot Bitcoin. So just to put some numbers on it, spot Bitcoin started in early October. They launched on January 10th. So that's a 3-month process. So we think it should take less than that. We think a lot of it is done. But based on what we're seeing right now, all these issuers submitted their documents for registration, this last step of the process to get these things approved by the SEC fully, on May 31st. And there hasn't been any movement as far as we can tell from the SEC. So the SEC is also in no rush at this point. But I think it's unlikely that it would take anything beyond the summer. And we were saying that weeks ago. So I feel like Gensler saying that in front of Congress didn't really give us any more insight than we already had. But time will tell.
The players, VanEck, ARK, BlackRock, Fidelity, the same names as we saw with the Bitcoin spot ETF. Is there the same desire to be offering these ETFs this time round to match what might be slightly less demand?
Yeah, so we do think the demand will be slightly less, but we still think, I mean, you're talking about slightly less demand versus the most successful launches in ETF history across the world, some of the most successful fund launches in history across the world, right? So even if you get 25% of the flows, which is kind of the range that we're thinking, 20-25%, maybe more, part of that goes back to the fact that Ethereum is about 30% of the size of Bitcoin. So there is going to be a little bit less demand, but again, there is a lot of issuers that stepped out of this. Technically speaking, 3.5 issuers jumped out of this. So WisdomTree, Valkyrie, and Hashdex fully are not launching ETFs. Yeah. ARK and 21 shares partnered on their Bitcoin ETF, and ARK is now backed out. But we do have one new issuer in ProShares for this Ethereum raise. So most of the same players are still in this.
James, lift the lid on the gossip a little bit as to why people might get out and ultimately what people feel about the SEC process. Because I'm hearing behind the scenes a lot of the time, this stop-start, this sudden desire to have all your documentation and then go quiet. I mean, it's exhausting, and many feel that there's more challenges and more hoops to jump than is necessary.
Yeah, I mean, what's really happened here from our point of view and from what we're seeing and hearing, a lot of this has become political. It's not like just normal going through the processes of doing these things. It seems like this approval actually happened on the back of political wind shifting, which is part of the reason why we don't know when this is going to launch, why there's such a large gap between the 19B4 approval and the S1 registration approval. So a lot of it has to do with the fact that this has become so political in nature. But another reason why people have backed out is the fact these things are not going to allow staking. Right now, if you can stake Ethereum, that's a 3 to 4% yield. So that's almost like a fee that you're missing out on. So there's a lot of inefficiencies potentially here. But the main reason that I think this is some of these issuers have backed out is just, one, fees got so competitive. Like we saw a massive fee war launch before the Bitcoin ETFs even launched themselves. So prices compressed to the point where issuers aren't really making that much money. And throw in the fact if you're a smaller issuer, you have to compete with the behemoths of BlackRock, Fidelity, Invesco. So some of these issuers have done well to compete with them, right? But it's very hard to basically start from day one against those guys. A lot of these smaller issuers benefited from launching before them, coming out with new products. Right here, when the Bitcoin ETFs launch and when the Ethereum ETFs launch, they're all starting out of the same gate. And it's really hard to compete with somebody with that much distribution and size.
James, I know you do not do price targets over at Bloomberg Intelligence, but I am curious about the price of Ether, because we're still not back to those 2021 all-time highs, whereas Bitcoin did hit an all-time high just a few months ago in the wake of these spot Bitcoin ETFs. Well, what can you tell us about the way that you're thinking about price movement when these ETFs do become available for investors?
Yeah, I mean, the consensus for Bitcoin from the market was like it's going to be a buy the rumor, sell the news. And it ended up kind of being like that initially. But once money started pouring into the funds, obviously Bitcoin's price ran. And the ETFs are a large reason why we've seen those all-time highs in Bitcoin. I guess it will depend what happens on the flows on the back of Ethereum, right? So if the Ethereum ETFs launch and they do not see as much interest as people are expecting, or they see more interest than people are expecting, we'll see that run and we could see all-time highs. But I think Ethereum is kind of caught in the middle here. There's a little bit more going on. Bitcoin has this narrative. It's digital gold. It is what it is, right? Ethereum is like more the internet of money, an app store, what have you, and there's a lot of competitors. So I think part of the reason that Ethereum hasn't caught and run alongside Bitcoin is the fact that it's competing with the likes of Solana and these other coins.
James, always such great inside track. We thank you, James Seifert of Bloomberg Intelligence. Meanwhile, that does it for this edition of Bloomberg Technology.
Dude, this is gnarly price action.
Don't forget to
grind higher, slam back down, come back to the middle here. Woof.
Spotify and iHeart.
Gnarly price action. Dude, this is fucking gnarly. This is ugly. This is ugly. It's disgusting.
Income strategy.
That's just wrong. This whole thing is wrong.
The symbol of alternative income.
Just straight murder bot. I wish they would mute the commercials on Bloomberg. CNBC does that. CNBC, if you pay for the subscription, they mute them, but they don't do that on Bloomberg. The ads are air bleeders.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
Let me see if I can find something for you guys. Hold on here.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
From New York City for our viewers worldwide, I'm Shanali Bassick, and Bloomberg Real Yield starts right now. Coming up, Fed divergence. It calls for one cut this year as markets and other central banks are more dovish. And U.S. yields are driven lower as inflation data and consumer sentiment starts to cool. And U.S. junk bonds head toward the strongest weekly return in 6 weeks as investors bet on more cuts. But we begin with the big issue, deciphering the Fed's message.
The theme is still patience.
I think it's staying the course. I think it's caution. This is a Fed that's going to remain data dependent. There's no clear indication that they're going to need to rush into cuts.
If you look at the comprehensive look at the economy, it's still relatively strong.
Just like they didn't overreact to the stronger inflation data in the beginning of the year, they're not going to overreact to the weaker inflation data.
Having been a little bit burned by the enthusiasm at the end of last year
and then the reversal on inflation, they're not going to want to reverse so quickly with just one good print.
There will be cuts by the U.S. Federal Reserve at some point in the second half of the year.
They'll start cutting sometime in the first quarter of next year, and then deliver a steady set of cuts for the remainder of the year.
There's a higher probability that the Fed cuts more aggressively at some point in the future than this really sanguine view the market has.
They're trying to tell us that they're keeping all optionality open.
This might have been the week that broke the camel's back, so to speak. If you looked at the CPI and PPI headline numbers, that is consumer and producer pricing, you saw progress here on both fronts. Of course, we saw that jump up in late 2021 into 2022 in producer prices. After that promising CPI report, you had a day later those producer prices also giving the market more steam to start to change their expectations, perhaps even ahead of the Fed, in terms of how many rate cuts could be seen this year. So finally, progress really baked into the market. If you flip up the board here and look at what that translates to, this is the WIRP function on the Bloomberg terminal for the pricing of Fed rate cuts. And remember, just a week or so ago, when we saw the jobs report and the strength still seeping into the economy, a lot of concerns about when that first rate cut would be. Not only now do you have more bets on rate cuts, of course, a lot of differences in the market between that July and September and even a November cut, but certainly a lot of certainty here that we might see at least 2 by the end of this year, despite what the Fed's dot plot says. Here's what Fed Chair Jay Powell had to say about it at this week's news conference.
We think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to cuts at a certain point. Not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting.
Joining us now is Kennedy Goldberg of TD Securities and Brian Railing of Wells Fargo. And to the both of you, of course, we've seen such a huge round robin this week. Kennedy, because you have such an interesting price target here for the end of the year, can you explain where you see rates headed toward the end of the year and put that into perspective from what we're expecting out of rate cuts this year?
Yeah, so we're still expecting 2 rate cuts this year, starting in September and December. We are looking for the 10-year to finish the year at 3.9%. And I know it sounds really, really low, but just look how far we've come this week. I mean, we've already moved basically 30 basis points on the 10-year just this week alone. A couple more weeks like this, a couple of week data prints, and we'll be right there. I don't think we're as far away as a lot of people think. And it's sort of a one-way market. I mean, you saw the remarks from Jay Powell. He basically lopped off the entire right-hand side distribution of interest rates. He basically said, we're not looking to hike. It's either hold or cut. And it's, the markets are starting to move.
It's certainly some certainty. Brian, where do you see us at the end of the year for the 10-year?
We have a little bit higher range. It would look more like 4.25, 4.5. I mean, we've basically been trading this year between 380 and 470. So we're kind of in the middle there. We'll just have to see how the economy plays out. I just expect a lot more volatility here in the second half of the year than we've seen in the first half.
Well, let's talk through that volatility. Certainly, we have seen a lot of it so far this year already, and it's made it really hard for investors to find an entry point. Kennedy, how do you figure out where that entry point is today?
Looking for extremes, to be entirely honest. I mean, certainly we're looking at towards the lower end of the range. We'll see what comes out of the next data point. I mean, if we're seeing a weakening in retail sales next week, we can actually see rates extend their move. If not, we kind of back up. But I think the range has shifted. We went from kind of an upward channel in rates to a downward channel at this point. So all of the momentum, and you saw the repricing of the market in the wake of the Fed, the market didn't take that one rate cut signal to actually price out cuts this year. They priced in, they're continuing to price in over 2 cuts this year, despite the kind of the warning from the Fed to be a little cautious.
Yeah, Brian, how do you figure out how this disconnect really plays out in the market? If you look at what the Fed is saying, there are plenty of officials who will very vocally come out and say that they're not ready to call victory on inflation just yet. How do you feel about the market's propensity to push that narrative forward and see those 2 rate cuts?
Well, I mean, let's not forget the market was looking for 6 or 7 rate cuts at the beginning of this year. So, you know, the market sometimes trying to push around the Fed. I mean, there's just no urgency for the Fed here, right? Dual mandate, price stability. We're not down to their 2% inflation target. We're trending the right way, but we're still a bit away from that. And the employment market, while looking a little weaker, is still relatively close to full employment. So, and risk markets are up.
Reports
So
that
what's the
NVDA
urgency
announced
for the Fed? Now, if any of
Nematron
those
4 340B,
factors
which is a
change,
family
you know, we
of
saw a big sell-off
open
in risk
models that
markets.
developers can
We
use
saw
to generate
a
synthetic
bigger
data for
movement in
training
inflation one way or the
large
other. We
language
saw a bigger
models
rollover
for commercial
in the jobs market.
applications.
Yeah, then
That's
the
again
Fed
a
may
product
have to
announcement from
expedite
NVIDIA
things, but
in
as it
terms of
stands
training
now, you know, there's just
AI
no urgency
for
for the
commercial
Fed.
applications.
It's a new product being announced right now from NVDA. No reaction yet on the stock.
The ability to wait at this point.
You know, it's interesting at the same time, while we're seeing kind of interest rates still stay higher at this point in time, no cuts today at the very least, or no cuts in the very near term. You do see that University of Michigan sentiment data, consumer.
And this is NVDA down below. They are having a bounce right now on their, I don't know, hourly trigger, half-hour trigger, somewhere in there.
Weaken a little more than
looking for
Absolutely. I mean, if
hopefully 132.84. There's a lot of grinding going on right now. A lot of option destruction this Friday, so I don't know if we can even get there or not, but they do have a new product announced just now.
The FOMC members are starting to get a little bit concerned that this is starting to happen a little bit too quickly and wondering, well, what if this happens to spill over into the broader economy? What if in the next few months we will continue to see data soften? So, you know, we've still got 3 payroll reports, 3 CPI reports, 3 PCE reports, all ahead of the September meeting, not the July meeting. I think that's mostly a placeholder. But they will decide. I mean, I think they want to get started sooner than later because the last thing they want to do is actually overdo it on tightening. And I think that they've been very consistent about that. They'll certainly keep rates on hold. They're not rushing. There's definitely no rush. But the next couple of data points can be pretty surprising for them, especially as inflation has actually come down dramatically.
Brian, when you look at any pockets of stress in the economy, if you think about whether it's lowering consumers, for example, or pressures persistent in the real estate market as well, do you have concerns that there are parts of the economy that can turn hard enough that it would bring other parts down with it?
I mean, we've had concerns for some time. The surprising thing is that, you know, the consumer, at least the high-end consumer, has just consistently showed up. And, you know, maybe we're getting stretched. Maybe that will not continue. There's clearly stresses in especially the commercial real estate markets and other pockets of stress. As you can see in the consumer sentiment numbers, the perception out there, and probably what a lot of kind of middle to lower income consumers, they're really feeling it, but they've been feeling it for some time. It's just a matter of, you know, seeing that spill over into the job markets. If people begin to be less confident about their jobs, if they start to see, you know, their home values, you know, real estate values have held up okay for kind of households. If they start to see that fall over, they start to see their 401k go down, they'll likely get a lot more cautious. But until those things happen, you know, the continuation of what we've seen over the first 6 months of this year, you know, has the potential to continue.
You know, it's interesting, Kennedy. If you look at the forward calendar, next week is just riddled with Fed speak. There are a lot of people who are coming to the table. What will you be listening for?
Lots of divergence, I can tell you that much. I mean, there's going to be all sorts of opinions. You could see where the dots are. You know, there's some folks calling for no cuts, 1 cut, or 2 cuts. But I think at the end of the day, they're going to be focused on inflation. So, you know, we're talking a lot about things weakening on the labor market side or on the consumer side. It's really the fact that inflation has actually dramatically slowed, and it is going to continue to slow. We saw, you know, insurance prices start to turn over. OER and rents really start to come down as well. The path forward for the next few months for inflation is actually quite positive. I think a lot of them are going to tell us, if that continues, despite the fact that the economy is actually growing well, we can actually start rate cuts sooner than later. It doesn't have to be a fall off in growth. That would make us late.
Both of you, we thank you so much for your time. Happy Friday. Happy weekend to both of you. That is Kennedy Goldberg and Brian Railing. Now up next, we're going to talk about the auction block because even with an issuance slowdown this week, Burberry is making a stylish return. Details up next. This is Real Yield on Bloomberg.
needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture
and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy. From a leader in innovative solutions, PAPI, the symbol of alternative income.
Brutal. I mean, just look at that. Oh. I mean, look at that price action right there. Just like straight grinding. I mean, look at this.
There's been a lot.
Let's go to the trigger screen. It's gnarly. I mean,
and seeing what some of the
how do you even trade that?
It has to be much more than just software. So you need
look at that range and price.
You have an ecosystem.
Just gnarly.
It's causing new industrial.
Look at that range and just like 1 hour, boom, down, huge. 5 minute check back, boom, 5 minute check back. Boom below the 5 minute, boom down here, boom. Like, I don't even, spreads. That's all I can think of, spreads. Like, it's got to be a spread.
On the Fed's next move, inflation remains.
Like, that is just gnarly.
24/7 on the Bloomberg Business app. Bloomberg.
Like, how do you, I don't even know how you trade that. 5 minutes or like a 5 second chart, maybe. Futures, in, out, in, out. I mean, just look at that. Ugh.
I'm Shanali Bass.
Gross.
Bloomberg Real Yield. And it's time now for the auction block.
Just nasty. It's so gross.
To that credit issuance.
I mean, look at this. Down here.
For 1 week.
Right?
Was the slowest
What does that mean? We're going there?
sales with
And then what are we doing? Going way down there again?
Notable names included GM, Take-Two, and HPS. One sale that stood out in the UK was Bourbon.
Just like straight grinding. I don't even know. I don't know what all that is. That's just gnarly.
£300 million, 16 nominated offering.
Gnarly.
More than 990 pounds of orders. In sovereigns, both the 10-year and the 30-year.
Just straight that's just straight gnarly.
The bid to cover ratio is the highest at a 10-year reopening.
Yeah, dude. That's such gross price action.
Sees this opportunity still brewing in credit.
It's like a cockeyed diddle in the middle, right?
Yield buyers are winning, right? Anytime you see a backup in yields, a little bit of widening in spreads, people get back in because they say, hey, investment grade at 5.5%, 6%. Historically, that's a home run. High yield at 8%, historically, that's a great bet. We're looking for a little bit of volatility on the credit side of things as the adjustment to expecting rates to be a little bit higher for a little bit longer hasn't really played through in those highly leveraged, lower rated capital structures in the broadly syndicated loan market as well. In the IG market, we still like taking credit risk. We're fine going down to double Bs, even in the high yield market, but duration here looks really attractive.
And joining us now is Andrea DiCenzo, co-portfolio manager at Loomis Sales, and Mike Best, high yield portfolio manager at Barings. And what a week to talk about high yield in particular, because you're seeing people really put on more of that risk appetite after that expectation for rate cuts. The search for yields, Mike, how far does it go?
It's a great question, and I think with spreads being, certainly for double Bs and single B rated credit, are approaching all-time tights, and in some cases through them. I think investors are looking at more than just a spread metric to sort of evaluate high yield. I think as maybe some of the previous comments had highlighted, duration is quite short in the high yield bond market relative to historical levels. Prices are at discounts, and so every time there's sort of any sort of backup in macroeconomic data or what have you, there's buyers that step in pretty easily. But there are stresses out there in the lower end of the market, and certainly want to be, cognizant of those. And, our general expectation is the triple C's and some of the lower rated and lower distressed names in leveraged loan land will struggle to rally in this market just because fundamentals aren't going to support them really rallying.
Right. If you look at how much money has been pouring in, Andrea, do you think that the returns are really justifying what you're getting for the risk that you're taking on, especially where spreads have been lately?
No, I think he's hitting the nail on the head here. When you think about the backdrop that's really played towards those lower quality securities outperforming, it's been a low volatility backdrop. Now, that is still consistently the case across most asset classes, but where are we seeing vol pickup? The currency market, the rate market, as we've sort of shifted the narrative from concerns about inflation towards concerns about growth. And that certainly will disrupt the return profile of those lower quality tiers of the leveraged loan market as well as the high yield market.
Well, let's go into some of those riskier parts. I think leveraged loans, Andrea, is one of the more exciting parts of the market right now because you feel issuers just coming to market for all sorts of different reasons. You see the banks pushing it too, but are there buyers on the other end?
So far to date, there certainly have been buyers, but I think as we start to see perhaps more than one as the Fed, more than one cut as the Fed has put out in the marketplace as of this week, the market's already pricing in 2 cuts. Should we get more concerned about growth and start to see 3 cuts potentially priced in, I think you'll start to see investors move towards the door in that floating rate market for duration assets at that point.
Now, it's interesting, Mike, you alluded to troubles brewing under the surface in some areas. Where are you seeing those stresses starting to materialize, and where are you watching for more stresses to come to the surface in the future?
Yeah, I'll tackle the first one, which is where are we seeing them right now? Right now, we are generally speaking seeing stresses come up in less cyclical sectors than people are expecting. And the reason for that is in most cases, cable media, telecoms tends to be the really hot sector for distresses and default type scenarios right now. And what investors are seeing in those credits, fundamentally, they're not able to grow at a really fast clip right now. And by the way, as it's been alluded to, interest costs rising for them are really eroding free cash flow. So as they sort of tackle a changing media, a changing technology, and a changing cable backdrop, they're having a much harder time dealing with those stresses, and fundamentals are deteriorating there.
Where do you worry the most? Yeah, go ahead, Mike.
Yeah, I was going to say what we're looking for is where are the new stresses going to emerge. So those names are already trading in some of those sectors quite wide. If you exclude them from the high yield bond market spreads, for example, you can generally speaking subtract 30 or 40 basis points off of the OAS of the benchmark if you want to. And so it's priced in largely, I think, in that sector already, but new sectors that we're getting, I think, concerns about or looking for concerns about are things that are generally speaking consumer driven, because as obviously all the data is showing, inflation is still running pretty hot. The lower end consumer is eventually going to have problems where they're not going to be able to continue to spend at the levels they have. And so we're looking for more stresses in those types of sectors right now.
Now, the consumer point is a great one. I think, Andrea, a lot of people have a lot of concerns about anything that is consumer sensitive, particularly to lower and middle income consumers. How big of a ripple effect is there here in that consumer sentiment weakening, as you saw from the University of Michigan data today? Where do you think those concerns will start to ripple into credit markets?
Well, I definitely think it's the probably top priority to be watching the consumer. Now, what we're watching very closely is that unemployment rate. As we've already seen it tick up a bit, if we start to see it grind closer to 4.2%, that's really going to hit more than just the middle to low income consumer. But they are not the individuals driving consumer spending in the US economy. It tends to be the top of that income distribution. Once you start to approach that 4.2% unemployment rate, it's expected to start to see those upper income consumers change their spending profiles, grow more concerned about their own job outlooks. And that might be the catalyst to start to see high yield, leveraged loan markets really begin to underperform, as we believe that bid is going to go very quickly back towards the traditional safe haven of more duration, higher quality. And that tends to be the portfolio that works as you are this phase of end of cycle.
Now, what do you think, Mike, is the best opportunity out there? You're putting new money to work tomorrow. Where do you put it?
Yeah, right now, I think where we're putting new money to work is in a mixture of two things. On the high yield bond side, we're continuing to favor shorter duration yield to call or yield to event types of bonds, because we're not trying to introduce new risk into portfolios. To Hunter's point, just a second ago, that the economy could roll over, and I think some of those sectors could be disadvantageously underperforming, so to speak. On the leverage loan side, we are specifically up in quality, and I mean up in quality in terms of the higher single B portion of the market. We are avoiding, generally speaking, adding new risk to the portfolio in distressed and discounted names. There aren't that many discounted names really in the loan market right now at all, but overall, we're sort of, I think, more or less positioning up in quality in that sector, and in businesses and in sectors that are really stable, and industrials, chemicals, some of those sectors are where we're finding just better opportunities overall than away from consumer, media, telecom, those things.
Andrea, about 30 seconds left here. Favorite trade?
Sure. I think the sweet spot right now, given the current backdrop, is really that triple B to double B space across investment grade and high yield markets. Mike just hit the nail on the head thinking about where to be positioned in the leveraged loan market. We also like up in quality, but we would begin to pare back some of our floating rate exposure in our portfolios in favor for more duration sensitive exposure. But I think in the triple B space, you're able to find some bonds trading at discounts where you have that convexity at your favor should we start pricing in more cuts from here.
Andrea DiCenzo and Mike Best, we thank you both for your time. Of course, a complicated time in markets, but that is, of course, what makes a market. Still ahead, the final spread, the week ahead. It's a big week ahead. A host of Fed speak in the pipeline. We'll talk about all about it next. This is Real Yield on Bloomberg.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy. From a leader in innovative solutions, PAPI, the symbol of alternative income.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
I'm Shanali Bassick, and this is Bloomberg Real Yield. It's time now for the final spread the week ahead. As we've been saying, it's been a busy week ahead of us right now. We have Philadelphia Fed President Patrick Harker kicking off a busy week of Fed speak, and of course, some critical economic data still ahead. U.S. investors are looking to retail sales for clues on the health of the consumer by Tuesday. Wednesday, of course, markets are closed for Juneteenth, and Thursday, more central bank decisions from the SNB, BOE, and Norges Bank. And finally, Friday, global manufacturing PMIs and an S&P 500 rebalancing. And the final thought on all that Fed speak set for next week, we have Patrick Harker, as we've been talking about, Susan Collins, and many others throughout the entire week. We've been talking about it with our guests. It's that divergence that many will be looking for here on just how they feel about the future of this economy over the next year as they look to make that first rate cut, if not a second, as the market would also like. From New York, that does it from us this week. Same time, same place next week. This was Bloomberg Real Yield, and this is Bloomberg.
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations.
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
7, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment,
so important. You can have strong fundamentals, strong earnings, free cash flow, but if there's no buyers, it's not going to go higher. I think that people think this is somewhat of a commodity. And so I think the Apple news just puts another, nail in that coffin, that people view this business as commoditized. I mean, it's cheap, but I don't want to buy a name that I think that no one else is buying, because ultimately flows are what make a stock go higher.
Okay. Let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hunter Biden will drop his lawsuit against Rudy Giuliani and Giuliani's former lawyer, Robert Costello, according to a court filing Thursday. The lawsuit alleged that both men violated computer fraud and data access laws by manipulating data from Biden's devices or storage platforms. A judge still needs to review before the agreement is finalized. In a blow to protections for transgender students, a federal judge temporarily blocked the Biden administration's Title IX rule in 4 states. The judge found the rule overstepped the Education Department's authority, calling it an abuse of power. The rules are set to take effect in August and would require schools to allow transgender students to use bathrooms and locker rooms that align with their gender identity. And millions of residents remain under a flood watch today across South Florida. The area has seen 4 straight days of historic rainfall, some receiving up to 18 to 25 inches that left entire neighborhoods underwater and forced flight cancellations at airports. But there is respite coming, with rain forecasts subsiding over the weekend. Scott?
Thank you, Pippa Stevens. Up next, stock split science. Bob Pisani on what really happens to a share price when a stock splits, and who could be next. Halftime's back. Just 2.
Dude, this price action is fucking nar.
Splits. They're booming with NVDA, Broadcom.
Dude, woof.
Announcing splits this year.
Woof.
To a stock when it does split, and who could be next?
Gnarly.
Of course, with our stock.
Gnarly price action.
Tell us, Bob.
Good to see you, Scott. You know, this whole
gnarly price action right now.
Stock split way back in January, and from there it picked up steam. Remember yesterday, Williamson.
This is what happens with suppressed volatility.
Wednesday, of course, broad.
This is what the gamma looks good today. It looks like it's loosening up, but this price action is suppressed vol. There ain't no other way to call it. Even if the gamma picture is improving, it's brutal.
But after
fucking brutal. That's brutal ass price action right there.
After the great financial crisis, that was, remember, 2008, 2009.
Shit. I mean, this is the S&P 500. I mean, this is the most liquid.
So the reason
liquid, you know, if you had like like most liquid product in the market is this one.
Investors invest by dollar value, not by share price. But recently, there's some signs.
It ain't doing shit. Everybody's off. Everybody took a vacation. 3-day weekends, partying up on the Hamptons.
Over $10,000.
Doing blow with Billy Joel, baby. We're popping that collar. Psh, driving a Porsche. Top down. Crash into a stop sign on a 3-way corner.
So here's a big question. The splitting of
no, SVIX. You out of your mind, Christopher Ferry?
The value of the company remains the same. It's not that
SVIX.
very subtle changes in trading.
Next, you'll be asking me to look up fucking UVXY and asking me what I think's going to happen there. I'm just kidding.
That means you could trade the stock without moving the price.
SVIX getting murdered.
Shareholder basis. So all of this, they have a subtle but beneficial.
Grinding, baby. There's SVIX. I got it up for you.
It's out there. But here's the these companies with the retail
coming into its daily trigger right now and looking for some support here.
Appeal to retail investors. That's obvious.
On 45.37 on SVIX. Looks like it's bottoming right now.
But they're there. Booking Holdings, for example, AutoZone, and Deckers Outdoors. There's three obvious.
Fucking SVIX savages.
High-price stocks with a retail focus. There could be candidates.
I'm gonna buy the dip right here in this SVIX right now. SVIX is bearish.
A lot of companies.
It's bearish right now. I don't know if you know that, but it's about to get sent down to the depths of hell. Just so you know, it really is. I would expect.
Spotify's 300.
I would expect a little bit of a squeeze here, but
I see a subtle shift. I have
sell 47, and I would easily. I'm not joking. I really think it's gonna go to.
Yeah, good stuff, Bob. I appreciate that report.
It'll go here to 43, but I would expect it to go all the way down to $40. Price target. I'm serious.
To be able to sell.
I'm not joking. Dude, I want to tell you guys something here. I want to tell you guys something very important, okay?
To write a call on half of the position.
I want to tell you guys something very important here. We don't have that many sessions left. And this market, the way that it's structured right now, looks like it's going to go to the fucking moon. Like, I mean moon. Like June and July. You might get a brief moment. You might get some weakness. I would suspect. My suspicion here would be we're going to magnet 55.60 into OPEX. So you might get some weakness on VIXpiration, but I doubt it. I think they're going to murder the VIX. You might come back down, though, for end of month. So maybe June 24th. This fucking market in July is going to fucking continue to moon. I'm serious. Everybody is long. Everybody. Every participant is long right now. And I mean every participant. I don't care what they tell you. They're all fucking long. This is what suppressed vol looks like. This is what it looks like when everybody's long. Like everybody's long. Everybody's long. Everybody's hedged. And we just grind. It's brutal. It really is. Brutal price action. OPEX is next week. I think we squeeze all the way up to 55.60 into OPEX, and then we might bring it back, maybe even 55.70. We might go above it, right? And then come back, float back down into end of month. That VIX is going to get murdered, dude. Like, VIX is going to get, not destroyed. It's going to be suppressed the whole way as we grind up there. It's like a giant fucking magnet. It's gross. And then a move overnight one day. Like big move one day, 2 week out options, 1 month options. I'm serious. Like it is fucking brutal right now. I mean, dude, I spoke to professionals yesterday that were like professional traders, trade the market week in, week out. They were like, I can't do anything here. They were like, I don't know what to say to you. There's no pullbacks. I'm like, are you long this stuff with size? They're like, fuck no. Like, fuck no. I'm missing the whole trade. I mean, I'm checking with pairs like, hey, can you guys help me out here? And they got nothing for me. Trade, I get some of the recommendations I got were the same we talked about yesterday. Trade futures for scalps, spreads, month out, sell options and trade futures. Short dated options buying, no go. Fucking no go. Straight up no go. Don't do it. Do not do it. And even then, like single options owning for a week or two, I wouldn't recommend even that. Spreads is the only way. Spread or lots of time on your shit, like months. A single contract, 1, 2 months, 3 months. That's it. This reminds me of old school trading. Place a trade, come back in 2 weeks. You buy like a month out option, 3 month out option. You come back in 2-3 weeks, collect your 30%, you're done. It's that kind of trading. Yeah, I know it's short VIX, but it's coming. It's bearish. It's bearish. It's bearish. It's futures too, right? Yeah, it's SVIX is futures, short VIX futures. VIX does not correlate to the market. How long did it take you to get into a comfortable place? 5 to 10 years. Somewhere in there. 5 to 10 years. Just fucking, like the VIX is, the SVIX, UVXY, all broken. VIX broken right now. VIX is broken. It's broken. It's literally broken right now. All broke. You'll get the volatility, you just won't get the price movement. It's going to grind. Bitcoin is crashing. Is it really crashing? Do I have to look at it? I post it, don't I, every day? Do I really? I'll look at it if you want me to. I don't want to look at Bitcoin, but I will. Bitcoin. BTC. Oh, yeah, crashing. Oh, no, that's the wrong one. Wrong Bitcoin. Hold on here. Bitcoin's crashing. That doesn't look like crashing to me. That doesn't look like crashing to me. I will say this. on Bitcoin. What did they say? What did they give you for a price target up here? Was 80? What did the pumpers give you? 84,000 or something, or 80,000? I had it at 74,000. Exactly. That's exactly, Mr. Talking Monkey. It's crashing. The Bitcoin bros. Remember they had that like meme guy was on Bitcoin doing like the boot camp saying that it was going to go to 80,000 or something. I think I had 74,000 that they were going to sell into the pumpers were going to sell into them. And we traded a high of 73.95.1. So that was pretty fucking close. This is the Bitcoin bro target up here of 80,000. Will we go to 80,000? Yes, we will. We will go to 80,000, but that original target those pumpers gave, 74 was the way. Consolidating. That's all it looks like. Buy the dip at buy the dip at 60,000. That's all I can say on it. Buy the dip at 60. Buy the dip at 60,000. That's it. Is it going to go higher than 80? Yeah. It will. Will it hit 100,000? Yeah, it will. What I find about Bitcoin, or for me for Bitcoin, I think we're transitioning into this phase where I think we had like the Wild West effect, and then we had the Wild West effect, and then we had banks telling you it's a scam, and then fear of regulation was there. And tell me if I'm wrong in this. It feels like the last 6 months, there's been some acceptance of Bitcoin being legitimate-ish. Not really legitimate, but legitimate-ish. Or legitimized-ish from the government and banks. You getting that vibe too or no? Any of you guys getting that vibe out there about Bitcoin? Anyways, regardless. Bitcoin not crashing, consolidation. That's it. That's all I can tell you about Bitcoin. Will it hit 80,000? Sure. Yeah, that's what I think too. They're legitimizing it. They want to own it. Agreed. 100%. They want to own it. 100%. Anything around 60,000 on Bitcoin buy for a move to 80,000. I really wonder if this market like just straight fucking melts. Like just straight melts. You guys saw that you guys saw my trend line heading to 6,000 end of year, right? Just like a grind sideways all the way up, just floating into the end of the year.
Today.
I'll be right back with you guys.
Senior markets commentator Mike Santoli here at Post 9 for his midday word. You feel like the market is really fixated on this 3 cuts to 1 cut and the summary of economic projections. That's sort of leading the day from the Fed meeting forward.
I think there's a little bit of a hangover from that, mainly I think in muddying to some degree the Fed's reaction function to whatever data we get. I don't think that it really repriced the market in any dramatic way. I think it just sapped conviction from exactly how the Fed might react as things come through. And the fact that we've gotten really friendly inflation numbers, and it seems like, well, did that really get incorporated into the dot plot? I mean, it's crazy the minutia we have to kind of get our hands dirty with to figure out exactly what they meant to say and what the implications are. All that being said, I still am struck by the story of the last couple of weeks, which is yields down a lot, the rest of the market besides mega cap not really being able to seize on it. You have a kind of stretched S&P 500 modestly relative to the trend, and yet below the surface, everything is kind of falling away. It's the only conversation anyone's having about this market, which is Brett's not confirming, it's too narrow, you have this real kind of fixation on one part of the market and not others. I almost wonder if we're finally coming all the way full circle on that and saying people are too bearish because most stocks aren't working. You'd expect to be at all-time highs and have people be really giddy, and they're not.
Yeah, no, good points. We'll expand on that when I see you at 3 o'clock on Closing Bell. That's Mike Santoli. Up next, Rooney's Risk Roundup. Kate Rooney is live at Post 9 with us. She's going to break down the big week for Bitcoin. Of course, the latest in the GameStop saga as well. Stick around. We're coming right back.
So just under 10 minutes time now at the top of the hour. We see the release of the weekly Baker Hughes rig count numbers. Oil rigs, the prior was 492. Total rigs prior, 594.
Welcome back. Kate Rooney has joined us now at Post 9. We're calling this Rooney's Risk Roundup. Do you like that?
You heard it here first.
I mean, you cover a couple of critical areas here, right?
Yeah.
Bitcoin's on pace for its worst week since April 19th. So let's start there.
Yeah, well, let's start with crypto. I mean, you guys were talking about the NASDAQ earlier having such a blowout week. You would think that Bitcoin has had this tight correlation with tech stocks. You haven't seen that reflected. So folks I've been talking to are talking about kind of the mechanics here. There is this basis trade going on where traders out there will buy the ETFs that launched in January and then sell futures and are trying to kind of capture that arbitrage and that spread. So that's one of the mechanics of kind of keeping a lid on prices there. And then you've got dollar strength. So a lot of the institutional Bitcoin traders are actually macro funds. They're not necessarily the tech funds out there. So you're not necessarily seeing the overlap and the positive effect that the NASDAQ is getting. So dollar strength equals Bitcoin weakness. That's kind of the mechanics behind this. Although you are seeing Ether outperform. There was some news yesterday. Gary Gensler kind of put a timeline on the official approval of ETFs. So you're seeing kind of that price being front run a little bit.
All right, so we were over 70 for Bitcoin. Now we're back at 65. And now we have more GameStop news as well to discuss.
Speaking of risk.
Yes, exactly. That's why we wanted you to do this.
Yeah, exactly.
What do you tell us here?
Yeah, so Keith Gill, Roaring Kitty, as I'm sure we've all talked about, we know that name well, appears to have increased his position in GameStop. That, what we think, is based on selling call options. So again, this is based on a screenshot that he's putting onto Reddit, so we haven't verified it. But his position as a whole has increased to 9 million shares from 5 million shares. So the going theory, and folks I'm talking to say, it does look like he sold 120,000 shares worth of call options. So in order to fund that trade, he had to sell call options. The expiration date was next week. That appears to be what's going on here. You're seeing a lot of other pockets, in the meme stock area. It's not just GameStop. Obviously, that is the big one that we talk about, and Keith Gill is sort of driving that, but you're seeing the spillover effect even into penny stocks, some of these micro cap names that, we are not necessarily talking about on CNBC, but as a whole, penny stocks are having a moment. So talk about a sign of risk taking. There is just a lot of froth out there. There are definitely traders out there, individual retail investors that are looking to these pockets of the market to put on some risk, and then also you've got the hedge funds getting in, kind of chasing that retail sentiment.
Yeah, interesting. Thank you for that.
Thanks,
Kate Rooney. It's good to see you here at Post 9. We'll step away. We'll do final trades next.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Shortly expecting results from the Baker Hughes rig count.
We'll see on Closing Bell, 3 o'clock Eastern, with Shannon Sakosha, Josh Brown, Dan Greenhouse, and John Spallanzani. Finish out the week. Take it right to the finish today, and I hope you'll join me for that. Bryn, what's your final trade?
This is my don't get greedy trade. You can buy NVDA, sell the October 146 strikes, and collect 7.6% for less than 4 months.
Okay, thank you. Farmer Jim.
Vertex, this is just an obvious biopharma with a great chart and great science behind it.
Kevin Simpson.
ConocoPhillips, I think Bank of America got it right today. The acquisition of Marathon Oil will be aggregate over time, and you get paid while you wait.
Okay, thank you for that. Thanks for being here. Rob Sechin.
AbbVie, attractive valuation, wonderful pipeline, and a great yield.
All right, we have come way off the lows for stocks. Dow's only down about 72, was down more than 300 earlier. S&P 500 trying to do the same, and we're watching the NASDAQ, of course, and Apple. Best week in a long time. NASDAQ 100's positive. NVDA is in the green. See how it finishes. And I'll see you at 3 o'clock on the closing bell. The exchange is now.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead. The Fed's Loretta Mester says it's important not to wait too long to cut rates. But one of our guests says the bifurcation she's seeing in the economy all but guarantees will be higher for longer. And she's here to make her case. Plus, investors dumped value and bought growth stocks last week, echoing, a decade-long trade. But our market guest is sticking with the value trade. He's bringing names.
I don't see any reason for put mafia today. S&P 500 is down on the day, basically.
And from rate
we'd have to be up pretty high for the put mafia to come out, I think.
to offer heavy incentives.
Normally, put mafia only comes out on big up days.
Gone too far.
They don't come out to play if we're down on the day or flat.
So let's start with today's markets. And Bob Bassani for the latest. Bob, what are you seeing?
Well, Kelly, we are off of the lows of the day, but not by much. And the Dow is again lagging. And this is really a very persistent trend that we've seen in the last week or so. Let's take a look at the major indexes. Again, maybe 6 points off of the lows for the Dow Jones Industrial Average, for the S&P 500. I mean, and we've been moving up much more notably on the Dow Industrials. We were down several hundred points and coming off of that. But again, you see that the Dow is lagging. Lagging the NASDAQ, lagging the S&P 500, and this is because the Dow doesn't have as much technology in it as the S&P and the NASDAQ, and that's really what's been moving. Let's just show you the sectors here, because what's shocking this week is the rather poor breadth. After a tremendous March and April and largely May, breadth has been decidedly kind of crummy in the last couple of weeks. It's 4-1 declining to advancing stocks here at the New York Stock Exchange today. Declining bond yields, they're good for the market generally, but not for everything. So that puts pressure on commodity stocks, puts pressure on energy stocks. Even consumer staple stocks don't have as much pricing power. They've been rather poor, although they've done a little bit better today, as you can see. And bank stocks, well, they've had a tough time for a number of weeks here. Tech today, big cap tech doing okay. Most of the major names are up. Apple's down about 1%. Meta and Amazon are down a little bit, but overall, this is still a tech-driven market, as you can see. And of course, a lot of talk about stock splits, Broadcom, NVIDIA, all involved in that. Consumer staples are finally bouncing. They have just had a lousy year, a lousy month, frankly, but they're doing a little bit better today. And again, this goes to this growth and pricing pressures. When you have deflation, much more difficult to raise prices. There's been some pushback on higher prices, even in the restaurant business, where value meals are sort of making a comeback. Also not doing, having a tough time today. The worst performers on the S&P 500 are the cruise lines. Carnival, Norwegian. There was some comments, analyst comments here today that based on cruise prices in early June, there was modestly softer pricing. And these stocks have had some run-ups. They've been up and down, but some run-ups recently. You can see the effect that's having on them today. Finally, just on industrials, which were really big darlings for months on end, particularly towards the end of last year. Dover, Eaton, Ingersoll Rand, all big, even quasi-AI plays have been weak recently, and there's some very modest growth concerns around these. So a lot swirling here. There is the overall, Kelly, AI paradigm that is powering the stock market, but below that, you have issues of what the implications are for deflation, as well as the implications for somewhat slower growth. Back to you.
Absolutely, Bob. Thank you. We appreciate it, Bob Pisani. Now, outgoing Cleveland Fed president and FOMC voter Loretta Mester is wrapping up a nearly 40-year career at the Fed, but not before sitting down one last time with our Steve Leisman to share some interesting thoughts about the Fed's path forward. And Steve is here with those highlights.
I'm glad Bob did the bad news, because I'm going to do the good news. It was a good week, Kelly, if you were if you were an inflation dove, and if you're a U.S. bondholder and you're long. This morning, import prices provided the third better than expected inflation report this week in a row. And outgoing Fed President Loretta Mester sitting down with us in a first on CNBC interview. She welcomed the progress.
We've been working hard to get inflation down. We've been restrictive on our monetary policy. We've seen really good progress over the last couple of years on inflation. We're not there yet, but you have to look at the whole, group of data and be happy that we're starting to see inflation move back down again after stalling a bit in the first part of the year.
Her comments came after import prices surprised to the downside, and Messer suggested rate cuts could come before the Fed hits that 2% inflation target. It has been a very volatile 7 days in the bond market. Look at this chart here. Two-year yield note. It surges a week ago on the strong jobs number, falls sharply Wednesday. That's in the middle of your screen there on the good CPI number, comes back on the hawkish Fed in the afternoon. Then yields plunge again with the negative wholesale inflation report. We're down 21 basis points in case you're keeping score there. For the week, at least. Markets, they still think July is too soon for the Fed to cut, just a 14% probability there, but they've become increasingly confident in September after the inflation data this week, raising the cut probability to 71%, 20 points higher than after the Friday jobs report. And then you can see the probability of two cuts this year, now trading at 76%. Mester retires at the end of this month, a 10-year tenure as Cleveland Fed president, 39 years overall at the Fed. She said the good inflation data, good way to go out, but she still said she would see a few more months of better data if she were to cut. She'll be gone. The question is whether or not Beth Hammack, her replacement, takes office July 1, if she has the same opinion.
Bond expert, if I'm not mistaken, Beth.
Bond expert, internal financial plumbing expert.
Even better.
I don't know if she can fix the leak in my under my kitchen sink, but I think she could fix a leak in the financial system.
That's probably, I don't want to say this, but it's probably more important. So I think we'll take that at this point.
I don't know. That leak is real pain.
Depends on whose house.
But the question is, I mean, she helped guide Goldman, I think, through the worst of times in 08 and 09.
Well, we'll see what that expertise does bring to bear. Steve, stick around. Our next guest says the bifurcation in the economy right now will keep inflation and rates higher for longer, and says a soft landing is off the table, folks. Let's bring in Nancy Lazar. She's chief global economist at Piper Sandler. Nancy, it's good to see you.
Nice to see you. Thank you.
Where do you think we should start? What's been the most significant development in your mind in markets over the past week and the economy?
Well, certainly we did have a good month, good track of inflation readings this week, the three that Steve just mentioned. And the question is, why are we seeing this low in inflation readings? And 1 month, by the way, doesn't make a trend. I would agree. We need to see several more months. We would highlight that you are squeezing significantly the low-end consumer. You are starting to squeeze the middle-income consumer. If you look at the University of Michigan Consumer Sentiment Survey that came out this morning for the first part of June,
it was bad.
Middle-income, it's very bad. But importantly, it's the three pieces that were bad. Both the low-end and middle-income consumer confidence dropped sharply and are in recession territory. So that comes back and helps explain why you're seeing weakness in retail sales. There's a huge debate right now that higher interest rates are helping consumer spending, but then why are retail sales flat? Retail sales have been flat all year. Now, you are seeing strength in consumer spending on services, and maybe that is that upper income consumer that's doing that. But on balance, you are starting to see the economy deteriorate, and the question is why.
So, Nancy, before we dive into that, just a moment on the consumer sentiment. Mark Zandi was on the other day, and he said you can't trust University of Michigan. He called it a flawed survey. Says the Conference Board has been more around the 100 number that's its average, his long-term running historical average. Do you think there's just something fluky, whether it's politics or something else going on?
I just want to insert before Nancy answers. There's been a change in the methodology at Michigan that raises some questions about the last 3 months. They've gone increasingly to a web-based source rather than a cell phone-based source.
Interesting.
It's a reason just to be a little careful, but I don't think, as Nancy's saying, it's a reason to discard a potential signal it may be sending. Pardon me for interrupting, Nancy.
No, that's okay. I mean, they said in their release this morning that indeed they tested both web-based and their normal way, and they have the same conclusions. So
okay, I didn't see that.
Steve,
good for them that they did that.
Exactly. There are different surveys. The University of Michigan is heavily focused on prices, on inflation. Conference Board is much more so on jobs. We're not in a recession right now, but what the U of Mich survey is telling us, quite frankly, is why the administration is having such a hard time. Price levels are very elevated, and that's squeezing that lower and middle income consumer. Indeed, inflation expectations in this report still remain somewhat elevated. And if you ask consumers, the reason your personal finances are getting hit is because of high price levels. Yes, it's very, very, very high as it was in the late 70s, early 80s, when we know the rate of inflation.
And
So
your colleague Jake was on earlier this week, and look, he points out we are talking about levels, but even if you talk about price increases, the needs-based increase is running at a 6% year-on-year average versus 0 for discretionary. So let's pivot and talk about if you do think this is pointing towards an economic downturn. I'll give you another devil's
At
argument for it.
1:15 p.m. Eastern Time,
Dean
we
Mackey was
expect
on yesterday
comments from
saying
Fed's
consumer
Mester,
balance
who's
sheets are
interviewed
still
on
in good
Bloomberg
shape, and he
Television.
doesn't think that that's going to be the kind of thing where we see a very near-term downturn as a result of that.
So our theme is the economy's been bifurcated. And when you have a bifurcated economy, at the end of the day, you keep inflation and interest rates higher for longer because those areas of strength, high income consumers, what's going on in AI, keep capital spending stronger for longer, again, keeps the economy moving ahead. But we've had 2 times in the past when we've had bifurcation, 1979 and 2006, 2007. And so these periods of high rates, high inflation squeeze that lower income consumer. Now we would argue that middle income consumer. And we know both of those ended poorly. We're not talking anything as extreme as that. But our base case is we will have a recession. It's been bifurcated up to now, but our base case is we'll have a recession, but not until the 4th quarter. Conference Board is telling you right now we're not in a recession. Classically, once you go into a recession, both Conference Board and U of Mich go down. And I would agree, right now we're not, but there are growing signs. We're deteriorating. If you look at unemployment claims, the unemployment rate, the work week, et cetera, there are plenty of signs that the consumer's getting squeezed, which is why retail sales have been flat.
I am not going to make the following points only because it's the weekend and I want to go out on a good note. But I would point out, Nancy, and I'm sure you have an answer for this. I don't know if we have time for it, but A, we are approaching, I believe, come June or July, a full year of wages running stronger than inflation.
Nice.
So real wages have been rising. There's also a bit of data that shows those on the low end of the income spectrum have actually done better in this go round in terms of the cycle on wages than those at higher ends of the spectrum. So all of that. Now, of course, if that were the final determinative factor, then we would never have a recession. So, I mean, but I'm just saying there is some, what do you want to say, runway, it would appear. People are downbeat, and we did a lot of work on this, Kelly. Even though they're downbeat like it's a recession and that's where their sentiment is, their spending has been relatively upbeat. Now, we will get the retail sales next week, and our CNBC NRF monitor, admittedly it is new, showed a pretty good bounce back in April.
I remember that, yeah.
We will see if that's the case, and I'll be the first to say, look, we need to be careful about this because it's a relatively new indicator, but it is using actual spending data.
Nancy, a haiku-esque last word?
Well, I would look at real retail sales. Again, they've been flat January, February, March, April, same level. Unit auto sales have been flat, sub 16 million units for over a year. If you look at company news, our economic data are obviously company data. If you look at Signet and RH, and I have a whole bunch of companies that are saying, ouch, they're seeing weaker unit sales, and they're seeing, Signet anyway, said they were going to see declining prices. And so right now the economy is bifurcated. There are areas of strength, particularly on the AI side, but we do see things deteriorating as we go into the end of the year.
More, would you say a sonnet? Or maybe more of a Shakespearean, you know, what do we call it?
It was economic poetry to me. I read Nancy all the time. They have a great shop over there at Piper Sandler. One of their guys just went over to the New York Fed, so they're people to take seriously.
All right. Nancy, thank you so much. We appreciate it today. And Steve Leisman, have a great weekend.
Nancy for 20 years, I think.
Despite the Fed's mantra of higher for longer, investors are still betting on cuts. According to BofA Global Research, growth stock funds saw inflows of nearly $2 billion this week, while value funds saw the opposite, outflows of 2.6. Growth traditionally outperforms value in a low-rate environment. That's exactly what happened after the softer-than-expected CPI data renewed rate cut hopes this year. The S&P Value Index falling, while the growth index is up about 2%
comments
since
from
Wednesday.
Fed's Mester.
My next guest is still sticking with value, but says the Fed has to start easing now now, let's bring in Vahan Janjigian. He's Chief Investment Officer at Greenwich Wealth Management. It's great to have you back. Welcome. How are you?
Thanks, Kelly. It's great to see you again. Thanks for having me back.
I wanted to kind of wave the red meat at the bull here a little bit by quoting the declines in value. Michael Kantrowitz was pointing out earlier this week that value factors have done quite poorly. But if you define value as really quality, that quality is outperforming more than ever. So anyway, the podium is yours.
Well, I think we're in a market that's dominated by momentum. And we're seeing the stocks that are going up continue to go up, whereas the stocks that are not going up are not doing anything. And right now, the market is really being dominated by a small handful of stocks, especially NVIDIA. You know, it's very hard to find a market index that does not include NVIDIA that has done better than the QQQ, for
Shortly
example.
expecting the results of the Fed reverse repo operation.
This is a difficult market for value investors. But, you know, you mentioned a decline in interest rates being good for growth stocks. I think a decline in interest rates would also be good for dividend-paying stocks because it makes the present value of those future expected dividends greater, and it also makes them more competitive against bonds.
So is NVIDIA a value stock?
I don't think so. It was a value stock at one point. In fact, in 2022, I was a buyer of NVIDIA because I concluded it was undervalued. And I not only bought NVIDIA, I also bought Google and Amazon and Meta. Those three stocks I've held on to because they're no longer, I mean, they're still a good value in my opinion. NVIDIA, however, appears to me to be very overvalued, especially on a price to sales basis. And, you know, the other reason I sold NVIDIA is because I have a lot of exposure to ETFs, including
68
SMH,
counterparties take
QQQ,
$386.885 billion at the Fed reverse repo
So
operation.
even though I sold the stock, I still have a lot of exposure to it.
So why, and maybe I'm overstating, Vahan, I think of you as a value guy, but maybe that's putting it too strongly. I was going to ask why you have exposure to the triple Qs. That's like the ultimate, it's not meme stock territory, but that's close.
Okay, because I'm not roaring kitty. I don't put all my money in one stock. I want diversification. I want to have exposure to all sectors in all industries. So I own QQQ, I own SPY, I own DIA, and I also own SMH. And I also own a bunch of other ETFs, and I also own individual stocks in other areas. So I'm a financial advisor. I have to manage money responsibly. I can't give my clients too much exposure to one stock.
Yeah, and so that's what brings us to some of those individual names you mentioned, which now people go, you know, IBM, Verizon,
Fed semester says
Pfizer,
there's still work to do to gain confidence in inflation.
Yeah, these are stocks that are out of favor, and I like to buy things that are cheap. And if nobody wants them, I get interested. You know, all three of these stocks, by the way, pay very generous dividends, and all three of them have been increasing the dividend every single year for a long period of time. So, you know, eventually I think they will come back in favor. You know, these are not the kinds of stocks that are going to double in value every time you blink, but I think they'll do well over the long term.
Kind of a quirky last question for you. Michael Hartnett at B of A was out with a note this weekend talking about what he's calling the cash bubble. And we were just talking about this divide between how consumers feel about the economy and their ability still to spend, generally speaking. Is there, and the Journal had an article about this recently as well, that Americans are making a lot of money off of their cash. And I'm just curious, that dynamic, people say, oh, there's $7 trillion over the number of cash on the sidelines. Well, is that cash happy to be on the sidelines and you know, compounding in value? Just your thoughts on that.
Yeah, and I'm one of those people. I do have client money in treasury bills, in short-term treasury bills. I mean, if you have a situation where you can get well over 5% on bills that are 1 year or lower, you should take advantage of that. Now, of course, not everybody's making money on this because there are a lot of Americans who don't have cash available. But those that do are sitting back and generating quite a bit of income from those treasury bills right now.
Yeah, and I just think it's a significant part of what's going on here. Vahan, always a pleasure. Thank you for your time today. Have a great weekend.
Thank you, Kelly.
Vahan Janjigian.
Fed
Coming up,
semester
EV
says,
makers are in the midst of a brutal pricing battle,
data.
and it could reshape the auto industry sooner than you think. We'll tell you which names are discounting the most right now and what it means for their bottom lines in the long run. Plus, it's been 6 months since Amazon rolled out ads on Prime Video, effectively disrupting the market. Ahead, we'll take a deep dive into what it means for Netflix and the rest of the media landscape. The Exchange is back after this.
This is The Exchange on CNBC.
Fed's Mester says we probably won't get to 2% inflation until 2026. At 1:30 p.m. Eastern Time, we expect comments from ECB's Lagarde, who gives a speech at the 30th Dubrovnik Economic Conference. Fed's Mester says I want to maintain a healthy job market as inflation falls. And Mester says policy is well positioned for risks on both sides.
Welcome back to The Exchange. Chinese automakers are surpassing U.S. manufacturers for the first time last year. According to a new report, Chinese brands sold 13.4 million new cars, while American brands sold nearly 12 million globally. And leading the Chinese sales is Buffett favorite BYD. It's outperforming Ford, Stellantis, and Tesla so far this year. Speaking of EVs, the demand slowdown in general has sparked all kinds of incentives, from price cuts to leasing offers. And my next guest says companies could be paying for those leases down the line. Joining us is Dan Levy, Senior Autos Analyst at Barclays. Dan, how significant are these discounts?
Hi, Kelly. Thank you so much for having me. Yes. What we're noticing is that automakers are trying to push discounts because the EV demand is soft. You saw early on a lot of outright price cuts, a lot of this spurred by Tesla, but I think one of the observations has been that the elasticity of demand is probably not what some were hoping for. And so they're resorting to other ways to discount, and leases are a key way. You get the full $7,500 tax credit. In addition to that, there are more subtle ways to embed discounts. So we are seeing some increased discounts, but it's occurring in more what we'll call subtle ways.
So Tesla, for instance, has a $299 a month lease for a refreshed Model 3. What are some of the
Fed's
other
Mester
competitors
says
offering,
businesses
the
say it
American
is
ones?
harder to raise prices this year.
Yeah, I think the ones that have stuck out to us, we're seeing, for instance, GM, that, some of the deals we were seeing on, for instance, a Blazer EV, where you get somewhere in the $200 range, call it, $250 for a Blazer EV. Lyric, I believe, was $400. And you're seeing this with Ford as well. Rivian is pushing this as well, but those are obviously more expensive. Those are going to be something with at least $600 to $700 per month. But the point is that it is a way to push the volume. And again, fully capitalizing on that $7,500 tax credit.
Yeah. So as you write, we're increasingly concerned about the profitability of these aggressive lease offerings and believe they're effectively delaying EV losses with some of the new schemes. What's the implication for stocks like GM or Tesla?
Well, the implication for Tesla is obviously it's a sign of, soft demand, and the fundamentals are a clear challenge for them right now. What you are seeing is that some of these discounts actually are, in a way, protecting the residuals for the time being, although they pay for it later on. For companies like GM or Ford, even if they are increasing discounts on the EVs, the key thing to remember is that they are still at their core ICE vehicle manufacturers. And so that, yes, even if the EV demand is weak, there is a strong ICE profit stream to support the numbers. And so at least there is the offset from that.
And I mean, you're talking about the legacy automakers discounting or offering incentives that amount to over 25% of list price, whereas Tesla, by comparison, is only 3% for most of the models. Model Y, maybe 13%. But in other words, it's the legacy players who are having a much harder time moving these vehicles.
Dubrovnik Economic Conference.
Well, I think that's the challenge here,
Fed's
right?
Mester says as inflation comes down, both mandates are very important.
Is still the dominant player in the U.S. market. They hold roughly 50% of the U.S. EV market share. I think that the legacy players, Ford, GM, others, are catching up, but it is still a gap. And I think that speaks to the discount gap that we're seeing. The other thing I'll just point out is it tells you the challenges on the cost front. Tesla is able to offer these more affordable offerings because they have a superior cost structure on EVs. Because the legacy automakers are more challenged from a cost standpoint, they have to price higher. And so it limits what pricing they can offer. And that's why they're perhaps at somewhat of a competitive disadvantage for the time being.
Great point. And now imagine on top of this, if we had Chinese EVs in this country to worry about, which still seems like it's a ways down the road. Dan, thanks for your time for now. We appreciate it.
Thank you so much for having me.
Dan Levy with Barclays. Speaking of EVs, now that Elon Musk's pay controversy is probably in the rearview mirror, KKM Financial's Jeff Kilberg has a bullish way to trade Tesla using options. He calls it a high beta stock that offers traders an electrifying opportunity. And to find out what that is, just scan your QR code there or go to cnbc.com/propick. And coming up, it's the first of its kind, a $4 billion next-generation nuclear power plant being built by a company founded by Bill Gates. There you see him at the groundbreaking in Wyoming this week. Later on, we'll speak with the company's CEO about what makes this plant unique and what it means for the energy transition in America. And as we head to break, check out shares of Penn Entertainment, plunging almost 10% as analysts from Truist say a sale of the company is not coming anytime soon, despite calls from an activist investor. Stay with us.
Shortly expecting comments from ECB's Lagarde.
Welcome back to the exchange. Let's get a look at markets as we close out the week. Dow well off its lows of down 341 today. We're only down 89. The S&P still down 7. The Nasdaq up 2. And look at the 10-year Treasury now below 422. A lot of global developments here, but just the low inflation reports this week, including import prices this morning, are pushing that figure lower. Meanwhile, let's talk about Apple, up 8% since Monday, on pace for its 5th positive week in a row, its best streak since November. But this trading action today is especially important as it tries to maintain its place alongside Microsoft as one of the top 2 holdings in the XLK over here, the Tech Spider ETF, ahead of its June rebalance. Now, this shuffle, this rebalance, won't happen until next week, but it's based on the market cap values as of today's close. So this gets really important. Number 1, Microsoft. Number 2, NVIDIA. Number 3, as of today at these numbers, would be Apple. Each fund for the top 2 would be 22, doesn't work there. Each of the top 2 would be 22% of the portfolio. Number 3 stock would be less than 6%, which is currently NVIDIA. It's just behind the top 2. UBS this week, though, says if NVIDIA tops Apple, as it is currently, it would boost the chip maker's weight to 21% in the XLK. So the fund would have to buy more than $10 billion worth of NVIDIA shares as early as next week and perhaps sell some Apple. And for context, that's about a fifth of last Friday's total trading volume for NVIDIA. So Apple's weight could drop to just 4.5%. Shout out to our CNBC Pro colleague Jesse Pound for crunching all of these numbers. If your head is spinning, but you want to get the full story, head on over to CNBC.com. And we'll get to Tyler Matheson for the CNBC News Update. Tyler?
My head is spinning. Meantime, conspiracy theorist Alex Jones' personal assets will be sold. A federal judge ordered the liquidation today to help pay his $1.5 billion debt for his false claims that the Sandy Hook Elementary School shooting was a hoax. The judge has yet to decide on whether InfoWars' parent company should also be liquidated. Meta will not be launching its AI models in Europe for now, after Irish regulators told it to delay its plan to collect data from Facebook and Instagram users over concerns that the plan would be using the data without consent. Meta says it would be using information that is publicly available and licensed. And while there have been studies that show women go through changes in their brains to prepare them for motherhood, research now shows new dads go through similar changes. A study in Spain showed brain images in the brains in Spain. It shows that in images of 40 fathers found structural changes in areas that play a role in problem solving and emotional processing. Researchers suggest the changes could help new dads bond with their children. The brains in Spain.
It's like brain drain over here.
See you in a bit.
Tyler, thanks. Coming up, one Manhattan-based private equity firm is going across the country to find opportunity in the heart of Silicon Valley. They closed on more than $500 million in loans since January, and we'll get their take on the state of the property market next. And CNBC is celebrating Pride Month throughout June. Here is Bumble Chief People Officer David Ard.
I grew up at a time where we were supposed to feel ashamed. We were not supposed to be who we are. We were not supposed to live our lives openly. There's still a tremendous amount of work to do to, ensure we have equal rights and equal protections. These things have never been more important. And finding a way to celebrate the progress that we've made is extraordinarily important.
Welcome back to The Exchange. My next guest generally operates in New York, but recently set his sights west. His firm just closed a $23 million first mortgage loan for residential condos in the heart of Silicon Valley, making it the company's first Bay Area investment. Let's dive in here with Northwind Group founder Ron Eliasaf. Ron, it's great to have you back on the program.
Thank you, Kelly. Great to be here again.
You know, there's a lot of people from New York who are looking out west for more opportunities, maybe seeing distressed prices and so forth. Is that the story here?
This specific loan is not a distressed deal. It's just providing more time to the borrower to finish selling the units into the market. But in general, we're seeing a wall of distress coming as maturities at the end of this year on many bank loans on what is considered even stable assets like multifamily that are coming due. And, you know, pricing went down as the interest rate stays higher. And there's tremendous issues on balance sheets of traditional lenders, banks, mortgage REITs, and I think it's going to be a very tough year towards the end of the year and early next year as refinances are coming up.
Yeah, which, you know, people say, well, geez, it's tough business to be in. But for you, that could spell opportunity, right?
I think for all private credit managers right now, it's been a very strong year. Private credit funds like ours and others are filling in the gap where many banks have slowed down or completely stopped lending. So we're providing capital and time for what we think is great pricing and valuations for us to come in and provide, you know, short-term solutions until the market finds a new equilibrium.
We've heard that new AI companies or expanding AI companies are driving a wave of interest in real estate in San Francisco and the broader Silicon Valley area. Are you finding that as well?
Definitely. I mean, there's a huge tech growth momentum around AI companies. It's not just the Valley, Silicon Valley. We're seeing it in Houston, Texas. We're seeing it even in Florida. A lot of tech companies are moving there. And it's a great growth engine for the market.
So in Texas and Florida, you're actually seeing a lot of tech or AI-driven, you know, lease deals and that sort of thing.
There's definitely movement of tech companies, entrepreneurs into those areas. It's not the same volume as it is on the West Coast, but it's definitely growing, and I think it's going to be a growth engine for those markets.
Yeah. Let's talk a little bit about what's going on with markets this week. The Fed has decided to hold, but based on the inflation reports and everything else that could be happening, rates might be a little bit lower in the months to come. What impact is that going to have across commercial real estate, do you think?
I think right now the market is pricing accordingly. It seems that September, everybody's betting that September we're going to see the first rate reduction, probably 25 bips. That's a healthy sign. It's not going to be a steep decline, so it's not going to help a lot of projects that, you know, provided loans 3-4 years ago, fixed rate 3%, 3.5%, where cap rates were 4%, and now cap rates are probably 6%, and interest rate is, you know, much higher than that. So it's not going to save projects that are currently impaired, but it's definitely going to help drive the economy into a better place. Yeah. We're seeing a slowdown in transaction volume still, but there's an increase in distressed sales. It's not a wave of distress, but there's definitely more distressed transaction happening where notes and properties are trading at steep discounts for what they traded 4 or 5 years ago.
Yeah. So across the portfolio, you guys have New York City office assets, you have some real estate, you have some kind of mixed use. But in general, have you been interested in projects that would convert, say, B or C level office space into residential? This is just an area a lot of people have found is hard to do in a lucrative way without significant incentives from local governments.
Yeah, we actually have 3 loans right now. One that we closed that is a conversion of an office to resi rental, and 2 that are currently under term sheet for one office building in Manhattan and one office building in Philadelphia that both will be converted to residential. So it's definitely an asset type we're focused on, and it makes sense as these B-class properties are finding it tough to find tenants. And in general, most of our loans are on residential properties, over 90%. But office to resi, we consider our residential play.
Why do you think it's still, so it sounds like you're doing these projects just, you know, at the economics at face value without necessarily needing big tax incentives or anything like that?
Correct. Specifically in these 3 transactions, they were purchased in recent time basically a new reduced basis, a great basis for the sponsor who's doing the conversion, and an even better basis for us as a lender. So it makes sense. Without a significant reduction in price, significant tax incentives are needed to make these projects, make sense.
All right, and then again, you're doing more in the Bay Area, and we'll see what's next. Ron, thanks for joining us today. We appreciate it.
Thank you. My pleasure.
Ron Eliasef with Northwind. Coming up, we're closing in on the 2-year anniversary of ad-supported streaming. Oh, yes. And while Netflix upended the original model, it's Amazon that could force big changes to the current streaming landscape. Those details and what it means for both competitors and customers next. As we head to break, here's a look at some of the names hitting new 52-week lows in the market today. A lot of energy companies, APA, SLB, Albemarle, also Warner Brothers Discovery, and Molson Coors. We're back after this.
So EU regulators are to issue charges before summer break, according to sources, and Apple and Meta are set to face these EU charges under new EU tech rules.
Now.
Welcome back. We are just a few days away from one of the biggest advertising events in the world, Cannes Lion, where industry leaders mingle with media execs, celebrities, and influencers in the hopes of securing deals. Deirdre Bosa joins us now with a check on the ad dollar dynamics heading into it. Are you going there, Deirdre?
I am not. I wish I could be in the south of France, Callie, but I will be here in California at least.
Let's make it happen.
Well, you know who will be there? Amazon and a lot of other these brands. But Amazon, of course, already has a massive presence in the digital ad world. But with the launch of Prime Video ads about 6 months ago, it's holding even more sway over the market at large. A journal report this morning pointing to how the e-commerce giant is driving down ad prices for everyone. It cites advertisers and ad buyers that say Netflix, another competitor, could decrease pricing for some brands by as much as 35% per 1,000 views, bringing it closer in line to those lower Prime Video rates. Now, Amazon's Prime flywheel makes it uniquely positioned to impact pricing, even though it's still a relatively new player in the ad space. More than a Netflix and more than some of the other streamers, Amazon is diversified. It has e-commerce, Prime subscriptions, a high-margin cloud computing business, so it can afford to lower ad prices in exchange for more market share where it's already emerged as a giant, challenging that Google-Meta duopoly. But it also comes at a time when inventory is exploding thanks to the shift towards those ad-supported tiers on streaming platforms. It'll hurt the smaller players like Roku that are least diversified. Another dynamic that will play out at Cannes Lion this year, the growing role of influencers. This is a chart from eMarketer. It's quite remarkable. It shows a rise in ad spending on influencer marketing. Advertisers are projected to spend more than $8 billion this year, more than nearly $10 billion next year in this category. So as TV rates come down, we know a lot about that, talk a lot about it, but now potentially connected TV rates as well, given Amazon's aggressive pricing, there could be more opportunity for them.
I hear all about it because my former neighbors are influencers. They are quite successful. They started 3.5 years ago. Costco Mama, you can look them up, and it's amazing. It's amazing how well they're doing. The dynamics have shifted
Are they
completely.
getting more brand deals?
Oh, yes. Oh, yes. Yes, yes, and yes. Constantly. It's astonishing.
Maybe they need to go to Cannes.
That's right. That's where we're gonna send them. Yes, and then we're all gonna go, and we're gonna
they
have
can take us along, right,
yes,
Kelly?
I love it. Deirdre, real quickly before we go, do you think that as we've heard more people talking about how ad dollars are shifting to kind of retail advertising in general, does that at all undermine or threaten the idea that YouTube or other streamers might capture dollars moving from linear TV to those platforms?
I mean, that was the whole idea, right? Is that we thought that the digital model would kind of catch up. But when you have a player like Amazon, and that's sort of the uniqueness of it, is that it has so much room to play around with pricing. We've seen it do so in other industries like grocery or other industries that it's gone into with its own private label brands. It can kind of undercut the competition because it has this high margin cloud computing business that basically funds a lot of the other businesses, especially the newer ones from Amazon. So it's a really interesting dynamic that's emerging, and maybe it's leading to more time that it's going to take for these digital ad dollars to catch up or rise.
Right, exactly. Back to where they once were. Deirdre, thanks very much. Appreciate it. Deirdre Bosa. Coming up, from electricity to solar, AI data centers are expected to spark a surge in power demand, and some companies are ready to go nuclear. We'll talk to the CEO of TerraPower, which just broke ground on its plant this week. The Exchange will be right back.
At 2 p.m. Eastern Time, we expect comments from Feds Goolsbee, who speaks in a fireside chat at the Iowa Farm Bureau Economic Summit. No text is expected, but there will be a Q&A.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
TSLA.com.
Welcome back to The Exchange. Generative AI is shaping up to be one of the most influential technologies of our time, and it comes with a major cost. According to Goldman Sachs, a ChatGPT query requires about 10 times more electricity than a Google search, leading Goldman to forecast an increase in data center power demand of 160% between now and the end of the decade. All of this fueling renewed interest in nuclear energy, with Bill Gates-backed TerraPower breaking ground on their first nuclear plant in Wyoming earlier this week. Joining me now in an exclusive interview is Chris Levesque. He is TerraPower's CEO. Chris, congratulations and welcome.
Thanks a lot, and thanks for having me, Kelly.
A lot of the energy nerds I know are very excited about this project, and they're typically a skeptical bunch. Talk to us about what exactly the difference is with the kind of nuclear project you're pursuing and how you think it might be able to be rolled out more broadly.
Sure. TerraPower's plant, Natrium, is an advanced nuclear reactor. So it's still fission. We're still making heat by breaking uranium atoms like we have done safely for 60 years. But it turns out today's nuclear energy isn't affordable. The plants are just giant. They require huge amounts of concrete and piping. So we needed to move to a new technology. That's why Bill Gates created the company. And turns out we're slated to be America's next reactor because we're so far through the NRC, the Nuclear Regulatory Commission process. So not only is America's next reactor, this plant in Wyoming, it's the first advanced reactor in the free world.
A molten salt mini nuke? Break it down for us.
Sure. Today's plants, which are super safe, are cooled with water. The Natrium plant, Natrium happens to mean sodium in Latin and a few other languages. We're going to cool our reactor with a liquid metal called sodium. Another big difference is we have energy storage, which allows us to boost the output of the plant when wind and solar come and go throughout the day. So, we're big believers in the massive expansion of wind and solar, but Natrium will really complement that expansion by being able to boost its power when the wind and the sun aren't there.
It still seems to me the biggest problem with trying to roll out nuclear more broadly, and of course, as we get more aware of the drawbacks of renewables with the intermittency issue, the idea of rolling out more nuclear power is very attractive, but even this plant's price tag is $4 billion, if I'm not mistaken, with the DOE contributing up to $2 billion of that. I mean, these are just massively, massively expensive.
Yeah, so the original project includes, that you just described, includes more than building the plant. That includes the first-time design
At 2 p.m. Eastern Time, we expect comments from Fed Scoresby, who will speak in a fireside chat at the Iowa Farm Bureau Economic Summit.
It is true, the
No
first plant
text is
will cost
expected,
more,
but there will be a Q&A.
But by the time you get to the fifth or sixth plant, Natrium is going to be very competitive with even natural gas or solar plus batteries. Our private investors wouldn't be moving forward if there wasn't this strong business case.
Yeah. Okay. So by the way, we had the CEO of AES on talking about how they think renewables are the future and that nuclear is not, and the euphoria over this has been, quote unquote, a little overblown. What would you say about that?
I would say because of nuclear's inferior cost story in the past, that's what's led utilities to have this pessimism. But I think more and more you're seeing people who really understand the grid see that even if we have a massive expansion of wind and solar up to something like 70%, you're going to need 20 to 30% nuclear on a carbon-free grid because wind and solar are an intermittent resource. And as you add each increment of wind and solar, we're only at 20-something percent renewables in the U.S. today. Each increment of renewables gets more expensive. And so if you're trying to lower your overall system cost, 20 to 30% nuclear is going to be the way to go. And then again, because Natrium is going to cost about half of what today's nuclear fission technology costs, and it makes more valuable electricity, in fact, because what I told you about, we can boost our power when the wind and the sun aren't there.
Sure.
That's when electrons are most valuable. So we're lower cost and we're higher value.
That's when electrons are most valuable. That is my favorite line so far. Quickly, the election in November, does the outcome of that affect, I mean, if Biden wins, have the Inflation Reduction Act or other things like that supported nuclear rollouts? If Trump wins, is there a risk that these projects go nowhere for a period of time, or would you be looking elsewhere for impact?
Yeah, so it's true. Nuclear energy's often been a partisan choice, but over the last 10 years, Democrats have come out in support of nuclear in addition to Republicans. It's for different reasons. Often Republicans are supporting it for its energy security value, and Democrats are now becoming more and more aware that it is a clean and carbon-free source. So. For about the last 5 or 6 years, we've really enjoyed bipartisan support, and I think we'll have support in either administration.
All right, Chris, thanks for joining us today to tell us more about it. We'll be following with great interest. We appreciate your time. Chris Levesque. That does it for The Exchange, everybody. Power Lunch is next. Stay with us on the other side of this break.
Shortly expecting comments from Fed Scoresby.
Competitive edge.
Welcome to Power Lunch, everybody. Alongside Kelly Evans, I'm Tyler Matheson. Glad you could join us today. Stocks are lower across the board. NASDAQ going back and forth between green and red. And for the week, the Dow is down more than 0.5%. This week, this month, this quarter, the Dow is negative.
But the S&P and the NASDAQ are both higher for all of those time frames. The NASDAQ gaining another 3% this week, driven by Apple and NVIDIA. Both of those stocks are up around 8% since Monday, putting their market caps well above $3 trillion.
But we begin with a couple of controversial figures in the news. Former and maybe future President Trump pitching some novel ideas on taxes, and Elon Musk winning the fight over his pay package, for now at least. We've got Phil LeBeau standing by on Tesla, but let's begin with Emily Wilkins, as today is Donald Trump's 78th birthday. Happy birthday to him. Emily, to you, tell us about what he is thinking about taxes.
Well, Tyler, if Trump wins the White House, and honestly, even if he doesn't, key parts of his 2017 tax law are set to expire next year. And Trump has said he wants to extend those cuts and make them permanent. But he also has some other ideas on ways to raise revenue. At a meeting with House Republicans yesterday, he pitched an all-tariff policy and suggested that it could lead to getting rid of the income tax. Now, let's be clear, a number of economists and tax policy experts were very quick to point out that such a policy would not only shift the tax burden to middle and low income earners, but it would be pretty difficult to implement. Erica York, a senior economist with the Tax Foundation, tweeted that the government raises about $2 trillion annually from personal taxes. Tariffs raise about $80 billion, but then just look at this larger base. All imports total are about $3.4 trillion. That's not that much higher than the tax revenue we get from income tax. And imports, of course, are a much smaller pool than personal income. So it'd be very, very difficult to have tariffs just make up everything we are getting from the income tax. And lawmakers I spoke with said, look, our takeaway is that Trump wants to increase tariffs. He wants to look at decreasing personal taxes, that they kind of don't see this as a sort of a thing that will happen, but a guide to what they might be able to achieve. Trump is also looking at some more corporate cuts. Trump told CEOs yesterday at Business Roundtable that he wants to lower the corporate tax rate again slightly to 20%. It's currently at 21%. Of course, a lot of what Republicans want, they're only going to be able to get done if they take the House and the Senate and the White House this November. And guys, that could potentially happen, but if they don't, they're going to have to really limit some of their ambitions and find the things that can get done in a bipartisan manner.
Yeah, relying on tariffs to fund a X trillion-dollar government seems a little bit impractical, though it was the way we funded the government back in the days of Jefferson and Washington and so forth. Another thought on taxes would be to take away all of the various distinctions about how different types of income are taxed. In other words, capital gains, carried interest, dividends, interest. Some of them are subject to lower rates, some to higher rates. If you tax them all at the same rate, you probably would end up having a lower overall tax rate, wouldn't you, Emily?
That could certainly be the case. I mean, the other thing, of course, that lawmakers are trying to get at, taxes are about incentives. They're about trying to incentivize people to do things or not do things or invest in certain ways or grow certain things. And so I think when you take a look at what lawmakers are trying to figure out here, that's certainly playing into it. You also can't ignore that we are really in campaign season right now. Just the other week, Trump went to Nevada and he rolled out a pitch on not taxing any sort of income and revenue that people might get from tips. And that's very strategic. Nevada is on the map as a swing state for Trump, but also for the Senate. They've got a key Senate race there. If Sam Brown can wind up, the Republican can wind up taking that seat, it could actually flip the Senate into Republican control. And so that particular policy about not taxing tipped wages, it's something they hope appeals to blue collar workers and maybe makes a difference in a state like Nevada.
So I just want to ask folks on the crew here, if we went to tips, would you guys tip me at the end of every show? So I could avoid. I'm getting a no here.
And how much would they tip?
I'm getting a no that they will not tip me.
We could have a little Venmo at the bottom of the box.
Yeah,
if
send
you like
Venmo
this report,
tips
please
to
tip us.
Tyler Matheson. Yeah, it'll work. It works for me.
Tip jar.
Lower tax rate. Tip jar right here on the Power Lunch desk. Emily, thanks.
Let's move along to Elon Musk. Tesla shareholders voting to approve his pay package. It's not in tips. Many said he earned it by delivering on his promise. But can he keep delivering? And how about this big new vision now? Let's bring in Phil LeBeau. Phil?
Well, he thinks he can deliver, Kelly. And that's why you saw vintage Elon Musk yesterday at the annual meeting where he was riffing for more than an hour on his vision of Tesla in the future, humanoid robots, AI, all the advancements that he believes Tesla is on the cusp of achieving. He didn't give a time frame, didn't give any specifics in terms of when we will see actual products roll out.
Fed
that didn't matter to the people who were focused on
was very good.
the fact that he is in charge of Tesla and will remain in charge of Tesla. But if you were an investor and you're looking for something concrete,
Goolsby says
a
if we get a lot
where you
more
can say,
months
okay,
like May's
here's how the
CPI
company is
data,
doing.
we would be
These are
feeling
3
very
dates to
good.
keep in mind, and they're all coming up over the next 6 to 8 weeks. Q2 deliveries on July 2nd. The expectation is not that great at this point. People believe we could actually see another decline. Then you've got Q2 results, which could be challenging in the middle of July, given the slowdown in growth of EVs. And then you've got the robotaxi unveil on August 8th. So what do analysts think about all of Elon's comments yesterday, aside from the hoopla that was out there? Well, Adam Jonas, I think he summed it up the best. He said shareholder votes are important, but they won't get consumers to buy EVs, speaking to the fact that near term, it's the electric vehicle business that is going to drive shares of Tesla. Then you've got Mark Delaney at Goldman Sachs saying we expect weaker market conditions to weigh on earnings in the near to intermediate term. And finally, Dan Levy at Barclays said the focus now shifts to Tesla's strategy pivot as we await Tesla's robo-taxi strategy, where a great deal of questions remain. Elon Musk talked about some of his vision for robo-taxis yesterday. Here's what he had to say.
You can add it to the fleet for a few hours, for a few days, for a few weeks. Whenever you want it back, you can say, come back, and car will come right back. And I'm highly confident that it will far exceed the value, like the revenue made by the owner of the car will far exceed the actual monthly payment. And then Tesla will obviously take a rev share on that, but most of the money will go to the owner of the car. And this is actually going to work. This is what will happen. So I mean, mark my words, this is simply a matter of time.
The question is when? How far in the future is this actually going to take place, according to Elon Musk? As you take a look at shares of Tesla over the last year, and yeah, it's been a challenging year if you're a Tesla investor and you just bought like a year ago or so, you're probably saying, where's the run-up? Where's the advancement here? By the way, Elon Musk, guys, says that he believes the Tesla fleet, because he sees robotaxi as being Tesla having its own fleet, like an Uber fleet, and then Tesla owners supplementing their income by allowing their vehicles to occasionally join the Tesla robotaxi fleet, whether for a few hours, few days. That's how he sees it happening in the future, almost like a mobile Airbnb, if you will.
Yeah, there's a product out there like that now, isn't there, where people rent their own cars out to individuals on a short-term basis?
Turo.
Turo, that's what it is. I didn't want to say the word because I didn't know.
According to a senior U.S. official, China's economic model is increasingly centralized, and the G7 sees changes as unlikely.
The ability of these cars to be fully autonomous drive and ready for anything that occurs on the road in front of them or behind them.
Well, this is where you get into an interesting discussion, Tyler. Right now, there's about 40,000 people every year who were killed in automobile accidents in the United States. There is no doubt that as autonomous drive technology advances, that number should come down. It's not going to get down to zero. So the question will ultimately be, whether it's 5 years from now, 15 years from now, 20 years from now, are we as a society willing to accept, let's say, 4,000 accidents that cause fatalities if the vehicle computer is at fault? Or are we willing to say, or are we going to say, wait a second, that bothers me. There's a computer here and it made a mistake and somebody died. These are the kind of questions that will ultimately need to be worked out by regulators. So Elon Musk has already said, look, the computer is far better than human drivers. There's no discussion there. Even those who are critical of robotaxis agree that computers will be better than humans. The question becomes, will we be able to accept that some computers, we're talking not just about Tesla, but all autonomous drive technology, you're going to see some fatalities. And are we as a society and will regulators be willing to accept it?
It's a really good point, and it, of course, it goes into political discussion. It also is going to bring in the tort bar, the lawyers who will have a big say.
And insurance.
And insurance companies will have a big say in whether and how far and how fast this kind of technology comes online. Phil LeBeau, thank you. Happy Father's Day. Apple and Meta could be the first tech companies to face charges under the EU's new tech rules. Steve Kovac joins us with a look at what this could mean for those companies. Steve, start with Apple, I guess.
Yeah, let's start with Apple because the Financial Times reporting today, the EU has decided Apple is in violation of that new big tech regulations under the law called the Digital Markets Act. Now, we knew this was coming months ago. The EU said it was fielding concerns and looking into whether or not Apple was complying with the DMA. And even though Apple has made many changes for the law, that includes allowing third-party app stores for the first time on the iPhone, it still added new rules and regulations over there in the EU. The big one that people have been wrangling against, it's a 50-cent charge against developers for every download over 1 million from a third-party app store. Now, the Financial Times says the charges against Apple could come in a few weeks, but Apple could still avoid charges if it makes changes soon. And it's already made a number of changes in recent months, kind of in reaction to some of the feedback it's gotten. But if it does happen and the charges do come through, Apple could be fined up to 10% of its global revenue. That is not nothing. And now let's go over to Meta real quick. Meta says it won't be launching its AI chatbot called Meta AI in the EU. It launched a few weeks ago here in the United States. This comes after the Irish privacy regulators requested Meta delay training its AI on user data from the European Union. We saw a similar event here last year when Meta slowed its rollout of the Threads app, that's its Twitter competitor, over in the EU, also over privacy regulation concerns. Ended up launching a few months later, though, last December. But what we're seeing here is these regulations going into full effect over in the EU and really causing some of our tech companies to at least slow down a little bit and take a pause and think about how quickly they put stuff out. And then in Apple's case, whether or not they're actually complying with this really meaty law over there.
Are these cases likely to produce long-running legal fights, or are we talking about solutions that can be brought to the table pretty quickly by some of these tech companies?
It's been more of the latter. So what we've seen Apple do over the last few months after this law went into effect, they've already kind of dialed back some of their more aggressive
says I penciled in 3% for the
longer-term
rate in the latest forecasts,
that I was talking
and I didn't
about. They've
revise my
a number of
SEP
other
forecasts
changes,
after
but they're still
CPI
fighting
data.
some others, and including that big
Mester
ruling
says
that's
risks to
separate but
inflation are to
related
the upside,
to
dual-sided
these EU
for job
regulations,
market.
specifically in music streaming. This was from a complaint that Spotify brought. They're fighting that. They're appealing that decision as well. That was like a $2 billion fine.
All right, Steve, thanks very much.
Thanks,
Appreciate
guys.
it.
Coming up, retail is facing a bit of an arms race. TikTok is cornering the live shopping market. One brand making $1 million in sales during a single live stream last weekend. That success explaining why more and more brands are turning to that platform, even instead of Amazon. We'll discuss the implications next.
Fed Scoresby says in the near to medium term, what will determine whether rates can go back to normal is if inflation is on a path to 2%.
All right, welcome back to Power Lunch, everybody. What you're seeing right now is the moment beauty consumer brand Canvas Beauty made TikTok history, hitting $1 million in sales during a single live session. The TikTok global team celebrating with her as she passes the $1 million mark. Last week, the shoppable live stream on TikTok Shop not only achieved $1 million in sales, but generated 60,000 orders and gained over 25 million views. Wow. Gabby Fonruz, explain this phenomenon to us.
So TikTok is the first company to actually make live shopping work. It's been huge in China for years. In 2023, that market was worth about $647 billion in China. Wow. In the US, $50 billion. So drop in the bucket, not that much. But TikTok has done something that all of these other companies haven't been able to do. Amazon Live has tried shopping, eBay, Curate, the QVC parent company. Everyone has tried live shopping, as well as these like smaller startups, but it hasn't been able to take off. And the reason why it's working so well on TikTok, according to some of the sources that I've spoken to, is because it's fusing social media, entertainment, and shopping. You are on TikTok because you want to look at great videos, you're there for entertainment, and then as you're scrolling, one of your favorite influencers, oh, what's this interesting ice maker? Or what's this interesting beauty brand that I haven't heard of? And then in 2 clicks, it's in your cart and coming to your house. Less friction.
They're like an Instagram Live event, basically. It's not like when I'm scrolling down and I see a sort of static ad for a pair of men's shorts or a pair of shoes or a Movado watch or something like that. This is a program like HSN or QVC, right?
It's exactly like HSN and QVC, except that you can interact too, which is also what's making it so exciting. And it's really landing with the Gen Z consumer, that younger shopper. You have the ability to comment, and oftentimes the creator is going to be responding to your questions in the middle of the stream. Let's say you're shopping for new apparel or a new shirt, and you've got somebody that's showing off this new blouse. And then I can comment and say, can you show that from another angle? How would that work on a size medium or a size 6? So it's a completely different than just an ad. It's an engaging community building kind of experience.
We have a little surprise.
Yeah.
Stormy Steele herself, the Canvas Beauty brand CEO who we just mentioned, is going to join us. Stormy, are you there?
Yes, I'm here. How are you?
Congratulations.
Thank you so much. I really appreciate it.
What was your previous high watermark for sales?
It was honestly on a single TikTok live. I think we set the first record, and it was about $350,000 contributed to the live.
Wow. So how did it work? Like Gabby's describing, were you getting and able to check those messages as they were coming in and kind of show people what they wanted to see in real time?
We were, and just recently we broke our previous record. So just recently we did $1 million in sales in a single live.
In a single thing. How long was this TikTok live event open?
We were on for about 5 hours when
5 hours?
Wow.
Yeah.
Oh, well, we should just keep
marathon.
Power Lunch going for 5 hours and see if we could do it. I mean, that takes a little bit of stamina. So what you sell are, explain what you sell, basically. They're beauty products and fragrances of various sorts, right?
Yeah, so our hero product is called Body Glaze. When we got on TikTok Shop, it was an industry disruptor, and it totally took TikTok Shop by storm, no pun intended. And it just went viral last year in August, and we have been on a high ever since, and the product isn't going anywhere.
It's amazing. Gabby, what do you think? As people see the success, should we expect Amazon and Instagram and all the rest of them to kind of jump in and try to follow suit?
Well, that's why Stormy's product was so successful, is because TikTok has that virality of it. It's something where you're watching a video and communities get behind it, and that's how it's able to grow and scale so fast. So what we're hearing from a lot of these CPG companies is that they would rather, especially newer brands, upstarts such as Stormy's company, they're going to TikTok because you can scale like that. If you're trying to do that on Amazon, it's going to take you far longer. You've got to play the, make an offering to the SEO gods. You got to pay for the boosted search. You're competing against your own manufacturers and 5 other people that might have counterfeits of your product. So it's far more competitive. And so young upstarts, Stormy was able to do this just by herself by opening an account. Yeah. That's huge. And that's where shoppers want those new hot brands. And they're on TikTok.
Who handles sort of your back office affairs, Stormy? In other words, payments and so forth. How does that get done? And I assume that TikTok collects some toll of revenues, right?
So basically, when you have a TikTok shop, all of your transactions are actually done through the TikTok shop and their platform. So all of that is coming through their platform. They have something, very similar to, any other e-commerce brands like a Shopify, etc. But all of that is housed by TikTok once you open your TikTok shop.
Stormy, do you worry they're going to ban TikTok?
Of course, it's always like at the top of mind, and I would hate if they did such a thing because TikTok is one of those platforms. To me, it's for the American dream. Like our story is truly a story of the American dream. You get on social media, you have this vision, you have this dream, you have this platform that actually helps you reach consumers. And it's all based off of your personality, just what you share is truly authentic and it's truly lo-fi and raw. And you can't really get that anywhere else. And I would truly hate to see TikTok go. I think it would crush a lot of people's American dream. And I don't think that's right.
We're showing here a little bit of sort of the moment again. Did you go to a studio to film this? How did this work? Did TikTok help you set this up?
So our very first TikTok live was actually filmed at TikTok Studios. That's when we set a record of 350,000. And then just recently we broke that record by doing 1 million. And we did that here in Alabama at our warehouse.
Wow. So that's what, listen, I think I need someone waving that sign behind me, a little hand, a cheer hand behind me, just to gin up excitement about the show. So then you now could just do this however often you wanted. When do you think you'll do another one?
We have another one planned next month. It's going to be for my birthday sale. So I'm really excited about that. And hopefully we can break our record again.
Wow.
Where do you source your products? Where do they come from?
We make our products in-house in our own facility in Alabama.
Interesting. Wow. Stormy, thanks for being with us. Stormy Steele, appreciate it.
Thank you so much. I really appreciate it.
Keep up the good work. All right. Congratulations.
Gabby, thank you as well.
And Gabby, thank you.
Thank you.
Further ahead, multi-million-dollar coastal homes are falling into the ocean, and it's leading to a staggering drop in home values. When it goes into the ocean, it does tend to affect the value negatively. We'll take a look at the rising risks from rising tides when we return.
Brutal. Totally brutal. Oh, next target right here. Friday grind, baby. Friday grind. Look at that brutal grind. Woo! Q's, baby. What's going on with IWM too? Look at IWM just parked. Oh, just parking it on the weekly trigger. NVDA slowly grinding it up here on news. Slow, lazy day in the market. Slow and steady, baby. Slow and steady. Oh, we don't have Q's up, do we?
to make money.
All right, welcome back to Power Lunch, everybody. Let's check on stocks right now. The industrials are down about 1/3%.
Q's, baby, let's do it.
Much lower earlier in the session. S&P.
There goes the Q's.
Flat, as is NASDAQ, though it is slightly in positive territory.
Up, down, up, baby. Q's might move here. 480 next target.
Hey, Rick.
So right in here is Q's for next target.
This morning, we had University of Michigan sentiment. What was interesting here is not only did confidence drop, but counterintuitively, inflation.
Q's about to explode.
It is a survey, a little more qualitative than some of our data this week, but worth paying attention to. And as for what Tyler pointed out, we're only a couple of basis points lower on the day. It's on the week. Look at a 1 week of 10-year. As it currently sits at 421 yield, it's down 22 basis points on the week. Twos are down 20 basis points on the week. And as you open that chart up towards the end of March for 10s, we haven't seen these closing levels.
Yeah, that's what they're doing, Jason. They're compressing price, bro.
And
that's exactly it, my brother. Compressing price and then big giant moves up.
Just saw on inflation, the Fed can cut rates.
God, CNBS, man. CNBS sucks.
Sales and many.
They're like cheerleaders. It's always after. You know, like everything that they talk about means nothing. It's not relevant to the fucking stock market.
But one thing's for sure.
It's a pump show for like professional pumping.
Definitely eased back, especially on a month-over-month basis. Kelly, back to you.
Rick, thank you. Rick Santelli.
You got it, Jason. That's exactly what they're doing, brother.
60% in 2 years, meanwhile, but that doesn't necessarily translate to utility savings.
Yeah, CNBC is like they're either telling you something that's not new, or it's a place for rich people to beg their ohm.
And so even though nat gas is $100, you have to remember that the fuel cost is only one part of your utility bill. The other side is the thing.
CN bullshit.
All of that costs money to actually get that power to your home. And that's the portion of the bill that the utilities allow to.
What was I just doing?
So you see here we have this graphic. So on that blue line, you can see that.
Oh yeah, I need the footprint.
Have been going higher.
Okay, so I just talked to the guys outside and
various
on
parts
an annual
of the
basis
economy.
from 13.
I measured to see if a pool could go in there.
1642.
I got to see the actual footprint of the pool.
However, if you look at the orange line, that's when you adjust for inflation. So looking at that, it's actually come down a little bit. However, the latest CPI report this week showed that in May, electricity was actually outpacing overall inflation, up 5.9% compared to 3.3% on CPI overall. And that really rarely happens. And part of that is because a lot of the rate hikes were delayed coming out of the pandemic. And then we had that big spike in fuel costs after Russia invaded. And those are all pass-through costs. But the utility doesn't want to give that to you all.
Trying to look to, I can't find an exact answer here from anybody.
What do people say ultimate over the next decade trajectory of electric
specifications?
Given that we're using more devices,
approximate setup size, that ain't gonna fly.
High demand installations, the data centers and so on. Given
I bet you it's an extra 2 feet all the way around, or at least a foot.
So and
manual.
Going to be able to keep up with demand, or are they going to have to price their product much higher?
Well, I think one thing is that the portion of your wallet, the spend towards electricity is definitely going to go up. If you switch to 2 EVs from 2 ICE cars, your gas costs, of course, go down, but your electricity is going to go up. And so you'll definitely be spending more on that. I think on the actual demand front, I think that is still remains to be seen. I mean, we're now seeing projections of just how much data centers are going to require, and nobody really knows at this point. I think that's one of the hard things. It's really hard to forecast looking beyond 2030. However, I think the base is that we are definitely
gasoline July futures settle at $2.39.
NYMEX
natural gas July futures settle at $2.88, and NYMEX WTI crude July futures settle at $78.45 a barrel. That's down 17 cents or 0.22%.
Simply because they earn a higher rate of return on that new generation. Yes, so it's very confusing to try to, figure out how do you make sure, and how to make sure the costs.
Very complicated industry, obviously, and government regulation of some rates makes it even more complicated. Pippa, thank you. Let's get
Fed
to Brooke
Scoresby
Coombs,
says if we
CNBC
keep
News
making
update.
progress on inflation and the rates can come down, we may
the
avoid a
GOP-controlled
recession.
House today passed the National Defense Authorization Act, which includes provisions targeting abortion and diversity, equity, and inclusion initiatives at the Pentagon. The final bill will require compromise with the Senate, though, and Democrats on the other side of the Capitol called this version dead on arrival. The National Transportation Safety Board opened a probe today into a Southwest Airlines flight on a Boeing 737 MAX in May that experienced a so-called Dutch roll. That's when the tail slides and the plane rocks.
Dutch roll, that sounds like a sex position.
Left and right
According to
have
the
bad
FAA,
economic
there were no
pitches.
injuries and pilots did regain control, but the plane did suffer substantial damage.
It does, doesn't it? The Dutch roll.
Catherine, the Princess of Wales, is set to make a public appearance for the first time since revealing her unspecified cancer diagnosis.
Are you bared up for the close? I'm not.
This new photo.
Nope.
The princess says she's still undergoing treatment.
Ask the wife later what that means. Ask her if she's ever done the Dutch roll.
On Saturday, part of a celebration of the birthday.
David AMS, if he's around, he might know what the Dutch roll is. He looked like he was busy this week, though, because he had some issues with his animal.
Something a lot of us.
We'll have to ask David AMS if he knows what a Dutch roll is.
Illnesses.
Very true. Thank you very much, Bertha. Coming up, while tech has been
Scoresby
soaring,
says manufacturing and
we've seen weakness
agriculture feel
in the
closer
industrial
to the edge of a
We'll discuss
downturn.
that. A few other things. Three Stock Lunch is coming up.
All right, honey, the first thing that you do is you put your arms up perpendicular to your body. I want you to lean to the right a little bit. Stick your leg up backwards. Lean forward. We ain't got a lot of time to go where we're going here. It's trading. We're trading at a high 542.50. SPX in the next 9 sessions or so. You know, this is SPX right here. We're building a base, aren't we? Where are we going? We're going up here, baby. This is where we're going, 54.50. Hold on here. Where's SPX? Boop. So here's the real call wall. It's at 5,500. This is where we're headed. So we're going this way by end of quarter, believe it or not. I don't know if that's guaranteed to happen, but the target here is, let me show you where the actual target is. So the target is right about here. We'll do 2. We'll do a range. Hold on here. We'll do just a range here. Actually, you know what? We'll do it this way. So let's take a peek here in a larger time frame. Here is OPEX next week. OPEX, I think, is what? 20th, maybe? 21st? 21st? I think.
Fed Scoresby says as European countries cut rates, that could push up the dollar.
Let's call it right about there. All right, and then we get end of month. Right about there. Let me go down to the bottom right-hand side screen here with you. So, forget the call wall and the local resistance, okay? This is what I want you to see. I really want you to see this. So, we have a target here for 55.60. Okay, so that's the target. You know, take the money and run Friday was the question. They're basing this right now. It looks like it's being based, right? This doesn't look like distribution at this point. Question was, is it like take profit Friday? It's possible. They take profit today or tomorrow. But the gist here is that we have a long way to go with not a lot of time to get there, right? We don't have a lot of time to get there, do we?
Our trader is Brian.
This is, how many days is this right here? This is May 24th.
Posting their biggest gain in more than 4 years.
And we're June 17th. That's a month, right? We don't have a lot of time to get there, so.
Now, are you a buyer here?
24th here to the 6th.
Recently.
31st, so 6 days right here. 6 days right here, right? 6 days basically right here.
As you said, the AI.
So what is that right there?
Improvements in software adoption. And so look, the stock's
hold on here. Hold on.
3% through last night's close. And with hearing that here's a company that is looking at an annuity stream with its business with subscriptions as an alternative to that AI.
So that's 3.828% in about a week, right?
Servers. I like that, right now, based on what the company's been saying and what their outlook is for the balance of the year.
All right.
That's about a week.
All right, let's move on to Caterpillar. Broader weakness.
So if you don't think we can do that, if you don't think we can go up 3% in a week or 4% in a week, I guarantee you we can.
Tyler, you got it.
So
this is a great name when
the thesis here right now is we have vol suppression, right? Due to the gamma environment that we're in. Now it's loosening up.
Affordable on a forward price to earnings.
But not negatively.
And talking about a stable.
Not in a negative way. So if we hold this zone right here, right? If we just hold this zone.
Interest rates declining as inflation.
Dude, what is going on? If we just hold this zone right here and base this out.
Next year, Caterpillar.
You start getting giant moves. Bam. We're up there like that. Bam. Up there like that. Bam. Reaching up right into OpEx. So.
With China stabilizing at these valuations, that's something that
the thesis here is find a number that you like.
Let's move along to Hasbro shares then, which are higher today on an upgrade.
We had a low back here on the 13th. We had a low again down here this morning at 9:30 and 10:30.
Hasbro, would you buy this?
Load up on some call spreads for whatever you want. End of month, first week of July, in case it takes a while to get there. And the reason that I bring this up to you is because the reason I bring that up to you is because why?
A couple months ago, the company was talking about sales being at risk of decline or not growing as much.
I'm going to show you why right now.
Plus, we know that this type of business is sensitive.
This is the caller right here.
In light of some of the macroeconomic things going on.
Oh, shit, what'd I do?
Consumers have shown to be sensitive on price and maybe in the short term, a little bit more sensitive this year than last year. I got to say, Hasbro being in the consumer product space might be sensitive to those demand shifts. So I would, again, put a sell on this one. Let's take our money and run as we pass go and see how things play out for the company over the balance of the year.
All right. Brian, thanks for your time today. We appreciate it.
So,
all righty, still.
Let me show you this right here. This is a magnet up here, 5565.
Are sinking home.
If they grind us up here into end of quarter, and it's just a straight melt up, and they've already gotten us up this far, and they left a gap behind. And let's just look on the day right now. Let's just look on the daily candle today for SPY, and what are we seeing, right? This is all buying. Look at this. They bought here. They bought here. It's just compressing price down for more buying. So I think I saw Jason say that. Abso-fucking-lutely. Compress price down. Buyers, buyers, buyers. Bulls are winning here. So the target is that 55.60 up here. 55. I said 55.60. It's 55.65. So, if they take the day down, if they take us down today to a lower price, it's just another opportunity to get long. Just another opportunity to get long, to be honest. Put a spread on. But it's funny, too. I was talking to Volwiz last night, and I was talking to Volatility Wiz. He says he might be able to get here on Monday. He might be able to get here on Monday for us to talk about that trade. Hold on here. Chat box. Oh, wrong one. Break time. Be right back. Old man stuff. So Volwiz is saying that he can be here Monday, he thinks, at the end of the day, 4 p.m., maybe 5 p.m., to go over the trade next week, if it even happens. I spoke to him yesterday, and he was of the same thesis as me. We might not even get the trade. It's possible that next week we don't even get the bloodbath on Thursday afternoon. It could just keep melting up and melting up and melting up. The thesis here is, quarterly OPEX, and then end of month. There's a like a tractor beam up there, and it's kind of self-fulfilling at this point, or looks like it is self-fulfilling at this point. So if they do sell this afternoon off, I'm gonna likely put something on for that myself. If I'm looking for one moment of blood as well, I want like one bloodbath day to just get long, nice and heavy. But if I don't get that, man, I'm probably gonna just jump on it at some point to get up there. There's a train heading that way, so.
Hurricane season is upon us, and the forecast is for above-average activity this year, up to 13 hurricanes.
There's another one right here.
Level rise.
Just keep sending it.
Real estate seeing flooding and erosion like never before.
Brent Crude.
And this projection here I want to show you this too. Let me show you one more thing here. So if you guys want to know what the projections are for next week,
on the rising,
if you're looking here at QQQs, this is still valid from last night. So let's take a look at this.
From Dana Point, California.
So this is valid into next week.
Some of the nation's
I want you to see this right here. Like,
is in an increasingly precarious position.
this is still valid, like next week. For OPEX. Kill the fucking VIX. Murder the VIX. This is Friday, Monday, but it's probably like Wednesday or something. Slide this over.
Thanks to sea level rise.
Sometime next week, maybe by Tuesday or Wednesday.
This year,
weekend OPEX 490.
Told the Boston
490.
Price mitigates the risk, and it's not.
OPEX or end of month. I don't know why this says the 17th. That says the 17th, but
if they weren't,
this probably isn't the 17th. It's probably a little compressed.
12 million.
Nantucket real estate agent
probably move that over a little bit.
Seminar for fellow agents to help them
do this just end of month or Wednesday or something like that.
I thought, oh my God, that's not.
But
it's falling.
It's going that way is my point. Okay, so we're gonna start moving up here. I have no bearishness. I just want the pullback. That's my only bearishness. Give me the roll down so I can buy it. I don't think they're gonna let you buy it.
In the past, and the water's subsiding right away. It's not subsiding anymore.
Yes, sir. I know that. The market is closed on Wednesday for Juneteenth. Or Wednesday it is closed. That's the one problem is we got an up market melting up into the end of the month, then we got a day off.
Bought it for.
Looking at zip codes.
Thursday. Thursday is the day for the trade. Thursday is the day for the trade.
At least $1 million. And in just
David is here. David AMS is here. So
are at significant flood risk.
I don't know that I believe that that's going to happen. I'm not on the. I'll take it. I'll take it. If you can give me I think everybody in the market wants a pullback.
I think we just put our head
but I don't think it's going to happen.
Down until the last 10 years, and
I think every pullback there is, it's a pullback that's higher than the last time you were waiting for a pullback.
Reduce their property taxes as both the beach and their values erode. Some homes have been reassessed while their neighbors haven't.
Yeah, I put that in the brief last night about Juneteenth being closed. I think we spoke about it this morning. I live in Detroit. Juneteenth started today.
250,000.
As far as Detroit is concerned.
cliff that is quickly losing.
And it doesn't end until next Sunday.
This has
This is like the biggest holiday of the year in Detroit.
15 feet.
Like the biggest.
These protective tubes.
Huge party.
Seeing this.
Yeah, David, do you know what the Dutch roll is?
On one beach, it's erosion. On another,
We said there's a plane accident. There's a thing called a Dutch roll when your tail fin goes the wrong way and the plane barrel rolls.
Septic. These things are not usable. Once utility wires and septic systems are exposed.
Yaw roll, inertia, coupling, instability. The Dutch roll.
He's owned his home for 42 years.
We also
exactly regex generator.
2.5. And now, I don't know if you could.
My neighbors are all outside today too. Everybody's getting ready for the week ahead.
But you'd have to have some buyer willing.
I looked up, you know what I looked up this morning off your guys' suggestion? As I looked up I don't see anything in the directions either. I looked up a pool.
Meaning taxes for everyone else could then go.
I looked up a, what is this thing called?
The island need the most
An Intex rectangular ultra XTR frame above ground pool
decade ago
with a sand filter pump that I think is, I can't find out.
It's Diana. This was.
I can't figure out if it's
really can't reclaim any value. Have they talked about trying to do things like?
I can't figure out if it's chlorine or salt water based.
Even on the tax revenue that you described, you think towns.
I'm looking at it right now and I can't figure it out. It's got a. Oh, it does. It comes with a saltwater pool chlorine system. 15,000 gallons. That's got to weigh fucking 150,000 pounds or some shit like that, right?
Wow.
That's more than that. 200,000 pounds? 200,000 pounds or something like that? That's fucking insane.
Competition remains strong in the scene.
I'm going to order that pool.
New leaders constantly emerge.
I'm going to order that Intex pool right now. I'm going to put a pool in. It's 32 feet by 16 feet, and it's like 4 feet 4 inches in height. 52 inches in height. It's a rectangle. HYG going down, baby. Spy doesn't care. I just asked the wife. I just got done with the wife. I just talked to the guys outside. I just talked to the guys, and they said I could do pool sand or mason sand or stone dust. If I do stone dust, I have to put a mat down or something. It's good. You like it? Addie has one. Addie, did you do pool sand or stone mason or mason dust? Did you do pool sand or mason dust? You did the sand. Okay. Did you build something around it to hold the sand in, or did the sand wash away, or? Addie's saying it's good. It's a good pool. Can I get like 4 or 5 years out of it? If I could get 4 or 5 years out of it, I'd be happy. Oh, there was a concrete frame. I like that. I like that concrete frame idea. I like that better than ground contact pressure treated wood. You got 3 and sold it with the house. Yeah, I figured the kids will like it, right? Make the kids happy. I don't think that I'd be in it too much, but I think the kids would love it. Probably still there. No shit, huh? God damn. I just talked to the guys. They're going to bring over 10 yards of sand tomorrow, but I don't know what it's going to be. A pool party live stream trading from the pool. Put on a bikini. I'll fucking wear a bikini. Fuck yeah, I would. My dad used to do that shit when I was a kid. Just staring, staring out the back window. Speedos. My dad used to do like my dad has some of my same humor. My humor's kind of dry sometimes. He used to he got a Speedo with a zipper on the front and a big round like zipper ring on it. And people would come over to the house and they'd be like, "What the fuck are you doing, dude?" And be like, "What? I spent a lot of time in Europe. This is how they dress in Europe." He was an asshole. I know. Well, we grew up in just to give you guys some I guess you probably think that's kind of creepy, but we grew up in Boston when I was young, and the beaches in Boston had a boys and a girls end, and people would swim naked at the beach. And then they have nude beaches all over. Or I don't know if they do anymore, but when I was a kid, they had nude beaches everywhere. Martha's Vineyard had a nude beach. There was another one, I think, in the Cape somewhere. And the beaches in Boston had the boys' end. They called it the boys' end and the girls' end. And the women would go swim on one end, and the boys would go swim on another end. It's like leftovers from the old world. So when I was growing up, there was still like first, second generation, lots of immigrants from Europe that were in Boston at that time. And of course, today everything's become way more puritanical. Not everything, but generally speaking. Austin's pretty liberal, right? Austin, I think you can be topless in Austin. I've seen topless people down there in 6th Street before. Texas gets it on too. Yeah. Nowadays it means topless, right? When I was a kid, Boston was pretty liberal with nudity, or at least at the beach. Like if you wear a Speedo and you're not a diver today, people look at you weird, right? I don't know, maybe they don't. But look at us just grinding this out, dude. Just straight grinding melt up. Just straight grinding. Buy the day, sell the night. Buy the day and sell the night, right? That's what the market's doing right now. Yeah, in Vegas. I like the pools in Vegas. I've had great times in Vegas. I'm not a gambler, so when I go to Vegas, I love going to the pools. I enjoy the pools in Vegas. Oh yeah, you're posting them in Discord right now? Let me look at it. Addie, question for you. Do you remember if the base of the pool was wider than the 16 by 32? Do the arms stick out like another foot or two? I want to see the pictures you got. I want to go to the Discord right now. Where are you posting them, Addie? Pro Chat, Pro Trader Pit, the Gen Chat. Let me see. Let me go there right now and check it out. Where are you posting them, Addie? Oh, you sent them to me? Hold on, Addie. All right, Addie. I'm looking at Addie, dude. Why are you sending me naked pictures? Why are you sending me naked pictures, Addie? Are you DMing them to me right now in Discord? Hold on, send nude pool pics. I shouldn't say nude. I'll get in trouble for that. Send pool pics. I always figure anyways, Addie, that anyone that's got a female profile is probably a dude. Don't send any nude. Like, I meant nude pool, not nude you at the pool. Just pool pics. Oh, you sent it to the Risk Off channel? Hold on. I'm going there right now. Hold on. I'm going there right now. Oh, yeah. So it looks like the arms stick out an extra, or the support beams look like they stick out an extra foot. Yeah, that looks like it comes off another foot, doesn't it? And you need them on for support. You look like you use stone dust on yours. That looks like stone dust. That thing looks awesome, Maddie. My kids would freak out in that thing. They would be in it all summer. Yeah, that looks good. That's all they need. Dude, they don't need an in-ground pool. Hell yeah, that's very nice. Very nice, Addie. That looks gang gang. If I was 10 years old, I would be very down for that pool. I'd be very down for that pool. I wouldn't care about any of the, I wouldn't care how I got into it. The kid would not care. Is that the 32 footer or is that the 24 footer? Yeah, it looks like it's pooled. It looks like or not mason sand. I like how it has the curb around it too. There's no dump. No dumping allowed here. We're not dumping. We're grinding. I think I already went over that. We're going up. You might get a dump in futures overnight over the weekend. You got to pull back then. You'll be able to buy that. Yeah, I didn't have the kidney one. I had when I grew up, I had a rectangle in-ground pool. My wife's dad had an in-ground rectangle too. Stop hunting for squeeze. You mean like the murder bot at 4 p.m.? I don't think so today. I think we do the creepy crawl. That's a good question. That's a great question, Ian Trades. I think we grind up, brother. I think we're gonna grind this fucker right up because futures should sell over the weekend slightly. So I think they grind this up for that selling into the weekend. I don't think we get the murder bot today. This sucks, dude. This is horrible price action, by the way, if you don't know. This murders all option chains on the upside. This is like the stuff of nightmare fuel for a day trader that trades options. This is like kryptonite to me. You know the direction we're going. And you cannot trade a single day. You probably couldn't even trade a weekly on this. You probably couldn't even trade a weekly call option on this action. Oh, what? Someone bought 200 Cs for next week? Throw some time on those bad boys. You gotta put some time on those calls. Put a month on those bad boys, 2 months. Yeah, I'm not. I like the spreads. He's saying by the 54.35s. Yeah, the SPX is going to be way better than SPY. Let me get some water here. Way better than SPY. Woo. Dude, Addy, those pictures are great. Excuse me. Now you're getting me all excited here. Yeah, you have a ground cloth down too. And that thing is level too. It looks good. That looks really good. What is that thing? What is that thing? It's a pool. It's awesome. Yeah, I'm going to order one right now. I'm going to order one right now, Addie. I don't know if I should put the closing bell on. This guy's a fucking douche. This guy's a real fucking prick.
The markets are heading. He is with us live on this Friday. Josh, good to have you. Welcome.
Josh is cool. I like him.
In the week that was, we had a Fed meeting.
I like Josh.
Reach a new all-time high.
The host is a fucking douche.
Talking about that tech trade on
Sorry.
Steam. What do you think?
So if this week were a character on Game of Thrones, its name would be Breaker of Narratives, because a lot of things were shattered this week that had started to become this kind of consensus feeling around the marketplace amongst investors. And one of those things is Apple can't grow / innovate. That narrative really has been broken. Because
yeah, it's been broken. I agree with that.
What set the stock on fire once the sell side started to actually explain this the following morning was they basically said, okay, the first round of AI tools and excitement were just based on functionality. The next round will be based on personalization. And that's why this stock went nuts this week, because
yeah, I'm 100% with that.
Personalization,
the Vision Pro and the services and all that stuff, that ain't going to cut it.
Profitably. And that
not for growth, at least, or not for excitement and growth.
For all of the AI-related names, obviously NVIDIA and Apple. Of course, this is the most important thing to the market.
Right? These analysts, I know, I agree.
I'd rather it be the economy, but this is truly what moves the chains.
Analysts.
The expectations of earnings from AI and the multiples we want to pay for AI stocks, that is what's in the driver's seat. And so this week, you got a lot of good news on that front.
I mean, does it then sort of make sense that Tony Pescarello at Goldman is saying, you know, stick with the secular winners because they are the weapon of choice in this market? Along the highest conviction and highest quality names, you're talking about one of them, aren't you?
Yeah, and let me answer your question with a question. What would you prefer? Because if you want to go against the secular winners and you want to do this value,
long the U.S. front end, I'm with that trade too. The whole market's fucking long. The entire fucking market is long right now.
It's not bad data.
Everybody's long.
Pricing to the downside, it's different. Things are different now. And
ass face for AMD. Let's look at it.
Even consumer discretionary names that
it's holding up.
Be reacting to.
It's holding up. They got CNBC or not CNBC. Somebody from. Was it Bank of America was calling for a down move to 150 on AMD?
Growth trend.
Daily triggers rolling down right now on AMD.
Getting at you can.
I like the trade. I like 160 calls.
But you don't have.
I like them as spreads better in case we go down to that 150.
Market this week is.
We're getting a little bit neutral on the daily trigger.
Stake watch, but I do think there's a fear that's going to creep into the market.
I like that idea. I like that idea. I like 160 calls. I like 150 calls for next week too for AMD.
That we're going to start worrying.
Call spreads like 150 to 160. 150 to 170 or something.
Story, so to speak, that has gotten us
something like that.
So I think there's a spectrum.
Are you shitting me? It showed a pool?
I don't think.
Did it really show a pool ad? The fuck?
They get everything right. So they already, I mean, they've been pretty clear they're going to be data dependent. By definition, that
yeah, we've been watching AMD here because we thought it was going to run.
They want to be late.
We thought AMD was going to run to the upside, and then the day that, or the morning that we thought it was going to run,
they're going to be late to
one of the analysts
come next, and they
put a warrant out for doom and gloom on AMD.
So by definition, they'll make a mistake. It's not necessarily a fatal mistake for the bull market. It doesn't have to be that way. Could have a correction if it becomes apparent that stocks are figuring something out before the Fed is. That's certainly possible. We had two of them in calendar 2018. Two of them. You had two.
You know, I would like to see Josh replace Jimmy Choo. If there was a replacement for him, it probably is Josh. Pull back over the weekend. Just erase the last end of the day. That's it. It'll just erase the end of day. 542. 542, 540 max at best. At best. Black Swan event, no. We could get a good correction, though. We can get a great correction at the end of July down into October. Like end of July, August, sometime into September, October, right around there. We could get no Black Swan, but a correction. That'd be the best you'd see. No Black Swans. We are due for a... I'm going to tell you about this Black Swan shit. I'm going to be honest with you guys. I'm going to be honest about Black Swans right now with you, okay? There was a moment a few weeks ago where we could have reversed the market early. There was a possibility of it. It didn't happen. We are targeting 6,000 end of year. So we need to get to certain levels to get to 6,000. Does that make sense? So we need to trade 55s, 5,600. So we have major market inflection points for major market direction. And the way is up. So if the way is up to 6,000, we're going to melt up here to 55, 5,600. At that point, you may have another inflection point where we could get a correction, a pullback of size before we head to 6,000. There's a problem with the Black Swan concept right now, and I want to tell you what it is, okay? I repeat this all the time, and I got to say it to you again. Please listen to this, okay? Pretty please, I'm begging you to listen to this. I'm going to show it to you, okay? I'm just going to show it to you so it'll make sense to you. It's fairly easy to see why you're not going to get, or why you're likely not going to get a Black Swan. It's fairly simple. Let me see here. This one will show it. This one's pretty good. It's not great, but this one's not that great to look at. But it's still. I'll show you another one in a moment. So for right now, I'm going to show you a different one in a moment here, but basically 2008 was a housing cycle, part of the housing cycle. 2001 was part of the housing cycle. We have a mid-cycle slowdown, and then we have a crank that goes into 2026, okay? Now, 2025, it could be as early as 2025 where we start to top. So anywhere from like January of 25 to 2026, we'll have a peak in the housing cycle, okay? These match up to the stock market pretty closely. I'm going to show you the one from 2000 and 2008 here in just a minute. Let me see if I can show you the property cycle from 2001 and 2008. Let's see if I can find it here. Here's I want to show you this one right now too, okay? So here's one from 2000 or the 1991, 1994, right? This is the bump. This is the bump, right? And what happens is what happens is this is we're kind of trading 1995 to 2001 right now. It's a pretty, I've talked about this in the show before, where I think we're in this part of the cycle. You know, you can see that the bubble pops right there. The bubble pops right there in 2008. So that's 2008. That's 2001 right there. The only thing I want to tell you about this is, or the main thing I want to tell you The main thing that I want to tell you here is this. There's a few key points here. Everyone that I know in real estate, I know a lot of people in real estate. I know actual investors, fuck you money millionaires. They all know it's coming. All of them agree with this. Every single one. Not one. I mean, not like half of them, not 30% of them. The group that I'm in says housing is going to burst in 2026. Now, they are on the fence if it happens in 2025 or 2026. Some people are like, nah, January, heading into April of 2025 is going to get, that's when it's going to trigger. So there's some arguments as to when it triggers. There's some idea that it could start in 25, okay? Just get that idea in your head. January to April of 2025, everyone's going to be itchy. When we get into 2026, it's very dangerous. Okay, so let's say we don't pop the bubble in 25. We go to 26, it's going to get very fucking dangerous. Everyone's hoarding cash for real estate. Everyone is. Everyone I know is like cash. Now, I'm going to tell you a few things about the housing market, too. If you just bought a house, I'm going to talk to you about that, too. It's okay if the housing market dips. If you plan on owning your house for 10 years, you're going to be fine. And not only that, when we come into this late cycle of the housing market, housing prices go fucking vertical. And they are right now. They're picking back up again. They went down about 20-30% in hot markets, but they're climbing again. So I'll tell you a few things. Number one, expect a market melt, or expect a market. If we're late cycle our stock market, and if we're late cycle in the housing market, here we'll go back and look at it right now. I'm going to show you guys something right now, okay? If we are actually late cycle, if we are late cycle housing market, hold on here, and we are late cycle stock market, and I know this and you know this. Maybe you don't know this, right? But a professional knows this. An actual professional knows this, that we are late cycle stock market and we are late cycle housing market. We have a year. Well, right now we've got 6 months. We got about a year and a half of it left. About a year and a half of it left. At the most, 6 months to a year and a half left of this cycle, okay? At most. At least 6 months. That's January. A year puts us into January of 2026, okay? If we look back on a similar cycle, I want to show you a similar cycle and what happened in those cycles. It's important for you to understand what is potentially possible. Hang tight here. And I talk about this in the show sometimes, and I don't think people believe me, but I'm going to show you something here, okay? And this is important for, no, wrong screen, bottom right-hand screen. This is important for you to understand. I need you to understand this, okay? Now, we don't have 4 years, do we? We don't have 1995 to 2000, 2001. So they're compressing all of this down right now in about a year and a half. 6 months? 6 months to a year and a half, okay? And I want to show you a few important parts. Okay? At best, or not just at best, there's a few important things to be watching here. We move in a monster fucking fashion to the upside. Do you understand? Monster upside. This is August of 2000, right? September. Yeah, I'm assuming some of you were alive then, or you've seen the videos. CNBC. There was pure fucking pandemonium on the trading floors. CNBC. Like they'd like rip their suits off, their hair was disheveled, and they'd come in and say, Apple's up 5% this morning. Apple's up 10% this morning. Apple's up 15% this morning. What are we encountering right now with NVDA? NVDA is up 12% this morning. It's the same, right? Similar. So where we had Apple, now we've got NVIDIA, the analog of Apple, right? What else can we find out about these moves higher, these crazy ass moves? That as we get closer to the end of the run, things become violent. Super violent. We're talking like peak to trough stuff. Look at this one right here. Let me show you something. Let me explain the craziness of this. Let me visualize the craziness of this. You buy this bottom right here. The move is right here, right? That's 38.15%. 38.15% move up. We come back down. We come back down, right? And we sell 29%. And then the next move up is what? The next move up is what? Let's talk about the insanity of this. The next move up here, 53%. Like, we're just talking like, you're talking about moves that get so crazy that it's like 50%, 20%, 30%, 10%, 60%, 30%. Like, just violence as it goes up. So, how do you trade that? How do you trade that? What is a black swan? What is a black swan here? Is there a black swan here? No. There's no black swan in there. We're above the monthly trigger the whole fucking way. Monthly trigger the whole entire way. We had one pullback to the monthly trigger from 95 to 2000, August, September 2000. One pullback to the monthly, one time. We had a pullback to the monthly recently. So my only point here is things could get crazy to the upside. One of my friends that was a trader in the 1990s said that he bought, if every time there was like a crash, he just bought it and rode it all the way up to the top in 2000. He just added every time, added. And he didn't even look at the stock market. He literally didn't spend any time looking at it. As soon as that trigger happened, like the big giant fucking squeeze, he just like every time it came down 23%, I just loaded the fuck up. Alexa, turn off. So my only point here is, my only point for you here, I think this will be compressed. I think this will be compressed. I think we've already started. I think we started it in October. We're already into it now, 9 months? I think you're going to get about a 5-year period compressed down to 2 or 3, sorry. Now, that's why I say to you guys, this is why I say to you guys, Like when I show you shit like this. But this is why I say to you guys, right? I'm saying 6,000, and there's other people out there saying 7,000, 7,500, 9,000. They're not lying. Is it probable? No. It's not probable that we trade that. But is it possible? 100 fucking %. 100 fucking %. We got two examples of it. We got two modern examples of it happening. 2008 and 2001. We have two examples of it happening. So it's not easy to trade. I would not be surprised to see a pullback into that September, October timeframe. Yes, I agree with that you could have a nice pullback. But this ride is going to get fucking crazy. And it becomes a matter of it's going to become a matter of checking the housing market in the beginning of 2025 and checking the markets in the beginning of 2026. And the reason I'm saying all of this to you now when you're asking about the black swan is if you know this stuff and you know a black swan's already coming, you're not going to try to front run it. We've had an inflection point recently. They didn't front run it. So if everybody knows the black swan is coming, they're going to run this fucker up into it. Some dude on YouTube's not going to, some dude doing black swan events shit on YouTube, or some dude, some fucking guy living in Puerto Rico telling you that shit, or some guy on, I don't know, Business Bullshit Insider. Fuck those guys. They don't know what they're talking about. Everybody else, the rest of the market, is on the trade to the top. They are. They're on the trade to the top. They're going to run this fucker up, and they're going to take it for a ride. And they're going to abuse it like they've always done. They've always abused it. They're always going to abuse it, and they're going to do the same fucking thing. At least into January, March of this upcoming year, and possibly even into 2026. And they're going to run it up. I'm telling you guys. I know the definition of a black swan event. When it happens, when that housing bubble bursts, right? You're going to say that's a black, not you, but somebody else out there's like, there's a black swan event. I want you to know that there's no such thing as a black swan either. I'm going to show you guys that there's no such thing. There's literally no such thing as a black swan. In our market, there is no documented black swan. Not one. Not one. I can map them all out for you. I can map out every single top in our market going back to the beginning. If you look at velocity on quarter, I'm shitting you not. If you look at monthly accumulate, listen to me closely. If you watch monthly and quarterly accumulation on velocity, it marks every single top in our market. Every single top, including COVID. Every single one of them. From the start of our fucking stock market. From day one. They've tracked them all the way since day one. These guys own this market. They lie to us. They lie to you all day long. They lie to you. They know where the tops are in this market. They know where they are. Literally, they know. And they deleverage before we get there. They do. Okay, so if you have the triggers and velocity at home, okay? If you have the triggers and velocity at home, you can open up the New York average if you want. You can open whatever you like that goes back to the 1800s. Dow Jones Industrial Average, whatever you want. So you can go all the way back to the beginning of time, and you can check monthly and quarterly velocity. And when it maxes out, you can see every top. So whenever we max out on monthly and quarterly velocity, you'll see them begin to roll over before the crash happens, like a month to 3 months before. they begin rolling down from a top, and that is the banks deleveraging a top. So right before the market actually rolls over, they're getting out, and you're the bag holder. We can predict crashes with that tool. We can predict them. We know when they're coming. Within 1 to 3 months, we can tell that we're going to actually have a black swan. Black swans are fake. I'm telling you, they're fake. Now, you don't believe me, you don't have to. I've shown them on the show already. I've marked every single top. I can predict them for you. I'll tell you when we're coming to one. Like when we're actually at a top, a market top, a literal market top, you can predict them. Pretty easy. Like a 6-year-old could predict it. They use this model. This is what they use. This is their fucking model. This is their model. That's what we got. We got their model. Yeah, we can predict pullbacks every day, man. The hourly velocity predicts a pullback every time on intraday trading. Absolutely. You can predict it on daily velocity as well, and for bottoms in particular. We have training videos that explain the entire process to you. Hold on, I'm going to check my email right now, Jason. Which one, Jason? CaptainJimJames or the other one? Yeah, we can predict them. We can predict them. Yes. Yes. I got you, Jason. I'm checking right now, brother. Hold on. I don't see it. Did you do CaptainJimJames at gmail.com? Oh, there you go. Oh, dude, Jason. Hey, Jay. I think someone else read that email for you, brother. Dude, all right. Jason, I'm gonna hook you up today, brother. I got you, my man. I'm gonna hook you up today, man. As soon as the show's over, I'll hook you up. Could I predict? I did predict it. I predicted it on the show. I predicted it on the show. I fucking predicted the top for all the fucking meme stocks in 2021. Ask Horse Liver Fat. I predicted the fucking crash in 2022. I predicted the bottom the day we bottomed on October 12th. I did a video. I did a show here, a live stream. I predicted the exact bottom the morning at 4 a.m. 4 a.m. I said, this is the bottom. I went on Twitter and said, this is the bottom here. As everybody was screaming that we were going to crash lower. We can predict the bottoms and the tops every time. Every single time. Not once, not twice, not 3 out of 10. Every single time. I went on a fucking rampage that day. October 12th, right? I went on a fucking meltdown rampage that morning. Like literally like screaming and yelling. I was like, this is the fucking bottom today, right now. It's fairly simple. Fairly simple. You guys got to get them for yourself, and you can look on your own and you can see it clear as day. Clear as fucking day. Too fucking funny. We're trying to start a fund right now. We got developers right now. So you guys want to hear some cool shit? So our developers are working on our new website so that we can do prop trading, and then from there we're going to make an application to become a fund. That's the 2 steps. So we're 2 steps away from that. I had a meeting about becoming a hedge fund 2 days ago. 2 days ago. Yep. Yes, sir. I want to become a hedge fund. Fuck yeah. I would love to become a hedge fund. Not joking about that. That's a serious statement. Sam, I apologize for not calling you, man. Can you just call me at 4 p.m., brother? Call my phone at 4, dude. David AMS is going to help with the prop trading. David AMS is going to be a partner in this. Like, he's involved in part of this. This is real. This is not fucking around. No joking. Ask Bork. Ask Joe Donut. Those guys are in those meetings. Yeah, it would be cool, wouldn't it? Rohit, did they contact you yet? Did Joe or Bork reach out to you, brother? We met about you last night, by the way. Rohit, you're coming on board, brother. I don't know if you are coming on board, but Joe and Bork are reaching out to you if they haven't already. They're going to be reaching out to you to discuss possibilities. Yeah, definitely, dude. They looked at your shit last night, dude. You're gangster. Straight gangster. You are a gangster. You are a legitimate, real deal gangster. No roll. We should squeeze up. Climb the wall of worry into the close today. Climb the wall of worry into the close today. Yeah, you're doing it, dude. Your resume is outstanding, Rohit. It's a really nice resume, man. Your resume is outstanding. I got to be honest with you. We looked at your resume last night. I was like, woof. This guy can back end. We got some cool stuff too, Rohit. We got the I guess we approached a Figma designer. They should be done in the next couple weeks, and then we've got, I think, 2 or 3 back-end guys that work for BlackRock and Citadel. And then we got one guy from BlackRock. There's one other developer. He has a private fund right now, and he's going to work on the back end for us. I think that's the guy we're going to pick. He's got his own fund right now himself, and he's going to build the back end. Not the stuff you're working on. You're going to build the other shit. The subway, right? The pipeline. I can't talk about this stuff on public. I got to keep this stuff on the DL here on the stream. I don't want to say too much publicly. It's better for me not to say anything. You guys are gonna have a blast. Our community, if you're in this community is gonna get fucking really fun really soon. It's gonna become fun. Yeah, you guys are gonna have a blast. The community is gonna the benefits of the community is gonna be insane. So it's gonna be really nice. You guys, I'm gonna tell you some stuff. I don't know if this is gonna happen, but we were looking at like dashboard design, where like let's say David AMS, David AMS trades futures, right? He can put like little I don't know if they're buttons or something, but like workstations on one screen, would show him like the opening and closes of each of Asia, of London, of US. It would show tools specifically designed to trade futures. If you were just a stock trader, we have these tools that'll generate like shorts for you on the market on specific on tickers, dip buys on tickers. It's badass. Like this shit is badass. We were looking at last night, and I was like, dude, it's so fucking dope. I'm sorry, I shouldn't be swearing. It's like depending on what kind of trader you are, you can literally build your own one screen trading station. It's super cool. It's pretty cool. I don't know if we can make it, but we have the guys that can make it now. So you guys have put this together. The community has paid for all of this. So we're going to invest in the development and get this thing made. That's this vision that we have made. We've invested a ton of money in other developers, and they haven't done it. They haven't been able to make what we wanted to make. They're like learning as they go. They're not in the market. They don't have finance degrees, high math degrees. So we need those people to help us build this stuff. We do. I've got a Figma. We've got a Figma designer for the front end. Then we have a front end developer. Then we have a back end developer, and then we got a pipeline developer. We think we have one. We hope it's Rowit, or I don't know if it's going to be Rowit, but we think he's got a spot in this for sure. His resume is fucking pimp. It's really good. He's a badass. He's badass. Yeah, I shouldn't do that. I shouldn't be talking about this stuff. It's better to just produce it and then just show it to you than talk about it on public. It's better to keep it quiet for now. It's better to just be hush hush. You guys want that close? You guys want that bloodbath into the close so bad? I know you do. I can tell. I know you guys want that bloodbath into the bell, don't you? Just last few minutes, you just want that big red bar down at 4 p.m. That big sell at 4:01. Just big red, giant red bars like they did me wrong yesterday on. Just. You guys ready for it? Let's watch it as we close out the day. Okay, expectations in the next week. Just before we go, okay? Just before we go. Expectations in the next week. You ready? 55.60. Into end of next week, possibly takes into the end of month, but way up there. 490 on Qs. Get long. And get long any way you can. Wherever you can find a place to jump in long, do it. Or not do it. Not financial advice. That's what I'm doing. That's what I'm doing. I can't tell you what to do. I'm telling you where I think it's going. Now, at the end of each, so what we're in right now is a suppressed volatility regime. So what happens is shit like this. Grind, slam, grind, slam. These are dealers selling into strength right now. So they'll sell into us as we close the day here. And they'll sell the overnights, but they buy all day long too. Buy during the day, sell during the night. What's the alien meme? They only come out at night. It's inside the market brief last night. Time or price. Last night's market brief for SPY and Qs are all still valid today. All still valid for today. All still valid for today. SPX, is you ready? SPX is going to be trading 54.50 early next week. 5,500 by month end. 55.60 by month end. I promise you. No, I can't say that. Can't say I promise you. You get mad at me if we don't go. They'd be like, you said that and we didn't go there, Cap. You're the worst. I hate you, man. 3:41, 19 minutes left. Bears looking for the end of day bloodbath. I know. I did it by watching you, Dad. I have a feeling. I like that too. What did they used to say at Men's Warehouse? That guy was kind of creepy. What did he say? What was the term that he used? He had that voice too that he used. I guarantee it. Is that what he said? I guarantee it. He had something like that. Who keeps saying that? Who keeps spamming the chat? Who keeps spamming that Tesla bullshit? Keep spamming that shit. That's like the second or third time it's been repeated. Don't be spamming my chat. Don't be pushing your ohm for Tesla on the chat. You can say something once if you want, but not over and over and over. Who did that? Someone on YouTube, I think. Who did that? Hold on a second. Who the fuck did that? Who was that? I can't see who it was. Was it Poke the Jukes Box? Who was it? Tesla Jess? Who was it? Oh, that's what it was. You're going to like the way you look. I guarantee it. Was it Turkey McNugget? We're busting Turkey McNuggets balls today? Tessa Bros? You'll like the way you look. I guarantee it. It was a good catchphrase, wasn't it? It's a pretty good catchphrase. I thought it was still a good catchphrase. Did you get? Oh, here we go. Here goes the end of the day. Bears trying to come in, trying to rain on the bull parade the last 20 minutes. I fucking hate these guys right now when they come in and do this shit. Bunch of party poopers. Oh, it's Lord Pente doing it? It's Lord Pente pumping in the chat today? Do you want me to ban Tesla from the chat? Piss off all the Tesla bulls? Oh, that's another good one. That was a great one, huh? I'm Tom Bidet. I'm going to leave the light on for you. Lord Pente is the offender. We need to make a new membership level offender. What? Schwab closed you out? Joe Donut was saying that. Joe Donut said he had that happen to him last week or something. He was pissed off. Yeah, the Motel 6 one was iconic. Absolutely. Passive income, bro. Yeah, Joe Donut had the same complaint. He said the same thing happened to him about a week or two ago. He said he wanted to get off Schwab finally. He's been a Schwab guy for a long, long time. I got trapped into, you know what I got trapped into? Somehow the algorithms on YouTube Shorts got me watching those diamond business guys in New York that do the Rolex watches and the bling shit, gold and all that stuff. Thanks, Knuck and Futz. Appreciate it. If you wanted some weakness, Brad, maybe the 24th. 24th of June, brother. Yeah, you guys have watched. Have you guys gotten in that hole yet? Whatever you do, do not Do not look up like the watch people on YouTube or anything like that, because then they just pile it on you. And they got like necklaces, the handfuls of necklaces, and they're all like talking bro to each other. They're all talking New York, like, hey man, what about my watch over here? And I want like, $30,000 for it. He's like, I can't sell that. I don't get $35,000 for it. I'll take you $15,000 for it, and they're just like Hey, Punch Pill, have a great weekend. You guys all have a great weekend. If you're trading margin, anything can happen. That's a good line. I like that line. If you're trading margin, anything can happen. Yeah, they're all iced out, dude. Those guys have like fucking $200,000-$300,000 on them at all times. I'm like, I wonder what kind of gun they carry. I wonder what kind of fucking heat they're carrying on them. Big old fucking 44 caliber or some shit like that. It's got to be a fucking hand cannon. Rohit, have a great weekend. You guys all have a wonderful, wonderful weekend. Happy Friday to all of you. Please get out of the house. Go do something. What else? If you're African American or you celebrate Juneteenth, I hope you have the time to have some remembrance. If I don't see you next week, if you're an African American member of our community, and I hope you get some time for remembrance, and I hope you get some time with your family and your friends, and you're able to enjoy yourself this week. What else? I'll see you guys next week. I expect big moves to the upside next week. Big moves. Violence to the upside is what I'm expecting. I got no bearishness. That nighttime they're selling, so if you can find a dip to buy, there are better structured trades out there than zero dates right now. Get yourself a call spread if you want. No, not financial advice. Let it run into the end of the month or maybe the first or second week after the quarterly OPEX. Oh, shit, I forgot. Dude, is it Father's Day this weekend? Is it really? I keep forgetting, dude, that it's Father's Day. If you're a dad, or let me start with this. If you're an uncle that had to be a father figure, thank you. If you're a mom and didn't have a husband or a father or a boyfriend around for your children and you had to be dad, thank you. If you're a dad out there that was not allowed to see your children for whatever reason, I don't care. Please stay safe this weekend. Take care of yourself this weekend. If you're a dad not seeing your children, I know that fucking sucks. So please take care of yourself this weekend. These are high holidays for absentee dads. Have a really bad time. Men commit suicide at astronomical levels when they go through family stuff. Please take care of yourself. Reach out to your fellow man this weekend. If you're a dad out there that had the privilege to be with your children growing up, congratulations. You've done well. You've worked hard. You haven't stepped any landmines. Nothing terrible has taken you out of this picture for your children. Congratulations to you for having the chance to be in your children's lives right now, the past, whatever. And I want you to have all of you that fill that role as a dad, to have a wonderful weekend, please. Please, I forgot it was Father's Day, dude. They don't talk shit to me around here. Nobody whispers about anything around here to me.
That's a buy side of 363 million Mag 7 stocks.
Yeah, cheers to the good dads. And I know there are a lot of dads. I have family and friends that are not there or able to be there for their kids. And that shit's terrible, too. I'm not going to leave those guys out either. We're all human here. We're all humans first. And there's a lot of, damage done by dads to kids, right? Dads can be out. I played soccer with my daughter last night, and we were running around at 9, 10 o'clock at night playing soccer last night. And it was fucking awesome. It was fucking awesome. My youngest daughter is athletic, and she's competitive. And she likes to rough and tumble and fight for the ball and win. And we played soccer for 2 hours last night. It was epic. Unreal. Unfucking real. And I had a coach. I posted this last night on FinTwit. I had a coach growing up. His name's Chris Morrill. He became the director of New Hampshire Soccer Association or League years ago, decades ago. He's still alive. He's still alive. I found him last night. I looked him up. I want to reach out to him and say something to him because that man helped me become a better man. My dad was so hard on me when I grew up, right? I got to tell you guys before the show ends, I got to tell you something. My dad was a fucking asshole. He grew up very poor. He was in the military. His dad was an abuser. He didn't have a dad. He didn't know how to be a dad. He's a good man, but didn't know how to be a dad. And he did his best being my father. He did all he could to be a good dad to me. And I appreciate my father more today than I ever have in my entire life because I can see that his intentions were for good for me. He didn't want me to become a fucking criminal. He didn't want me to become an idiot. He didn't want, I could have went down so many dark paths that I had friends go down, and I didn't. And because of my dad. And my mom hated him for how he treated me, but my dad is a man and knew the roads that I could take to be an asshole or a mean person. You know, all the different things that a young boy can become that's monstrous. He was there at every moment to make sure that I never became that guy. And it's important. But even though it's important, I hated him. I hated him when I was a teenager. I hated my dad. And this guy that was my coach knew that my dad was hard on me. Knew that I would, if I got frustrated, if I didn't meet an expectation for my dad, I was in trouble. So if I didn't meet my own expectations, I beat myself up inside. In my brain, I beat myself up. I was the worst person in the world, and it would impact my playing sports. I was a great athlete, and if I started to lose or not meet the standard or someone was better than me or I made a bad play, I would devolve as an athlete. I would begin to make more mistakes. I would lose my drive in a match, in a game. And my coach would literally run with me up the field in practice matches. He would run backwards. And he would talk to me as I would get in that fucked up place in my head. And he would literally talk to me as a coach and say, are you going to do this in everything in your life? Are you going to let this get you down? You will never make it to the next level. It's okay to fail. It's okay that you didn't score a goal. It's okay that the guy took the ball away from you. Get back in the game. You know, is your dad doing that to you? That's what that guy did for me. Kid, Chris Morrill, best coach I ever fucking had in my entire life. And he helped me get over my dad, right? The insecurities I had in my life because of my dad. But my dad didn't know. And now that I'm older, I realize that. My dad was doing the best job that he could. So all you dads out there, all of you, every single one of you, even if you make mistakes, just try to be the best dad that you can, please. Best that you can be, even if you suck at it. Be there. Be present. Be there for your kids. Hang out with your children.
Keep in mind in 5 minutes' time now.
Play soccer with them. Whatever it is they like to do, too. That's the last part of that. Whatever they like, do what they like. Don't do what you like. I tried that. That doesn't work.
After the close.
Your kids like K-pop bands, go to a fucking K-pop concert with them. If your kid likes, I don't know, mac and cheese, eat mac and cheese with them. Do whatever they want. Make them happy. I got to be serious on that. Got to be serious. Whatever your kid's enjoying and into, get involved with it, with what they're doing. I want you to all have a great weekend. You know, any of you that didn't have a dad, I'm sorry. I really am. I empathize with you. I really do. It sucks to not have a dad. It's good to have one. It really is. It really is a good thing to have a father in your life. Mom and a dad, two dads, two moms, whatever it is. It's something about the two people. You have different things from two different people. So even if you're two dads, one acts the mom role, one acts the dad role. You know, my wife does what she does, and I do what I do. Right? Two different people, two different perspectives for a child to get as an influence in their life. It's not just one person. That's right, just good people. I don't care about sex and any of that stuff. Children need different perspectives. You know, there are things that I do that are feminine for my daughters. There's things that my wife does for my daughters that are masculine. So it's like the feminism masculine thing doesn't matter. You just need two people. If you're an uncle or an aunt that's played that role for a child, thank you. Some kids need that. They only have a mom or just have a dad. You got to step in and be like, "How are you doing? What's your mom saying to you today?" Did your mom tell you no? How about I say yes? How about I say yes to you? My wife is so and you know what the weirdest part of that too is, like, we talk about if we had sons, and I guarantee I would treat my sons differently than I treat my daughters. Guaranteed. We treat kids differently. It's weird. It's not it's not good probably, but we do. And we do, people do it. So you know, you need influence, different influences in your life. Like my wife's expectations for my daughters, they're like this fucking high. They're like way up here. And I'm like, you want to have some fun? Let's have fun first. Yeah, nuclear family, it's king. That's a good way to describe it. The nuclear family is king. It really is. It's important. And the more influence you have in that nuclear family, the better usually. Well, not always. Sometimes you can't, right? Sometimes you have extended family that you're like, I can't do it with that guy. But your nuclear family, not your extended, but your nuclear family, it's good to have. I don't know how fucking single people do it. There was I want to tell you guys one last thing. It's the truth. This is the truth. If you're a young father, I'm going to tell you something here, okay? If people tell you that it's always easy, it's not. My wife and I have had times where we didn't love each other. To be honest with you. You know, that's truth.
Can I shake with you, Chloe?
There were times that climb that wall of worry. Climb the wall of worry right now. Climb it. Climb the wall of worry. This is a serious thing for you if you're a young parent. When you're in the heat of raising kids, working your ass off, can't pay the fucking bills, got to rob Peter to pay Paul, child care, $3,000 a week, insurance, $2,000-$3,000 a month, mortgage payment. What's PMI? What's PMI? I'm peeing my pants right now. The stress. If I get laid off and I'm going to lose everything, I got a mortgage, I got kids, I got a wife. All that stress and anger, all that stuff. It's okay. It's normal. But I don't know how single people do it. Like my wife and I at one time did not like each other actively. And I remember one time we were angry at each other and mad at each other and not talking to each other. And I remember telling my wife, I said, I got to tell you something. I was like, I have to tell you something. I can't fucking believe people get a divorce when they're at this point. I couldn't do it. There's no fucking way I would wish a divorce, raising kids on your own, doing it alone. I would stay in the marriage even when it's bad just to raise the kids. I wouldn't wish that hell on anybody. That's hard work, dude. Single parent? Woo! Fucking bravo to anybody that can do that. That is there are a lot of times where we felt like it was like us against the world, right? Like my wife and I, it's like two of us against the world. 2 of us against the entire fucking world. It's like, please don't leave me. I need your help. It's not easy. It's not fucking easy, man. We made it through. We didn't get the divorce. We stayed together. And as we're coming out on the other side, it's better. Things are getting better. I love her now. But man, it's hard, dude. It is fucking hard. I don't know how people. I mean, I understand divorce for some shit, you know, like someone's beating you up or something like that. Fuck yeah, run. But if you have like normal problems, you gotta stay. You gotta stick it out until they go to high school and college. Yeah, it is. It is. It is. If there's not something like functionally wrong. You know, I don't know. I caught him fucking a bunch of other broads, or he's beating me, or all that fucked up shit. As long as it's not some crazy ass. Yeah, like the real fucked up shit. Like you find out, you're like, you know. I don't want to all that nasty shit, some fucked up shit people do.
Is it a record high? That's for the 5th straight.
Yeah, exactly, right? You would. You just tell them. Exactly, Addie. Exactly. All right. So I want you guys to have a wonderful weekend. I'll see you all on Monday. Please get outside, breathe air, and get some vitamin D in your face. You know, I'm not going to make any